What's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Tom Mackenzie.
And I'm Caroline Hepker.
Russia and Ukraine exchanging heavy fire this morning as both sides confronted strikes. Ukraine's air defences worked to protect the capital, Kyiv, from heavy bombardment, while a region on Russia's Black Sea coast also reportedly came under sustained drone attack. The surge in hostilities comes just hours after President Trump struck a positive tone on the prospects for a ceasefire, saying in a social media post that, quote, big progress was being made. Meanwhile, Ukrainian President Zelensky says a proposed US plan has correct points, but sensitive issues still need to be discussed directly with Trump.
Of course, we all continue working with partners, especially the United States, and look for compromises that strengthen but not weaken us.
President Zelensky speaking as Ukrainian and European officials scrambled to draft a counter-offer in the days since the White House Special Envoy Steve Witkoff and his Russian counterpart Kirill Dmitriev hammered out an initial 28-point plan. Bloomberg understands that the result is now a streamlined 19-point plan, which Russian officials have already dismissed as a non-starter.
Now to corporate news. Meta is reportedly in talks to spend billions on Google's AI chips in a sign that Nvidia's semiconductor dominance may be challenged. Shares in Nvidia fell in late trading after the story was reported by the tech outlet The Information. Bloomberg tech analyst Robert Lee says competition is...
Hello everyone, good morning, good afternoon, good evening to all of you. Welcome once again to this week लाइव एनालिसिस स्टार्ट करते हैं आज का सेशन। कल देखो एक क्रूड ऑयल में कल एक पहले सेलिंग का ट्रेड बनाया था, याद होगा, बाइंग का ट्रेड था सॉरी, फिर एक थोड़ा सेलिंग का ट्रेड था और उसके बाद मार्केट ज़्यादा नीचे आया नहीं, मैंने जैसे बताया था ऊपर ब्रेकआउट कर गया, उसके बाद अभी साइडवेज ही चल रहा है। नेचुरल गैस में देखो कल एक सेलिंग का ही ट्रेड था और कोई ट्रेड तो बना नहीं, थोड़ी बहुत सेलिंग आई थी, मार्केट साइडवेज चला गया, बहुत बड़ा गैप डाउन हुआ है, उसी को कंटिन्यू कर रहा है सेल ऑफ को। याद रखना हमने कल जो चार्ट यूज़ किया था वो नेक्स्ट मंथ का किया था, कल फ्यूचर की एक्सपायरी हो गई है, तो अब इस मंथ के चार्ट को यूज़ मत करना, करंट मंथ का जो चार्ट है वही यूज़ करना। तो करंट मंथ का चार्ट देखोगे, ये सेकेंड मंथ का चार्ट है, मीन्स ये जनवरी का चार्ट होगा, हमें अब दिसंबर का चार्ट यूज़ करना है। तो थोड़ा सा कॉन्ट्रैक्ट चेंज हो गया होगा तो ध्यान रखना, कल जो हम चार्ट यूज़ कर रहे थे, यस ठीक है, ये आपका न्यू चार्ट है, करंट मंथ का है। अब मॉर्निंग पे देखोगे गैप अप है, सेल ऑफ आया है, कंटिन्यू कर रहा है, लेट्स सी कितना और मूव करता है इस पर्टिकुलर जोन से। जिन लोगों ने लाइक नहीं किया, डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल, कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ लेना। एंड लेट्स सी, देखते हैं कुछ ट्रेड बनता है तो, एक सेकेंड देना ज़रा। ठीक है, कॉमोडिटी ठीक ही चल रहा है, लॉल ठीक है। लेवल इन नेचुरल गैस इज एक्टिंग क्रेजी, नहीं नॉर्मली चल रहा है, कुछ खास ऐसा तो नहीं हुआ है। कि बैंक निफ्टी निफ्टी को देखोगे पॉजिटिव थे थोड़ा बहुत मॉर्निंग पे, वापस सेलिंग ही आ गई आज देखोगे ना। निफ्टी मॉर्निंग पे ओपन हुआ, हल्का अप साइड पे जाने की कोशिश कर रहा था, कंटिन्यू सेल ऑफ ही चल रहा है। बैंक निफ्टी भी मॉर्निंग पे ओपन होने के बाद एक मोमेंट अप साइड किया, फिर सेलिंग, फिर अप साइड पे सेलिंग, एक रेंज के अंदर ही फंसा हुआ है। मैं निफ्टी को देख रहा हूँ बिकॉज निफ्टी बड़ा इंटरेस्टिंग है अब। कि ये मंथली टाइम फ्रेम पे बेरिश चल रहा है काफ़ी टाइम से, कब गिरेगा वी डोंट नो। कोई ट्रिगर पॉइंट चाहिए, अगर यूएस स्ट्राइक कर देता है वेनेजुएला पे तो एक हैवी इम्पैक्ट हो सकता है इंडियन मार्केट पर भी। ध्यान रखना, दैट विल बी अ मेजर न्यूज़ इन अपकमिंग टाइम व्हेन एवर यूएस विल स्ट्राइक द वेनेजुएला। एंड चांस आर वेरी हाई, जिस तरह से वहाँ पर यूएस फोर्सेस प्रैक्टिस करना स्टार्ट कर दिया है यूएस फोर्सेस ने। ट्रिनिडाद एंड टोबैगो जो नियर बाई है वेनेजुएला का, वहाँ पर यूएस फोर्सेस डिप्लॉय हैं। तो वहाँ पर जो उनका एक स्ट्राइक ग्रुप, कैरियर स्ट्राइक ग्रुप है नेवी का, उन्होंने काफ़ी हैविली वहाँ पर मिलिटराइज कर दिया है जो उनको। कल न्यूज़ भी आई थी, बहुत सारी जो एयरलाइन है उन्होंने अपनी फ़्लाइट वेनेजुएला से और वेनेजुएला तक दोनों ही सस्पेंड कर दी हैं का फॉर अनडेफिनेट टाइम। तो नीड टू सी, कुछ तो होने वाला है। अभी 3 दिन बचे हुए हैं मंथली टाइम फ्रेम की कैंडल क्लोज होने पर, बट फ्यूचर चार्ट देखोगे बिल्कुल एक परफेक्ट डोजी बनता हुआ। यहाँ पर सेलिंग आई थी, गैप अप ओपन हो गया था ना उस दिन। लुक्स लाइक ब्रेकआउट। निफ्टी भी ऐसा लग रहा है शायद थोड़ा सा 25,700, 25,700, 750 तक गिर सकता है ये भी, जिस तरह के इसके सिनेरियो चल रहे हैं। 25,700, 750 के आसपास दिख रहा आता हुआ हायर टाइम फ्रेम पर। और नया सपोर्ट नहीं बनता है तो गिरना चाहिए इसको। और निफ्टी 50 फ्यूचर गैस में फ़िलहाल के लिए तो कोई ऐसा सपोर्ट नियर बाई में है भी नहीं, अनटिल अनलेस कोई नया सपोर्ट क्रिएट नहीं हो जाता। रेजिस्टेंस वही डे हाई पे कल वाला ही था, ये वो ऑलरेडी वहां से सेलिंग में आ गया है, तो वापस ऊपर जाएगा तो देखेंगे, अदरवाइज कांट फाइंड सपोर्ट। क्रूड ऑयल भी देखोगे बिल्कुल साइडवेज हो गया है अभी, नथिंग, नो सच मूव। बाकी अभी 1:30 पे लंदन सेशन ओपन होगा, वी कैन एक्सपेक्ट सम मोमेंटम देयर एज वेल। एंड आज डेटा काफ़ी है, शाम को 6:30 न्यूयॉर्क सेशन की ओपनिंग, 7 बजे यूएस का पीपीआई का डेटा और कोर रिटेल सेल्स का डेटा एंड रिटेल सेल्स का डेटा रहेगा। दैट विल इम्पैक्ट गोल्ड सिल्वर क्रूड भी थोड़ा बहुत इम्पैक्ट करता है। 8 बजे यूएस मार्केट की ओपनिंग एंड देन पेंडिंग होम सेल्स और रिचमंड मैन्युफैक्चरिंग इंडेक्स का डेटा, ये भी मेनली गोल्ड और सिल्वर को इम्पैक्ट करता है। तो काफ़ी डेटा है इवनिंग पे कॉमोडिटी पॉइंट ऑफ व्यू से देखें तो। लग रहा है शायद नेचुरल गैस थोड़ा नीचे ही आना चाहिए अब 395 394 के अप्रॉक्स। ये थोड़ा सा डाउन साइड पर ही एक्सपेक्ट है, ये नेचुरल गैस थोड़ा नीचे आता है तो यहाँ से एक बाइंग का ट्रेड वापस बन सकता है। लोअर एंड पे अभी भी मुझे लग रहा है लिक्विडिटी है पेंडिंग। ऐसा लगा नहीं है कि नीचे लिक्विडिटी ब्रेक हुई है। लोअर एंड से हायर लो हायर टाइम फ्रेम पे अभी भी होल्ड करके बैठा हुआ है प्राइस, ब्रेक नहीं कर रहा है। लोअर लो में जाने की कोशिश जरूर है बट सस्टेन नहीं हो रहा है लोअर लो। लोअर एंड पे अभी भी है, स्ट्रॉन्ग ही लग रहा है सपोर्ट लोअर एंड का। ये सपोर्ट जोन है, यहाँ से एक बाइंग का प्लान रखते हैं। जब तक ब्रेक डाउन नहीं होता अब नीचे 388 के नीचे सस्टेन नहीं करता प्राइस हायर टाइम फ्रेम पे, तब तक इस सपोर्ट को स्ट्रॉन्ग ही मान के चलना। 388 के नीचे अगर हाँ कहीं क्लोजिंग देता है तब फिर थोड़ा सा प्राइस 370 360 के बीच में जा सकता है, वहाँ पर ही भी नेक्स्ट लिक्विडिटी है। एंड अगर ये ब्रेक हुआ तो फिर वो एक बड़ा एम पैटर्न भी बन जाएगा एक्चुअली में। सो नीड टू सी कि हायर टाइम फ्रेम पे जो कैंडल क्लोजिंग होती है वो किस तरह से क्लोज हो रही है, दैट इज़ ऑल्सो इम्पॉर्टेंट। क्योंकि लोअर एंड पे मार्केट जितने बार भी आया है लिक्विडिटी डीप इनसाइड लेके गया है। भी करते रहो गाइस। जिन लोगों ने लाइक नहीं किया, डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल एज वेल। नीचे जोन पे आता है तो यहाँ एक बाइंग का प्लान रखेंगे। सर बड़ा हो रहा है क्या? तीन सौ बयानबे से 394, 392 से 394, गुड लेवल ऑफ बाइंग। ये जो टॉप पे हाई जोन अभी भी है, हायर टाइम फ्रेम पे वो रेजिस्टेंस ही है। 15 मिनट में तो वहाँ पर लो लेवल्स हो नहीं कर रहे हैं। उसको भी मैं लगा देता हूँ, बट वो 15 मिनट के अकॉर्डिंग नहीं है लेवल, ध्यान रखना, बिकॉज वहाँ पर 15 मिनट में लेवल शो ही नहीं कर रहा है। और ऊपर फिर से आता है डे हाई पे तो वहाँ वापस सेल करेंगे, क्योंकि यहाँ पर ऐसे भी ये पहली बार नहीं आ रहा है, मल्टीपल टाइम टेस्टेड लेवल है इवन हायर टाइम फ्रेम पर भी, बट स्टिल रेजिस्टेंस वो भी बना ही हुआ है। तो देखोगे इस पर्टिकुलर जोन पे तो प्राइस एक बार पहले सेलिंग, बहुत पहले 2022 में ही आ गई थी सेलिंग यहाँ से। उसके बाद एक बार रिसेंटली भी आया था प्राइस अराउंड 2025 मार्च में, फिर अभी आया है ये रिसेंट टाइम्स में। 15th ऑफ नवंबर से कंटिन्यू, 14th ऑफ नवंबर, देन 21st ऑफ नवंबर, देन आज 25th ऑफ नवंबर, तो मतलब एक दो तीन चार पाँच, पांचवी बार आया है आज ये इस पर्टिकुलर हाई जोन पे नेचुरल गैस, पांचवी बार, फिफ्थ टाइम। एंड द थिंग इज दैट फर्स्ट टाइम आया था एक लो बना था ये टॉप से, दूसरी बार आया था एक हायर लो बना था, थर्ड टाइम आया था एक और हायर लो बना था, फोर्थ टाइम एक और हायर लो, ये सिक्स टाइम, सॉरी फिफ्थ टाइम, वन टू थ्री फोर फिफ्थ। अब यहाँ से वापस अभी सेलिंग आ रही है जो आ रही है। तो अगर ये ब्रेक करके नहीं जाता है नीचे 388 के नीचे, सस्टेन नहीं करता है, यहीं से रिवर्स करता है बीच में से, तो फिर ये ऊपर के लेवल के ब्रेकआउट होने के चांसेस बढ़ेंगे। अगर ये लास्ट स्विंग के नीचे कहीं ब्रेक कर गया तब फिर ये लेवल कुछ आते हुए दिखेंगे इसमें। हायर टाइम फ्रेम पे देख सकते हो, मैं चार्ट के थ्रू बता रहा हूँ बस। तो नया रेजिस्टेंस क्रिएट ना कर दे इस पर्टिकुलर जोन पे फिर से एक और, क्योंकि फिर उस केस में नीचे बायर्स बहुत ज़्यादा प्रेशर में आ जाएंगे। मॉर्निंग पे ऑलरेडी यहाँ से सेलिंग आ गई है, किसी ने सेल किया था तो ट्रेल करके थोड़ा और एक टारगेट का वेट कर सकते हैं, हाफ प्रॉफिट बुक करके। नहीं किया था बीच में मत एंट्री करना, क्योंकि अब बीच में थोड़ा साइडवे जा सकता है। इंडियन मार्केट भी हो गया है क्लोज। क्रूड ऑयल में देखोगे एक सडन कैंडल गैप अप के बाद बनी है, ओपन इक्वल टू लो, लास्ट टू कैंडल्स ओपन इक्वल टू लो एंड गैप अप। पहली कैंडल की क्लोजिंग के ऊपर गैप अप ओपन है लास्ट कैंडल। और तो काफी नीचे है। देखोगे नीचे सपोर्ट अब मेजर 5100 5080 से 5120 के बीच में कहीं पर बन रहा है। क्रूड का चार्ट ही बड़ा इंटरेस्टिंग है, काफ़ी टाइम से ये हायर टाइम फ्रेम पे साइडवेज बना के बैठे पड़े हैं, इसका पता नहीं क्यों ब्रेकडाउन भी नहीं कर रहे हैं। दैट इज़ वेरी इंटरेस्टिंग बिकॉज जो पैटर्न है उसके अकॉर्डिंग तो बहुत पहले ही इसको ब्रेकडाउन हो जाना चाहिए था। यहाँ पर भी देखोगे पहली बार सपोर्ट पे आया है, एक हाई है, दूसरी बार लोअर हाई, फिर एक और लोअर हाई। लॉजिकली तो नीचे ब्रेकडाउन होना चाहिए, तो नहीं हो रहा है ब्रेकडाउन। यहाँ पर कुछ ऐसा सिनेरियो है कि एक बार आया है हाई, लोअर हाई, इस तरह से चल रहा है प्राइस। लॉजिकली इसमें ब्रेकडाउन होता है बट नहीं हो रहा है। अगर ये डब्ल्यू बना के निकला तो फिर ऊपर जितने भी एस एल है ना सब एक साथ ही जाएंगे। इवन दो अभी ऊपर रेजिस्टेंस है बट लोअर एंड से जस्ट टच करते ही प्राइस लिक्विडिटी लेके निकल जा रहा है, इसका मतलब नीचे बायर तो बैठे हैं। पैटर्न के अकॉर्डिंग तो ब्रेकडाउन होना चाहिए बट स्टिल अगर बायर बैठे हैं इसका मतलब समथिंग इज पीसी। से भी एक बाइंग का प्लान करते हैं, ये भी ठीक ही लग रहा है। सपोर्ट, एक एरिया ऑफ इंटरेस्ट, ये ब्लैक कलर का जो बॉक्स बनाया हुआ है मैंने, इन क्रूड। रेंज जैसी लग रही है मुझे तो क्रूड ऑयल में, कंप्लीट रेंज के अंदर रेंज। पर मेरे को रेजिस्टेंस दिख रहा है 5300 के आसपास, नीचे 5200 टू 210 सपोर्ट है, इसके नीचे 200 के नीचे अगर सस्टेन करता है ब्रेक डाउन करके, तब कहीं एक पॉसिबिलिटी बनेगी कि प्राइस थोड़ा सा और गिर जाए 5000 से लेकर 5050 के आसपास। तो अपर लेवल पे बहुत ही कॉम्पैक्ट रेजिस्टेंस जोन आप कह सकते हो इसको। लोअर एंड पे एक छोटा सा पॉइंट ऑफ इंटरेस्ट, नीचे सपोर्ट स्ट्रांग है। नेचुरल गैस में ध्यान रखना, आप करंट मंथ का फ्यूचर का चार्ट लगा रखा है, ठीक है, तो डोंट बी कंफ्यूज। करंट मंथ फ्यूचर चार्ट इज देयर। ठीक है, याद रखना जो मैंने येलो कलर के बॉक्स बना रखे हैं वो लेवल हैं, उनमें से कहीं पर भी टच करके जा सकता है प्राइस, जरूरी नहीं है कि बिल्कुल बॉटम तक ही आए, टॉप से भी जा सकता है, मिडिल लेवल से भी जा सकता है, बॉटम को भी टच करके जा सकता है किसी भी एरिया पे। दैट होल एरिया इज अ रेजिस्टेंस जोन और अ सपोर्ट जोन, डिपेंड अपॉन कहाँ पर बना है। ऐसे प्रिडिक्ट 16% upside in Indian market by 2026, by 2026।
what's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with a delicate diplomatic situation for President Trump as tensions rise between China and Japan over the status of Taiwan. The president held back-to-back phone calls with the leaders of both countries. China's foreign ministry says the U.S. initiated the hour-long conversation with President Xi Jinping. Bloomberg's Min Lo reports for President Trump the focus was keeping trade talks on track.
Trump's Truth Social post was very much about soybeans, about fentanyl, about trade, and didn't really mention Japan and Taiwan. But the Chinese readout heavily focused on Taiwan and Ukraine. China also mentioning, it wants to see both sides, Ukraine and Russia, keeping to a binding peace agreement. But definitely Japan was a part of it.
And Bloomberg's Min Lo reports President Trump then called Japan's Prime Minister Sanae Takaichi to reaffirm their ties. Any sign the U.S. is siding with Japan on Taiwan could jeopardize the trade truce that saw China suspend many rare earth restrictions while the U.S. lowered fentanyl-related tariffs. President Trump says he plans to visit China in April.
Now, Nathan, to the latest on efforts to end the war in Ukraine. The fighting continued overnight with heavy Russian drone and missile attacks on Kyiv and Ukrainian assaults on southern Russia. The exchanges came after President Trump suggested big progress was being made on a deal to end the fighting following weekend talks in Geneva. White House Press Secretary Caroline Leavitt says he still hopes a deal can get done by Thanksgiving.
He wants to see this killing stop. As for any deadlines, he wants to see this end as soon as possible.
Press Secretary Caroline Leavitt speaking at the White House after Ukraine and European officials presented a counteroffer to the U.S.'s 28-point peace plan. We get more with Bloomberg's Oliver Crook in Brussels.
It appears that now it's this sort of 19-point plan that's sort of the living document that the United States is working from and now is going to have to obviously take that back to the Russian side. The commentary from the Russian side so far is that the 19-point plan is a non-starter. We understand also from Zelensky, who briefed the people of Ukraine last night, as he does every night, that after the Geneva talks that no longer the 28-point plan, many of the right elements have been taken into account into that framework.
And Bloomberg's Oliver Crook reports Army Secretary Dan Driscoll will meet with a Russian delegation in Abu Dhabi today. Ukraine's defense secretary says President Volodymyr Zelensky wants a visit with President Trump in the U.S. by the end of the month.
Well, Karen, the European Union's rejected a U.S. demand to ease its tech regulations in return for lower steel and aluminum tariffs. The EU's antitrust chief says the bloc's digital rulebook is, quote, not up for negotiation. The comments come after Commerce Secretary Howard Lutnick told Bloomberg the Trump administration could relax levies in return for the digital rollback.
So we're talking to him about take your foot off the regulatory statement, build those data centers in America, and in exchange for that, we'll come up with a cool steel and aluminum deal that will all be together.
Commerce Secretary Howard Lutnick spoke yesterday right here on Bloomberg Radio. The Trump administration has long fumed that the EU treats American tech giants unfairly, pointing to both its regulations and large fines the bloc has imposed on firms like Google.
Nathan, the White House says President Trump is still working on a proposal to address a spike in Obamacare health insurance premiums, but the eventual plan may differ significantly from details reported over the weekend. Kate Sullivan covers the White House for Bloomberg.
There really is added pressure on the White House right now to address these rising costs, to bring these costs down, because there's been really a renewed focus on affordability and rising costs. This was a winning message for Democrats recently on Election Day. This is something that the White House knows that they need to really recalibrate their message on. We've heard the president really speak a lot more about affordability recently.
Bloomberg's Kate Sullivan says the eventual proposal is expected to include extended subsidies for those purchasing health insurance on the Affordable Care Act exchanges, with new income limits and a requirement for enrollees to pay a nominal monthly premium.
Turning to the markets now, Karen, futures are lower following yesterday's tech-led rally on Wall Street. The Nasdaq gained 2.7%, but this morning, NVIDIA shares are down more than 3%. For more on what's behind the decline, we're joined by Bloomberg's Lisa Mateo. Lisa.
Hey, Nathan. Yeah, the industry's best-selling accelerator, known as the gold standard for big tech firms, startups, it's in for some competition. Meta reportedly in talks to spend billions on Google's AI chips. They're known as tensor processing units, or TPUs. They're going to be in data centers in 2027. Sources tell the information. Meta also may rent chips from Google's cloud division next year. Now, an agreement would really help establish TPUs as this alternative to NVIDIA chips. Now, shares of Alphabet, they're up about 3%, and that's adding to that recent surge on optimism over its latest Gemini AI model. Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you. Another tech giant is making headlines this morning. Rare layoffs at Apple. The iPhone maker is eliminating dozens of sales roles in a bid to streamline the way it offers products to businesses, schools, and governments. It's unusual for Apple to make cuts across an organization, and the layoffs came as a surprise to those affected. The move is especially notable because revenue has been growing at the fastest clip in years. Apple's on track to generate sales of nearly $140 billion in the December quarter, smashing its previous record.
Well, Karen, the intense selling pressure that's weighed on Bitcoin in recent weeks looks to be easing. It's raising hopes that the token's brutal slide may be near an end. Right now, Bitcoin is trading around $87,000. It's down nearly 2%. Bitcoin is on track for its worst month since 2022.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. Just 2 years ago, the Detroit Pistons had a 28-game losing streak. They just won at Indiana, 122-117. This Pistons team has won 13 games in a row to tie the club record. Monday Night Football at Santa Clara, the 49ers beat Carolina 20-9. Christian McCaffrey, for the first time facing his former team, he had 142 yards and scored a touchdown. Joe Burrow hasn't played since the toe injury suffered in Week 2. He will start for Cincinnati Thursday night in Baltimore. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets Podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets Podcast from Goldman Sachs. Listen now.
This is Tom Keene, inviting you to join me for the Bloomberg Surveillance Podcast. It's about making you smarter each and every business day. We bring you a recap of what happened overnight in Europe and Asia, the day's economic data, and complete coverage of the U.S. market open. We cover stocks, bonds, commodities, currencies, even crypto, all the information you need to excel. Bloomberg Surveillance also brings you the analysis behind the headlines. We do that with lengthy conversations with our expert guests, the smartest names in economics, finance, investment, and international relations. We do all this live each and every weekday, then bring you the best analysis in our daily podcast. Search for Bloomberg Surveillance on YouTube, Apple, Spotify, or anywhere else you listen. On the East Coast, listen at lunch, and on the West Coast when you wake up. That's the Bloomberg Surveillance Podcast with me, Tom Keene, along with Paul Sweeney and Lisa Mateo. Subscribe today wherever you get your podcasts.
Make a bold move. Unleash your inner roar. You know you want more. The new Elevate ADV. Bold move.
हाँ वो निफ्टी के चार्ट में तो है, क्रूड ऑयल में देख लेते हैं। भाई गाइस क्रूड ऑयल को देखोगे स्टिल रेंज के अंदर ही ट्रेड कर रहा है मॉर्निंग से। या तो ये नीचे ही आ जाए 5220 के नीचे, या फिर ऊपर ही जाए 5220 के नीचे। क्लोजिंग नहीं देता है तो नीचे भी नहीं आने वाला है। 5220 ब्रेक डाउन बड़ा इंपॉर्टेंट हो गया, अदरवाइज इट विल बी साइडवेज। सपोर्ट पे ही मल्टीपल टाइम होल्ड करके बैठ गया। 5220 के नीचे है तो 15 मिनट में एटलीस्ट क्लोजिंग दे, तब वापस नीचे ही आ जाएगा डायरेक्टली फ्रॉम दिस पर्टिकुलर जोन। पर एग्जैक्टली थोड़ा सा हिट करने आ जाए 5310 से 5315 से 5325 के बीच में। ऊपर ये रेजिस्टेंस है छोटा सा, नीचे जब तक 5200 के नीचे क्लोजिंग नहीं आती तो गिरेगा भी नहीं। 5220 के नीचे क्लोजिंग 15 मिनट में नेसेसरी है और नीचे जाने के लिए। नीचे ही आ जाए, नीचे एक सपोर्ट जोन है, मोस्ट प्रोबेबली प्राइस फिर शायद उसी लेवल पे आके होल्ड करे। ठीक है, यहाँ पर भी एक सपोर्ट है बट अब मैं उसको कंसिडर नहीं कर रहा हूँ बिकॉज वो अब इस एरिया के आसपास भी सपोर्ट बना दिया इसने। बट इतनी देर कंसोलिडेशन हो गया कि अब या तो ऊपर ही जाएगा नीचे, और नीचे भी सपोर्ट ही है इसके, थोड़ा सा नीचे जाएगा तो सपोर्ट पे आ जाएगा वापस, ऊपर जाता है तो बाइंग पे आ जाएगा। तो बेटर है बीच के लेवल को अवॉइड ही करते हैं, साइड में जाए किसी एक साइड जाने देते हैं, बहुत ही ज़्यादा बड़ा कंसोलिडेशन है। नीचे आएगा तो अब थोड़ा सा लोअर एंड से बाई करेंगे, दैट विल बी ग्रेट एरिया नाउ। को जाने को तो कल ही चला जाना चाहिए था वापस। याद होगा एक को रेजिस्टेंस एरिया था, वहां से थोड़ी बहुत सेलिंग आई थी प्राइस में, उसके बाद से प्राइस फिर थोड़ा बहुत गिरा, लोअर एंड से सपोर्ट लेके फिर ऊपर चला गया था, तो नेक्स्ट रेजिस्टेंस दूर ही था कल भी। ज़्यादा ही साइडवेज हो गया।
What's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with a delicate diplomatic situation for President Trump as tensions rise between China and Japan over Taiwan. The president held back-to-back phone calls with the leaders of both countries. China's foreign ministry says the U.S. initiated the hour-long conversation with President Xi Jinping. Bloomberg's Min Lo reports for President Trump the focus was keeping trade talks on track.
Trump's Truth Social post was very much about soybeans, about fentanyl, about trade, and didn't really mention Japan and Taiwan. But the Chinese readout heavily focused on Taiwan and Ukraine. China also mentioning, it wants to see both sides, Ukraine and Russia, keeping to a binding peace agreement. But definitely Japan was a part of it.
Bloomberg's Min Lo reports President Trump then called Japan's Prime Minister Sanae Takaichi to reaffirm their ties. Any sign the U.S. is siding with Japan on Taiwan could jeopardize the trade truce that saw China suspend many rare earth restrictions while the U.S. lowered fentanyl-related tariffs. President Trump says he plans to visit China in April.
Nathan, now let's get to the latest on efforts to end the war in Ukraine. The fighting continued overnight with heavy Russian drone and missile attacks on Kyiv and Ukrainian assaults on southern Russia. The exchanges came after President Trump suggested big progress was being made on a deal to end the fighting following weekend talks in Geneva. White House Press Secretary Caroline Leavitt says he still hopes a deal can get done by Thanksgiving.
He wants to see this killing stop. As for any deadlines, he wants to see this end as soon as possible.
And Press Secretary Caroline Leavitt speaking at the White House after Ukraine and European officials presented a counter-offer to the U.S.'s 28-point peace plan. Begin more with Bloomberg's Oliver Crook in Brussels.
It appears that now it's this sort of 19-point plan that's sort of the living document that the United States is working from, and now is going to have to obviously take that back to the Russian side. The commentary from the Russian side so far is that the 19-point plan is a non-starter. We understand also from Zelensky, who briefed the people of Ukraine last night, as he does every night, that after the Geneva talks that no longer the 28-point plan, many of the right elements have been taken into account into that framework.
And Bloomberg's Oliver Crook reports Army Secretary Dan Driscoll will meet with a Russian delegation in Abu Dhabi today. Ukraine's defense secretary says President Volodymyr Zelensky wants a visit with President Trump in the U.S. by the end of the month.
Well, Karen, the European Union has rejected a U.S. demand to ease tech regulations in return for lower steel and aluminum tariffs. The EU's antitrust chief says the bloc's digital rulebook is, quote, not up for negotiation. Those comments came after Commerce Secretary Howard Lutnick told Bloomberg the Trump administration could relax levies in return for a digital rollback.
So we're talking to him about take your foot off the regulatory statement, build those data centers in America, and in exchange for that, we'll come up with a cool steel and aluminum deal that will all be together.
Commerce Secretary Howard Lutnick spoke yesterday right here on Bloomberg Radio. The Trump administration has long fumed that the EU treats American tech giants unfairly. It's pointed to both its regulations and large fines the bloc's imposed on firms like Google.
Nathan, the White House says President Trump is still working on a proposal to address a spike in Obamacare health insurance premiums, but the eventual plan may differ significantly from details reported over the weekend. Kate Sullivan covers the White House for Bloomberg.
There really is added pressure on the White House right now to address these rising costs, to bring these costs down. This was a winning message for Democrats recently on Election Day. This is something that the White House knows that they need to really recalibrate their message on. We've heard the president really speak a lot more about affordability recently.
And Bloomberg's Kate Sullivan says the eventual proposal is expected to include extended subsidies for those purchasing health insurance on the Affordable Care Act exchanges, with new income limits and a requirement for enrollees to pay a nominal monthly premium.
Turning to markets now, Karen, futures are lower following yesterday's tech-led rally on Wall Street. The Nasdaq gained 2.7%, but this morning, NVIDIA shares are down nearly 4%. For more on why, let's bring in Bloomberg's Lisa Mateo. Why, Lisa?
All right. Well, it's because the industry's best-selling accelerator, right? It's known as the gold standard for these big tech firms, startups. It's in for some competition. Meta reportedly in talks to spend billions on Google's AI chips. They're known as tensor processing units, or TPUs. They'll be in data centers in 2027. Sources telling the information that Meta also may rent chips from Google's cloud division next year. An agreement, well, that basically helps establish TPUs as an alternative to NVIDIA chips. Now, shares of Alphabet, they're up nearly 4%, and that's adding to this recent surge on optimism over its latest Gemini AI model, and also as the company inches closer to a market value of $4 trillion. Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you. Well, shares of Alibaba also up. They're up more than 4%. The Chinese e-commerce company reported better than expected quarterly revenue growth. The strong set of results likely to encourage investors betting on Alibaba as a leader in artificial intelligence development. The company has accelerated the release of AI models.
And yet another tech giant's making headlines this morning, Karen. Apple is laying people off. The iPhone maker is eliminating dozens of sales roles in a bid to streamline how it offers products to businesses, schools, and governments. Now, it's unusual for Apple to make cuts across an organization, and the layoffs are coming as a surprise to those affected. The move is especially notable because revenue's been growing at Apple at the fastest clip in years. It's on track to generate sales of nearly $140 billion in the December quarter, and that would smash the previous record.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. Just 2 years ago, the Detroit Pistons had a 28-game losing streak. They just won at Indiana, 122-117. This Pistons team has won 13 games in a row to tie the club record. Monday Night Football at Santa Clara, the 49ers beat Carolina 20-9. Christian McCaffrey, for the first time facing his former team, he had 142 yards and scored a touchdown. Joe Burrow hasn't played since the toe injury suffered in Week 2. He will start for Cincinnati Thursday night in Baltimore. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is
LGT's investment solution.
there's a cost coming down in some of those things. It's really not significantly large. We looked through all of the tariff exemptions that came out, and it only really reduced tariffs on an aggregate basis by $7 billion. And we still have nearly $380 billion worth of tariffs in place. So it's really not going to lower overall prices. It's really much more targeted at specific food items and that affordability aspect.
Jeanette Lowe of Strategas, thank you so much. Currently, affordability very much front and focus during the retail season, and we've heard from some retailers about how they're handling it. A real motley picture here. I got to say, Danny, I mean, you look at the performance of these shares.
You're watching the China show.
And it's, again, choose your own adventure. It seems like everything is, as you were saying earlier, with some really delivering and some talking about efficiencies, Dick's potentially closing some Foot Locker stores.
And they're saying that even though they've boosted their outlook for a second quarter, and shares are being punished because everybody's looking for cracks, and the fact that they might need to turn to efficiencies, maybe that's a crack for Dick's Sporting Goods.
And this is the reason why so many people say this idea that AI made us cut jobs isn't really the story. It's actually we're just looking to cut money, to cut costs and preserve our margins. Coming up next, we'll be talking about that with Lauren Murphy of Wells Fargo, as holiday shopping offers a fresh read on the consumer. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
You missed it on Bloomberg Open Interest. Well, if you're worried about inflation, maybe buy gold. If you're worried about tariffs, maybe buy gold. If you're worried that markets are too overvalued with the equity market and with credit spreads incredibly tight, buy gold.
What people are not talking about that they should be talking about is every major currency in the world is collapsing relative to gold. It's been going on for decades.
Don't miss Open Interest live weekdays.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
In case you missed it on Bloomberg Tech.
This is why we need to reindustrialize. This is why we need to have our own rare earth supplies. This is why we need to be able to make our own chips and our own computers and our own products downstream, because it takes away leverage from China. They do have a lot of leverage right now, and so it's very hard to make deals with them. I think it's actually healthy for the U.S.-China relationship for it to not be so dependent on China.
Don't miss Bloomberg Tech, live every weekday.
About 2 hours away from the opening bell, and you can see futures just trying to find some kind of direction after being down as much as 0.2% on the S&P, now essentially flat. Even NASDAQ futures have really retraced. Yesterday was the biggest one-day pop going back 6 weeks, biggest two-day pop for both the S&P and the NASDAQ going back to May. The Russell 2000 turning around up 0.2%, possibly on the heels of some comments from Fed officials yesterday. Take a look at 2s, 10s, and 30s, and you can see in the bond space, particularly on the front end, a bid. And this really comes after we saw San Francisco Fed President Mary Daly in an interview with the Wall Street Journal say she would support a Fed rate cut next month. She is not a voting member, but definitely is considered an ally of Fed Chair Jay Powell. There also has been Chris Waller, who wants to go. Of course, John Williams has also indicated, which is the reason why you are seeing a bid into that space. Here are your morning movers with Vonnie Quinn with 2 hours away from the cash open.
Well, Lisa, one of the narratives that's going to dominate today is TPU versus GPU, right? What are the switching costs? Would companies want to even switch? And that's because Apple is in the news, obviously up 4.25%. Meta is in talks, according to the information, to buy billions of dollars worth of Google's TPUs. Now, it could have gone the other way. It could have gone and bought Nvidia's GPUs. It didn't. And the question is, are TPUs better for inference? Are they more energy efficient? What would it mean down the road? Does it mean the beginning of the end of the Nvidia dominance? It's a big question. So you can see Nvidia down about 3.5% off its lows of the session, AMD down 3.8%, and those Alphabet shares rising. Let's get to some of the retailers now, because we had many report today. One of the better stories, Kohl's up 22%. That stock already up about 12% this year. So the interim CEO, Michael Bender, who was put into the position in May, has really proven himself in the third quarter, definitely stabilizing Kohl's. He has now been named full CEO. He is in that position from now on, and today bears him out. So sales were still down, but only by 1.7%. The estimate was for a decline in the third quarter of 3.9%. And for the full year, the outlook is now comp sales being down 2.5% to 3%, as opposed to down 3% to 4%. So you can see the ranges are a lot better. Different story at Dick's Sporting Goods. So Dick's down about 10% on the year, down another 8.5% today. It did raise its outlook for a second straight quarter, citing sales from existing stores, but consumer sentiment down in November, as we know. And this, how does it, bring Foot Locker into the equation? Well, CNBC is saying that it's actually going to sell some of the existing Foot Locker stores, and so that's one of the parts of this story. Adjusted earnings per share missed at $2.07. The full year forecast did get boosted, though, but obviously investors not buying this particular idiosyncratic retail story.
Thank you so much, Vonnie. There is this question of Abercrombie and Fitch as well. Those shares popping more than 10% after reporting better than expected earnings across the board. We'll get to that in a bit. What you are seeing, though, is, Danny, a sense that their third quarter comp sales came in not exactly well. They came in actually below, but you did see overall net sales increase and a sense going forward, some commentary saying people are really buying more strongly heading into the holidays.
It does contrast with what we've heard elsewhere. To be fair, you've had, Vonnie was just talking about Dick's Sporting Goods trying to close some of their Foot Locker locations. It speaks to this moment where if companies do innovate, and Abercrombie and Fitch has really changed their lineup, or you look at Gap, who's leaned into celebrities and different collaborations, that there is money to be spent. It's a story that's been evolving for the past few years. It's a consumer that has money to spend, but it's choosy, which makes it hard to develop an overall narrative about where we stand.
Yeah, the commentary coming from the C-suite. We achieved 3 years of consecutive quarterly sales growth, delivering record third quarter net sales with 7% growth to last year. The strong finish to back to school and fall seasonal transition very much front and focus. Meanwhile, spending on other things is on our radar this morning. Meta reportedly in talks to use Google's AI chips in data centers. According to the information, the agreement would help establish Google's chips as an alternative to NVIDIA's. The deal hinges on whether the chips demonstrate power, efficiency, and computing muscle. That is what Vonnie was talking about with TPUs and GPUs. Meanwhile, Apollo CEO Mark Rowan saying, quote, people have really just lost their minds when it comes to concerns over private credit. Rowan rejecting the idea that adding private assets to retirement and insurance portfolios can pose a systemic risk. Danny, this is what we've heard from so many of the titans of the private asset management world.
Yeah, because it's really hurt them. I mean, you look at the share price of these publicly traded companies of private credit, private equity, and they have been really damaged by it. I think it's a fair argument to make that it's not systemic. There can't be a run on the bank with these kind of companies. But maybe what some of the wobbles do demonstrate, and and Mark Rowan has talked about this, that we are late cycle dynamics. So much money has been poured into the sector. It's no longer a niche corner of finance because of insurance money, because of the move into wealth, and that money has to be put at work. So has due diligence softened? Has it been moved to the wayside? And does that mean the certain blow-ups or at least stress you've seen just does become more commonplace?
So late cycle in private credit, early cycle in the economy, early cycle in some sort of downturn. I'm getting lost in terms of what inning, what cycle we're in, because I've heard 5 things this morning alone, Danny.
Yeah, maybe we're just, the cycle is dead. Maybe that's the answer, that the cycle doesn't exist.
Well, maybe we'll get some inclination from U.S. economic data. It is getting back on track. Sort of. Delayed September PPI and retail sales due this morning at 8:30 a.m. September PCE now set to be released on December 5th. Meanwhile, a slew of results from the retailers, as we've been talking about, continue to give insight into the U.S. consumer. And sticking with retail, just days away from Black Friday and the unofficial start of the holiday shopping season. Lauren Murphy, Retail Finance Managing Director at Wells Fargo, writing, holiday shelves are full, but prices may rise in 2026. Lauren joins us now for more. Lauren, thank you so much for being with us. We've been trying to get a read on the holiday shopping season this morning in an ad hoc way with all of the earnings reports that have been coming out. Do you have a better sense of exactly any consistent themes running throughout the retailers?
Yeah, so I think the good news is retailers, as I mentioned, are well stocked. The inventory is on the shelves. They're ready to meet their consumer where they're at. I think the constant theme is just this question of consumer sentiment and really what is going to be needed to get that consumer and traffic in the door this holiday.
Lauren, there have been various notes this morning. One from UBS Securities saying that consumers' willingness to spend has waned and they expect a mediocre finish to the U.S. holiday season. BMO on their survey saying that consumers are going to raise their spending on the holidays more moderately than they have in the past. What are you seeing? Are you also seeing that softening around the edges of a consumer spending this holiday season?
Yeah, so Wells Fargo economists are forecasting that holiday sales will be between 3 and 4% increase year over year. However, that is not accounting for inflation. So I do think that consumers are seeking out value, they're seeking out discounts, and they're really mindful of their wallet this holiday.
A lot of what we've heard from the retailers too, Kohl's being one of them, having a really good quarter. Best Buy, another one that's lifted their outlook because everybody's buying the new iPhones. Lauren, if there is this concern, is there a scenario where people have spent all of this money because they're concerned about the future? They're concerned about where prices go, where employment goes. So past strength can't necessarily be indicative of future strength.
That's right? This is still the prime time spending season between November and December. And we think retailers did a really good job trying to keep prices low heading into this holiday, pulling up forward inventory purchases ahead of price increases. I think we're seeing that in the results. We haven't seen the margin hits that we were probably anticipating. However, what we're hearing from our retailers is that may be coming in 26, right? They're trying to hold the line right now. However, the question is if they're going to have to increase prices just because they can't sustain it any further heading into 26.
And this goes to a question a lot of people have been asking. Have we already felt the ramifications from the tariff costs? Have they already been borne by a lot of these companies, or are they yet to come? Are you saying that they're yet to come?
Yeah, I think what we're hearing is there is a lag, right? Where people are, what we're seeing in the margins today are still at that pre-price increase because they pulled forward so much inventory in the first quarter. However, what we're hearing is that we do think that there will be further margin prices heading into Q1, Q2 next year.
Do you have a sense of how much prices will increase? Is it just commensurate with inflation? Is it beyond that? I mean, is there a range that retailers are getting a sense of during the holiday season based on what they can pass along and where now?
Yeah, I think that's a great question. I think what we're seeing, at least in this holiday season, is that there is a mixed bag of discounting strategies, right? And I think how that falls into price increases, where you're seeing retailers capping markdowns on well-selling items that still may have value that the consumer is still going to show up and buy, or they're trying to expand their discounting strategy to make sure that they're getting, that more consumers are getting value for a particular product. So I think it's a mixed bag, and that's more on the margin side. But as you relate to the price increases, I mean, I really think it's going to see where they have to hold the line and making sure that they're hitting their margin forecast because they're all worried about their bottom line P&L.
What about within the subsectors, Lauren? Are there certain parts of retail that are facing price increases more than others?
Yeah, I would say right now, most immediately, we're seeing it in home furniture, home goods, right? I think because there was such a high preponderance of sourcing in China in those industries, the price increases were just too swift, and they're already being passed through. However, I think we're seeing better resiliency in apparel and some specialty items as well. So I do think consumers are going to hopefully benefit from that this holiday season.
Is the home goods also an issue, just the fact that we've seen some of the big box home improvement stores that they continue to lag because of issues within housing? How does that trickle down to a home goods sector, for example?
Yeah, I think furniture is a good example, right? We're seeing a little bit more distress in that sector, knowing that just consumer spending, discretionary home sales, et cetera, right? People aren't going out purchasing houses, therefore they don't need to furnish these new houses. And so I do think that we are seeing the immediate impact of that across the sector.
Lauren Murphy of Wells Fargo, thank you so much for taking the time. And Danny, do you go to the store ever on post-Thanksgiving and celebrate by shopping?
As a creature who has a natural level of built-in anxiety, I can't do it because it skyrockets. I am one of the ones comfortably on my computer, like a cup of hot cocoa on one hand, scrolling through the deals. That's more my speed.
I think that you're more the common denominator than you are the exception at this point, given how many deals and offers I've been getting in my inbox. But it seems like people definitely decked out. Interesting to see some of the retail earnings that have come out this morning. A more positive tone than not, aside from Dick's Sporting Goods, but a sense that if you have a product that people want to buy with efficiencies, a lot of them are resurrecting some of their post-pandemic malaise.
But that's also why I'm kind of scratching my head, looking at, again, the notes that I mentioned from BMO and from UBS Securities saying that this is a consumer whose spending is waning. You're not necessarily seeing that across the board, but maybe it gets back to this issue we've been dealing with. People will say one thing and then they still buy when faced with deals.
Yeah, this has been the conundrum. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Gwynn. Vonnie.
Lisa, thank you. The European Union is rejecting the US's demand to ease tech regulation in return for lower steel tariffs. The EU's antitrust chief says the bloc's digital rulebook is, quote, not up for negotiation. The comments came after Commerce Secretary Howard Lutnick told Bloomberg his administration could relax levies in return for the rollback. President Trump signing an executive order on Monday establishing the, quote, Genesis mission, a federal effort to boost innovation using AI. It aims to coordinate research done by government agencies to integrate AI tools. Officials say the push will accelerate scientific discoveries in engineering, health, sciences, and energy. In sports, the San Francisco 49ers beat the Carolina Panthers on Monday Night Football. 49ers running back Christian McCaffrey had over 140 yards from scrimmage and a touchdown, while the San Francisco defense held Bryce Young and the Panthers to just 9 points. The Niners improved to 8-4 on the season, and Carolina falls to 6-6. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, powering the AI build-out.
We are in the midst of a major technological transformation that sure requires a lot of chips and requires a lot of data and data centers, but also requires a lot of energy.
Samantha Dart of Goldman Sachs joining next. This is Bloomberg Surveillance.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an exhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
LGT's investments.
क्रूड ऑयल को देखो गाइस, सडन मोमेंटम इवन सिंगल कैंडल पे 2% के अराउंड 1.64% डाउन हो गया. डेफिनेटली देयर इज सम न्यूज़ नीड टू सी. काफ़ी देर से कंसोलिडेशन में बैठा हुआ था, जिस तरह का कंसोलिडेशन था एक्सपेक्ट ही था कहीं तो बड़ा मूव करने ही वाला है. फाइनली डाउन साइड को ही किया है. वाव, क्या कैंडल बन रही है. 2% डाउन हो गया, ऑलमोस्ट सिंगल कैंडल. 82 पॉइंट 90 पॉइंट। ठीक है, सपोर्ट है यहाँ पर, थोड़ा सा देखते हैं। न्यूज़ बेस मोमेंटम हुआ तो हो सकता है कंटिन्यू ना फॉल कर जाए। ओके ठीक है, देखो सपोर्ट पे तो पहुँच गया ये, बट थोड़ा सा कॉशियस रहना। ठीक है, यहाँ से जो बाइंग कर रहे हैं, बिकॉज ऐसा ना हो कि न्यूज़ की वजह से गिरता ही रहे। सपोर्ट पे पहुँच गया, छोटे से एसएल के साथ ही बाई में जाना, ज़्यादा रिस्क नहीं लेंगे। ठीक है, किसी न्यूज़ की वजह से मैं वही देख रहा हूँ, यहाँ पर किसी ने बाई किया है तो भाई थोड़ा सा कम ही क्वांटिटी पे रखियो। हो सकता है कहीं प्राइस और डाउन ना चला जाए। नहीं, उसमें होल्ड नहीं कर सकते ना। यूक्रेन वॉर खत्म तो नहीं हो गई?
You see a bid with the Fed very much in focus. San Francisco Fed President Mary Daly endorsing the idea of a December rate cut. Under surveillance this morning, powering the AI build-out.
Everything is about energy, right? Energy and technology are the main drivers of productivity. And we are in the midst of a major technological transformation that sure requires a lot of chips and requires a lot of data and data centers, but also requires a lot of energy. So the technology and the energy are combining.
Here's the latest. Electricity demand set to surge as the race to revolutionize AI calls for more energy. Samantha Dart of Goldman Sachs writing, as AI demands massive power, reliable and ample power supply is likely to be a key factor shaping this race. Samantha joins us now. Sam, thank you so much for being here. Let's start there. The idea of a race against whom? Is this China versus the U.S. and a question of who can get the most computing power and then who can actually power said programming?
Yeah, these are the two front runners. You have today the U.S. holding over 40% of all data centers in the world right here. But China's number two, a little over 20%. And when we look at what's ahead, do we have the capacity to keep this going? I think that's where the differences really start to show, because in the U.S., we're already seeing about 8 out of the 13 power markets, regional markets in the U.S., already strained during peak summertime. Whereas in China, spare capacity is not only much larger, but we estimate it will get even larger over the next 5 years.
So without the U.S. building massive amounts of power in the next 5 years, which is really going to be the time when AI is really ramping up, this really comes down to efficiency and how much more efficient can chips get, which is the reason why everyone's focused so much on Google today and this idea of their TPUs, the idea of a more efficient chip that uses less energy versus NVIDIA's GPUs. How much is that important and a necessary ingredient for the AI race to really continue in the United States?
I think it's key, because otherwise we're just not going to be able to add enough capacity to continue to fuel this. So, for example, already this summer we saw the Eastern Atlantic market in the U.S., the power market, really tight. We saw real-time power prices spiking to reach record highs. We saw capacity auctions reaching record prices. So it's the market positioning not just to price your peak summer price very high, but hey, we're going to need to pay utilities a lot more to build additional capacity in the long run because what we have is just not sufficient. So either we get more efficient or we're going to start to see bottlenecks or at least a slowdown in the addition of data center capacity in the U.S.
How much is there a timing mismatch? Because everybody's running to the gold rush, the field of dreams, build it and they will come, trying to build more energy capacity. Presumably it takes some time for these to get online. Is there a concern that we are ramping up so much with our demand of AI and what we're expecting versus the ability of these projects to come online?
Yeah, it's almost like you have two lines. The data centers are coming in troves, and on the power generation side, it's not that it would normally take so long. You would ordinarily build a natural gas-fired power plant in 2 years if you had the turbine. But we have a 4 to 5 year queue to get a new turbine if you want to start a project today. So you're having to rely on other sources. And what do you have? Well, we're still building a lot of renewables, but they are intermittent, so they are not always there. You need something to back it up. We can't build nuclear because every time we try, it takes many, many more years than planned, and it costs a lot more. So we're sort of running out of options if we don't have that efficiency gain in the very near term. And the result ends up being that our peak summer periods are going to be tighter and tighter in power markets and giving room to price spikes and potentially even outages.
All this conversation also just always leads me to think, what does Europe do? Europe already faced an energy crisis. They're still trying to wean themselves off of Russian energy. Can they compete when even without data center demand, they struggle to get the capacity that they need?
Yeah, I think it's unlikely they can compete. And a lot of that is because they haven't even secured their energy sources. So when we think about who has enough energy to power all of this. And the US has already become an energy net exporter. But if you look at Europe, even though a lot of Europe is not using Russian gas.
Okay, तो यहाँ पर बाइंग का ही ट्रेड है एक्सपेक्टेड क्रूड में. बाइंग ही एक्सपेक्टेड है अनटिल अनलेस प्राइस ब्रेक नहीं कर देता नीचे. We are on support in crude.
By the way, even if you have a generator off the grid, as your capacity grows, if your power demand grows with it, by the time you reach that generator capacity, guess what? You need to connect to the grid eventually anyway.
So what's the trade? I mean, if you're going to advise investors on what to invest in to capitalize on the demand outstripping supply, where do you go?
So there are a couple of things to think about. I think from a U.S. perspective, we think the trade is much more focused on power prices. So one thing that we have raised to clients is, hey, look at the back end of power price curves, because we're going to need to incentivize more build out, and that's going to show up in the back end of the curve. But if you turn around and look at Europe, for example, we were talking about all that vulnerability. You need to import a lot of materials. You don't have rare earths. You don't have this. You don't have that. So we have been recommending that investors in Europe in particular hold commodities in their portfolio as a hedge to all of this going wrong.
Samantha Dart at Goldman Sachs, thank you so much for being with us. Really appreciate it. Sam Dart there, talking about the power demands. And this is going to be an affordability issue. And Danny, I'm so glad that you brought that up, because increasingly there was a chart that I saw that prices for energy have remained steady because gas prices have come down so much that it's offset the increase that so many people have already felt in their electricity bills.
And what happens if that reverses? And how does politics get involved? It's happening in multiple sectors, this idea of crowding out. It's happening in electricity, also in manufacturing. A really great Bloomberg story a couple weeks ago that manufacturing spending, not AI related, has started to trail off. So a lot of the capital, resources, energy increasingly going to the dominance of AI.
Yeah, and to retailers, which is what we've seen this morning, which we'll be talking about coming up as we get some retail sales data from September, as well as, of course, ADP numbers coming out at 8:15. Coming up, Joe Amato of Neuberger Berman, Tracy Chen of Brandywine, Pooja Sriram of Barclays, and Krishna Namamani of Lafayette College. This is Bloomberg Surveillance. Good morning.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla.
The Fed put, which is, as you can see, playing out across risk assets. Taiwan is coming online. We're better by about 1%. Perhaps it does help that we were down over 3% on Friday. Just keep in mind, Japan is shut, so no cash treasuries today. You are getting, of course, a proxy as far as futures go. Call it flat right now. Nikkei futures going into the open today. So we'll talk about Lenovo, a couple of moving averages to watch. You know, we took out several, in fact, to the downside. There's also have been some changes to the index, right? December 8th is the effective date. Some big names in, big names coming out. And just to mention, too, so we have a bond auction today. I think we have about 97 billion renminbi on 3-year bonds being auctioned on Monday. Dollar China 710. And a level to watch coming up on your screens on the Hang Seng Tech. We were on bear market watch on Friday. We did not get to that level. Obviously, the 3% drop puts us very close to this level. We're about 1% there away from 53.46. But looking at the early pricing, it looks like we'll go the opposite way of things. And we'll see, of course. It looks like we are poised for some gains going into the Monday open.
No, that's right. I think there's sort of two themes that our investors are looking at this morning, which are more positive. Firstly, you've got this chance of a Fed hike or cut rather in December. You're back on the table again, so that's being sort of indicated. But then also the other thing that came on Friday was our Bloomberg scoop, which is that essentially, as you mentioned, the U.S. administration could allow NVIDIA to sell H200 chips to China. That's significant because usually we talk about the H20, but the H200 is a more advanced version. So these are both positive factors. But as you said, there's a couple of different levels. There's bear market for the HS Tech. You've got that 50-day moving average target in focus for a couple of others. The 200 moving day average for the China gauge. Macau casinos, we actually could see some strength here because we've seen better visitor arrivals in the latest numbers. Earnings to watch. I mean, I think that Alibaba, Meituan, the big focus for this week, but Want China is the one to watch today. And Want is actually one of the largest rice cracker and flavored drink manufacturers in the whole world. And then, as you mentioned, those index changes, reactions as well.
Yeah, processed foods. There we go. Okay. I don't mean that with any negative connotation.
It kind of came across like you did.
No, I read an article about it over the weekend, which we can get to later, of course.
65% of people's diets. No, the average person's diet in the U.S. is like 65% ultra-processed.
Processed foods. Yeah, which you should pull back a little bit from that statistic. That is not to say, of course, underscores any negativity, just to be clear, of course, ahead of want earnings. But yeah, okay, so two things there, right? So we'll get to the Fed later on with Paul Dobson, of course, will be joining us, right? The put that's coming in across these markets, hence we're better 0.4%. But tell me, the NVIDIA story in our scoop, what do we know exactly? Because this story keeps to be changing on a week-to-week basis.
Yeah, well, I just mentioned it, and I think it's important to make that distinction. Usually we talk about the H20 because that's the chip that has been designed specifically and modified. Yeah, so these are both from the Hopper series. Again, to make that distinction, right now it's the Blackwell architecture that's selling in the US, and we're scaling up or ramping up to Rubin architecture. So Hopper, you're a couple of iterations behind. But H200 is the chip that was designed for the global market. It's got more compute power, more bandwidth, higher memory capacity. So it's all overall just a better functioning chip, essentially. Maybe the Trump administration could look to allow NVIDIA to sell those chips into mainland China. It would be a big win, of course, for NVIDIA. Big win for China as well.
Yeah, and I think the NVIDIA story, to your point, right, the results last week, really they underscore the fact that the assumption for China is a zero business currently. Yeah. Anything on top of that becomes a bonus. How do you think this dovetails into the whole bubble conversation? Is this something that furthers that, or is this something completely almost...
I think it's sort of adjacent, because I think the way we think about the AI bubble conversation is this huge infrastructure build out in the US and then the impact that it's having on memory chip prices, for instance, and we're going to talk to Lenovo about that, for instance.
Absolutely.
I think the China story is still going to be that big question. Even if you relax these restrictions and allow them to sell the H200, do you end up in the same situation as the H20, where sales could restart, but the situation is that Beijing's telling its mainland companies, don't buy them. Do they do the same thing again?
Yeah, okay. Even if they can sell it, doesn't mean they will, and there'll be willing buyers, of course. Okay, yeah, we'll get to the NVIDIA story in a moment, but yeah, the point what Bell was making as well there is because Lenovo's coming online, and the whole conversation around supply constraints, and we don't seem to have enough chips around the AI play, and memory chip prices leading to cost, margin pressure, and how they might be able to weather that better than others. We'll get to that, of course, with the CFO in a moment there. Speaking of earnings, Want China's coming out today. We're almost done with earnings season. It's now the Fed that's back in focus. In fact, we're now looking at a 62% probability that the Fed's going to cut in December. That's a moving target, of course, but the data does suggest that things might not be as rosy as once thought. Paul Dobson with us, our executive editor for Asia markets in Singapore for us. Paul, it looks like some solid footing for risk assets going into the Monday session here today, Paul.
Early doors, but so far so good, I guess, David. We did have a little bit of a wobble in the first hour of trading where Bitcoin took a little bit of a dip and the Kospi went with it, but it's come back up higher again. And I think really the driver is that Fed bets. They're really interesting. My stocks colleagues telling me the moment that the Fed odds dropped below 50% a couple of weeks back, that was really the sort of starting gun for the down leg that we saw in equities in the US and globally as well. So the fact that there's now that hope again that the Fed may cut interest rates in December after all, that seems to be giving the market a little bit more confidence. And the thing is that Williams is important because he's seen as quite close to Jerome Powell in terms of view. So if he's saying he sees the scope for more cuts in the short term, then maybe the Fed governor is with him. And maybe if that's the case, we're around about 6-6 in terms of votes on the FOMC for a cut. Quite a lot of people have said they wouldn't really favour it. But if Powell is one of those 6, then likely he will be able to sway a few more into that camp for another cut in December. If not, then perhaps a dovish meeting that sets the stall for more moves in Q1. And so the market is taking that as a little bit of reassurance.
Reassured, but to what extent, I'm wondering, because if you take a look at options markets, for instance, they're signalling a growing anxiety. And I think as well, just generally, when you've got the market positioning this heavy, is there any sort of temptation now just to lock in the profits?
Well, I mean, if you haven't taken that temptation over the last couple of weeks, what have you been up to, Belle? Because the market has been showing you that there's volatility there and an opportunity to do that. On the flip side, you know, I think there's a very big split at the moment between those that are saying, no, we're going to head for a deeper correction. We saw some comments on that on Friday that were well read among our customers. But then at the same time, you do have people thinking that this is a dip and that there are going to be dip buyers coming back in at some point. The market typically does well at this time of year, right? We usually have that Santa rally. We haven't seen so much of it so far. But so I guess there's scope for us to go either way from here, depending a little bit on, like you said, momentum and positioning and how much that starts to correct. Bitcoin obviously has been having a bearing somehow on the rest of markets recently, so people are still nervously watching what happens in the crypto space. But also, you know, there's that prospect, especially if we firm up our conviction that the Fed will cut after all, that the market could continue to push higher from here.
Yeah, as you say, Bitcoin prices going back down to that 86,000 level. But that was Bloomberg's Paul Dobson there. And let's shift tack now to another major story this morning. And that's Japan planning to deploy missiles to a southern military base that's close to Taiwan. It comes amid tensions between both places. That's over comments Sanae Takaichi made about the island. Let's bring in our China correspondent, Min Min Lo. So, I mean, Min Min, it goes without saying, really, that this is something that is likely to provoke quite a strong reaction from China. What are we hearing?
Yeah, definitely. This is something to watch out for, what China would do, but I suspect they might respond with countermeasures, potentially more military drills close to Japan. But this was the first trip by the Japanese defense minister to Yonaguni, which is an island just east of Taiwan, about 100 kilometers to the east. And actually, on a clear day, you can see Taiwan with your naked eye. So it's a very strategic position. Potentially more military drills close to Japan, but this was the first trip by the Japanese defense minister to Yonaguni, which is an island just east of Taiwan, about 100 kilometers to the east. And actually, on a clear day, you can see Taiwan with your naked eye. So it's a very strategic position. And the Japan defense minister is saying that they are planning to deploy missiles to this area. Now, we all know about Okinawa, which is the larger island further to the east that hosts a U.S. military base. And so far, recently, there has been a U.S. training that moved some of the supplies from Okinawa to Yonaguni. And of course, this is something that shows Japan's concern over, China's aggression, its threats over Taiwan in the region. And it's also part of Japan's military buildup along the southern island chain.
Now, both parties were at the G20 summit, yeah. So did we see anything from that on the topic?
No, Takaichi was clearly sort of keeping a distance from Premier Lee, and it was well telegraphed ahead of time as well. We knew that China did not intend to meet with Takaichi. Takaichi mentioned that this doesn't mean that she's closing the door to dialogue. In fact, Japan is calling for more dialogue. This comes after China just submitted a letter to the UN saying that they are vowing to resolutely defend themselves if Japan dares to intervene militarily. And Japan is saying that all the claims from China about Japan changing its stance on Taiwan is all completely baseless. So you're seeing that war of words ratcheting up. The Chinese embassy in Japan as well posted on X saying that it has justification to defend itself without needing approval from the UN, citing this World War II era clause, the enemy states clause under the UN Charter that used to apply to Germany and Japan. But Japan is saying that this is essentially obsolete by this point.
Min, thank you. Min Lo, our China correspondent there. Right, just to tell you what's ahead here on shows, we have a very big interview coming up in a couple of minutes. Of course, Lenovo CFO Winston Chang will be joining us to talk about the recent earnings beats. There's a very specific AI angle to them. They've broken that apart as far as the revenue goes. So really just a juxtaposition against the whole AI conversation that's taking place. And yeah, who remembers memory? Yeah, okay, unintended there. All right, coming down to the open of trade in Greater China, Shanghai, Shenzhen, and here in Hong Kong, 17 minutes away. Futures are
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an exhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking these resources with continued investment. Soon it was past 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
Right. Lenovo Group posted better than expected revenue for the September quarter. The company says that was thanks to its increased market share in global PCs and robust demand for AI servers. Let's bring in Winston Chung. He's CFO of Lenovo. So Winston, thanks so much for joining us in the studio this morning. And I think we can get started with sort of a big picture question we're seeing in the market right now, which is the concern we're getting from a lot of companies around memory chip prices, and that's something that could have an impact across your different business divisions. I know that as a company, and you spoke about this in the earnings call, about having a lot of those contracts in place already, your supplier contracts that are sort of secured for at least the short to medium term, and being a big buyer as well. But what's the impact that you see it having on your company, and when do you see it having an impact as well?
Yeah, we've actually have a lot of experience navigating through different supply and demand dynamics. Of course, the COVID period being one. And of course, I think also 10 years ago, I think there's also some shocks in the market. I think with respect to this current environment, our revenue gains and our market share gains have been very, very significant part of this. Because if you recall, back in June, probably a lot of people were talking about pull ahead demand from the US, especially with respect to the tariffs. Yeah. And therefore, they were seeing a second half probably slow down. Now, we were really questioning whether the market was right and we were the one wrong, but we continue to see order load very strong. And you see that in terms of our September quarter being very, very strong. And we capture a global market share, the highest ever, 25.6%, right? Even higher on the AI PC front, on the 31% share. So on the back of those strong revenue growth, we've been engaging with the suppliers, so continue to buy. And so I think that's been very helpful. We also saw memory prices going up. And so for us, we also been holding longer weeks of inventory in terms of critical components. So I think that's also there to position to fuel our growth going forward as well.
What financial assumptions are you making going into next year? Whether or not you've secured that inventory or you locked in those futures prices on memory chips and that key cost component?
Yeah. I think the market is worried about cost and therefore damage on the margins, right? Yes. But I think overall, if you think about the other dynamics, which would be then the supply. So those that have the supply actually then would be able to have a position in the market. And I think we would actually say that potentially there's margin opportunities there as well in terms of both margin opportunities, but also share gain opportunities.
So what does that stockpiling look like, though? You're talking how many more weeks or months are you keeping those inventory levels?
I would say that we're probably over 50% of our usual levels.
Oh.
So I think it's a significant in terms of our weeks of inventory as it relates to critical components.
And what sort of pricing advantage do you expect that to give you then? Like what price did you lock in at? And what's, again, going back to assumptions, where do you think prices will trend?
Well, the prices are going very, very high, of course. And I think it's been unprecedented in terms of this rate driven by the AI demand. So I think this is probably going to be a longer trend. But I think overall in the next, certainly for the remaining of our fiscal year, which is another 6 months away, plus we've got longer term contracts also in place. So I think from that perspective, we feel quite comfortable. Now, in terms of the pricing dynamics, I think currently we're there to commit. Based on our scale, we can deliver the best price to the market, right, and also benefit our customers. So we continue to commit to that, and of course our channel partners as well, which are very important for our business. So from that perspective, really reading.
Any news in crude oil? फिलहाल के लिए तो ऐसी कोई news है दिखी नहीं. मैं भी search कर रहा हूँ, but I can't see any that such kind of news.
Favor one side or the other, but strike that balance overall in terms of our commitment to our shareholders, but also our channel partners and our customers.
Right. It seems very clear from the earnings call and also just your comments now that, correct me if I'm wrong, that of any of your peers, you're probably in the best position to, let's say, manage that upward increase in cost pressures. So the next 6 months, this fiscal year, can I ask a direct question? Are you raising prices or not raising prices on the back of those costs? What's the plan?
I think for us, we've been looking at potentially, depending on the channel inventory levels and other aspects, we would then adjust accordingly. For the near quarter, in terms of the fourth quarter of the current calendar year, we're probably thinking that it's still very strong in terms of the market growth for us. Relative to the rest of the market. We've been going very strong premium to market. So from that perspective, we can still lend our scale, especially coming to the holiday season. I think we want to make sure that we make sure everybody have a very good holiday season to the products that they can buy. So I think we will try to maintain that price.
Understood.
But going into 2026, you are planning price hikes?
I think going on to it, given that overall the prices are going significantly, I think we will have to strike that balance going forward. But I think, again, I mentioned it's between price and availability. So you really have to strike that balance. So those that have the cost will be the cost in the market, right? I think that's all. But can you get the supply at that cost? I think that's also another advantage, and I think we will be able to get that supply for that cost.
Overall, how does demand look for PCs currently? In the current quarter, how are you tracking and looking at next year? It's the peak, of course.
Well, holiday seasonality factor,
Everyone wants a nice Lenovo for Christmas.
That's right. We've been going going very, very strong double digit. And so I think last quarter was very, very strong. I mean, the June quarter, 20%. Over 20%. Now we're at 15%, the highest market share ever, and really balanced across the world. We can continue to leverage that to drive our growth going forward. We're seeing probably in the December quarter also continue to be very, very strong quarter. For us. I think so. Overall, I think we feel very comfortable.
You spoke on the earnings call as well about the Middle East manufacturing base that you have. What's the opportunity you see there, especially as you've got, the US approving the advanced chip sales as well?
So I was just there in October, and it's just amazing. In February, I was there to do the ground opening, and literally it's really a piece of desert with no pipes, no water, no power. And in October, it was a full-built plant there already, without the lines yet. But we're in the process of putting the lines in right now for production, and we'll start the production in terms of the test production in December. So I think from that perspective, it's just been amazing progress. Now you can see a lot of the announcements that's been coming out between the U.S. and the Saudi around AI, and I think Saudi Arabia is in a very strategic position to be able to leverage low-cost power to drive AI inferencing and training going forward as well. So I think from that perspective, we're very much aligned to the Vision 2030. We have the largest plant in the world that we have there in terms of comprehensiveness. So we have a desktop, PC, smartphones, and servers. No one plant outside of China for us do we produce all four, and we're doing that in Saudi Arabia. So we're very committed to that market, and we're going to drive the AI commitment that they have there in terms of opportunities, and to capture that revenue opportunity as well, which previously were mostly around PCs for us in the market. And now we can have a substantial opportunity, hopefully, to grow our smartphone and, of course, our server business as well.
All right. Winston, I think you also recently disclosed AI-specific revenues, which I want to ask you a few more questions about, if you don't mind staying a few more minutes, of course. Winston Cheng, the CFO of Lenovo, is hopefully being able to stay on, of course, to just continue the conversation here. Just very quickly, looking at Hang Seng Index and some of the currency right now, 710.79. We are punching higher 1% on the Hang Seng Index. We'll take a short break. We'll be back. This is The China Show.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
All right, going into the Monday session, I'm not ready for this week. I didn't sleep well last night. Did you sleep well? How did you sleep?
I slept okay, but I mean, it was okay. I'll leave it there.
Okay. If we enter a bear market today, which it doesn't look like we will, that might give us something to talk about. It maybe wake me up a little bit. But as you can see, the bulls are back today. Technicals, we'll look at some of these things, of course, going into the open today. We're better by 1.1%. Plus, of course, there were changes to the indexes that were announced, which we can get to later, effective December 8th.
Yeah, Innovent Biologics is one of the big additions, and one of the big subtractions from the China gauge is Haidilao, which I found an interesting one. But also, just to note, we've got a trading debut, and actually a good day if you're listing in Hong Kong, because we're seeing this stock here up around 40% in early trade. That's an Alumina refining and aluminum smelting company. All right, that's my Australian accent. We say it differently down under. But you are watching The China Show. We'll have the open next, and this is Bloomberg.
Good morning. Welcome back. You're watching The China Show. 40 seconds to the opening bell. Left side is the live shot of Lujiazui, and then Hong Kong, of course, and the silhouettes of the mountain range, and hopefully not a mirror image of the stock chart in 6 months' time. We did hit a speed bump last week on risk assets. Bitcoin had more than a bit of a wobble, including in the first hour trade this morning, but it's looking like we are doing slightly better on sentiment going into the open.
Yeah, well, I think there's a couple of things that our investors are looking at. Firstly, it's that odds of a Fed cut being back on the table for December.
Christmas gift from Powell
Well,
and
it could
friends.
be, yeah, because we were thinking that it wouldn't be possible at all, but now it's back to 60% odds after we...
Forex natural gas 15 में सेम ही लेवल है, कुछ चेंज नहीं है Forex में भी. Capital.com ब्रोकर जो है उसका चार्ट देखोगे Forex में 15 मिनट टाइम फ्रेम. फॉरेक्स में भी सेम ही लेवल है, थोड़ा सा डॉलर्स पे है प्राइस तो थोड़ा डिफरेंट दिखेगा, अदरवाइज ऑलमोस्ट सिमिलर ही है यहाँ पर capital.com ब्रोकर में 4.34 से लेकर 4.38 के अराउंड एक सपोर्ट एंड डे हाई का जो मैंने रेजिस्टेंस बनाया था वो स्टिल अभी भी रेजिस्टेंस ही है एंड देयर इज अ पॉइंट ऑफ कंट्रोल और पॉइंट ऑफ इंटरेस्ट जो भी कहना चाहो। यहाँ पर भी कोई सेम ही लेवल है, कोई ज़्यादा डिफरेंस तो मुझे दिख नहीं रहा। दिस अ फॉरेक्स चार्ट एज वेल। ये capital.com ब्रोकर का चार्ट है, अलग अलग ब्रोकर के चार्ट अलग अलग हो सकते हैं। सिक्स थर्टी तो हो ही गया, अब सीधा 8 बजे यूएस मार्केट ही ओपन होगा। उससे पहले एक डेटा भी आने वाला है, ध्यान रखना 7 PM पे बहुत ही इंपॉर्टेंट डेटा है। क्रूड, नेचुरल गैस सभी को इम्पैक्ट करेगा, गोल्ड के साथ साथ। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम जिन लोगों ने लाइक नहीं किया। ध्यान रखना है नेचुरल गैस में ना, इसमें एक सपोर्ट नीचे भी है। ये दोनों एक साथ ही लगाऊंगा तो बड़े हो जाएंगे लेवल, तो इसको एक ही सपोर्ट कंसिडर करना। इस वाले से थोड़ा सा क्वांटिटी कम रखना क्योंकि यहाँ पर अब थोड़ा सा रुक जाएगा प्राइस ऑटोमेटिकली। ऐसे जाता है तो छोटा सा ही जाए, बाकी नीचे वाले लेवल से भी नॉर्मल क्वांटिटी रख सकते हैं उस केस में।
as part of the dialogue next year, and that's probably going to put more pressure in terms of overall employment concerns.
The market seems, to your point, very sensitive to even the daily changes in pricing around the Fed and what swaps are telling us. Do you think the markets are at such extreme levels that we need the Fed to cut interest rates for this bull market to continue into next year?
It's more of a sentiment indicator and an indicator of the attitude of the Fed overall. It's not just about whether the rate cut is a quarter earlier or a quarter later, et cetera. It's also about the indication towards whether, for example, the cessation of QT is eventually going to lead into QE and how willing the Fed is to kind of put a put on the overall market and economy slide. It's also about where the terminal rate is going to end. Right now, people are forecasting 2 handle by the end of 2026. A couple of weeks ago, it was still back to 3 handle, et cetera. So I think it's not necessarily just that one rate cut. It's really more about the indication of monetary policy in the coming period.
Chinese stocks, how do they behave next year? Do they behave as part of a broader equity cohort, or do you think that's almost a natural hedge, something that's not correlated to the broader trade going into 2026?
I would say probably stable next year. This year Chinese equities have had a tremendous bounce, despite the fact that the trade war has gotten worse and despite the fact that we've actually had meaningful deceleration in terms of actual macroeconomic indicators, in terms of investment in particular. Exports have been a little bit strained and consumption has really decelerated versus previous expectations as well. But there's more household savings that are moving into the equity market as the government had wanted, and there is meaningful support, especially for the large caps in the index, which are the dividend yielding stocks, which are still yielding 4 to 5% in the A-share market, which is much higher versus what you can get from a bank these days. So I do think that puts a bit of a floor in terms of the downside risk for the overall market. But in order for things to move up more meaningfully, you do need to see a couple things. One, you need to see consumer sentiment stabilize, which basically I think is going to be partially dependent on the property market and pricing stabilizing, which is still elusive to some extent. And secondly, some kind of positive news on the trade front. Now, maybe the Supreme Court in the U.S. will challenge the Trump tariffs more. If so, that would definitely be positive for sentiment towards China, or some kind of incremental progress with Europe and the rest of the world that gives people more confidence that Chinese exports can be more resilient despite all of the issues with the U.S. I think those would be the elements that we have to watch out for. All right, Helen, thank you very much for joining us this morning. That was Helen Ju, their managing partner and CIO of NF Trinity. And just as we've been speaking here, there has been some breaking news crossing the terminal. It is a leadership change at GoTo. This is a large Indonesian internet platform company, but essentially they've announced a succession plan or some changes here. So appointing a new CEO to replace the outgoing Patrick Walujo. So this is a shift that's just been announced this morning. I'm not going to tie it to this, but I will say there has been some reporting, including from Bloomberg on this. We had a scoop recently saying that there has been a push by some of GoTo's backers, like SoftBank, for instance, Provident Capital Partners, that had been looking to replace the CEO. So it certainly could be a dramatic twist. There are talks about an acquisition by Grab as well. But that's just some background, not necessarily linking to this, which is leadership changes at GoTo.
Yep. Okay, more on this and more details as they come through. Certainly big news on many fronts, on different aspects, really, interwoven in terms of the themes there. Right, just ahead, the U.S. says it is making progress on a peace plan with Ukraine. The details about those talks in Geneva, just ahead. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Well, the U.S. Secretary of State Marco Rubio says President Trump's proposed deadline to secure Ukraine support for a U.S.-backed peace plan by Thursday is not set in stone. Rubio's comments come after U.S. and Ukrainian officials met on Sunday in Geneva and as Trump pressures Kyiv for a deal.
It is probably the most productive day we have had on this issue maybe in the entirety of our engagement, but certainly in a very long time. But work remains, and because this continues to be a working process, you know, I don't want to declare victory or finality.
Let's bring in our senior editor, Balazs Pens, is with us to help us understand the details here. So, how close are we then?
It's hard to say, but it certainly looks like they are making some sort of progress. The Secretary of State saying that they're willing to move the deadline, the November 27th deadline around, suggests that they feel like they can move forward, that there's some progress being made. And both sides signal that they are happier with what happened in Geneva than previously. The Ukrainians also signaled that some of their issues, some of the important issues for them, have made it into a revised proposal, a revised framework. So, as the Secretary of State said, there's a lot of work still that remains to be done, but it does seem like there is some progress being made.
What are the sort of sticking points, and what is the work that needs to be done? I mean, this seems to have really taken Ukraine by surprise. Like, did they even have enough time to prepare, really?
Yeah, our reporting shows that the original proposal, the 28-point proposal that the president rolled out, was mostly the result of work between the U.S. and Russia. So the Ukrainians were a bit in the dark on that. There are certain things in that it's hard to see Ukraine accept. This includes giving up some territory that Russia has never been able to conquer. That was part of that. They want reassurances on their security going forward after a peace agreement. There are certain points that need to be worked out in terms of how any ceasefire or a cessation of hostilities might work. So there's a lot of work that still needs to be done. But it looks like the sides are at least engaged. The U.S. is engaging Ukraine on this one, so there's a chance that they can get some of their points across.
Yeah, and as we have in that scoop, you've also got reporting around European officials racing as well to offer a counter-proposal and try and buy Ukraine a bit more time on this front. But that was our senior editor there, Balazs Pens, joining us. And to some other stories that we're following around the world this morning. Well, Israel says it's killed Hezbollah's military chief in a rare airstrike on Beirut. That's an almost year-old ceasefire deal with the Lebanese government that's wavering now. So the IDF says the attack killed Hezbollah's chief of general staff. That's the militant group's second-in-command, according to Lebanon's health ministry. The strike left 5 people dead and 28 others injured. Severe flooding across central Vietnam has killed 90 people and left 12 others missing. Vietnam's Ministry of Agriculture and Environment says more than 1,100 homes were damaged and at least 80,000 hectares of rice and crops destroyed. Early estimates put the total economic damage at about $340 million. We'll have plenty more ahead. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking these resources with continued investment.
That was Sam Altman speaking at Hon Hai Tech Day in Taipei, and of course this was a day where it was really the big announcement was this partnership we're seeing between OpenAI and Foxconn, because these companies have worked together indirectly. They're now going to be joining forces directly and to work on the sort of hardware that's needed to build out these AI data centers. So we had a really great conversation with Chairman Young Liu from Foxconn or Hon Hai, talking about the scale of this partnership. He's saying that they're looking to spend up to $5 billion. I was very curious to understand what's the actual opportunity you see. He wouldn't comment in terms of financial ones because he was also not wanting to contribute to these concerns around AI bubble fears and fiscal spending. Yeah. But I did really push him on the compute power and how much capacity they'd be looking to add. But take a listen.
A gigawatt per week will be the goal.
Okay, 1 gigawatt per week.
Per week. That will be Sam's goal. Okay. But we can start with 1 gigawatt per month.
So you think you can add 1 gigawatt per month next year?
Starting the second half of the year.
Second half of the year, so you think you can add 6 gigawatts next year?
I'm not sure. It really depends on our study and our new way of doing things. It takes time, but eventually we're going to get there.
Let's talk about then this opportunity in the US, because as you said, part of this is about Make in America. It's very ambitious. What's the capex that you need to also dedicate to the States?
The capex-wise, it's in maybe 1 to 5 billion to start with, to build the factories, to build R&D centers, but to build the working capital required to build a data center. That's totally different. That requires huge amount of money.
Yeah.
And with that, we are going to work with SoftBank.
What are the biggest challenges with scaling up in the US?
Shortage of labor. As I mentioned to you, it's not the labor cost, it's a shortage of labor.
Yes. How do you get around that? What are the conversations like, and what are the biggest shortfalls that you see?
Yeah, we had to work closely with schools and the government, which we were very familiar with when we build factories all over the world. We had to work with local agencies or local government to get their people ready for the kind of a job that we require.
There we go. That was the Foxconn chair in Taipei on Friday with, there we go. All right. Just very brief look at markets. We're doing well across risk assets, generally speaking. We'll get into the minutiae a bit later on, but just in terms of the stock movers across the greater Chinese market, so we're looking at some of the chip plays. This might be down to NVIDIA. Again, when I say again, the notion that the Chinese market is a market that is feasible to get into, and of course the opposite effect as far as the reaction in the markets across the Chinese names are concerned. Casinos, 10.8%, I believe, was the pickup as far as the data goes, really helping things along. There we go, visitor arrivals for October. We're better by about, let's call it 1.5%, splitting the difference between the four on your screens. And very, very quickly, have a look at where we are as far as the Chinese dashboard. The Chinese dashboard is concerned, and we are looking at some decent gains there. You know what? Since we have a bit of time, in fact, I want to ask my producers if you guys could, if the Hang Seng China Index chart is ready there, because I want to show our viewers the moving average that's in focus today following the week that we had last week. And I think the reason that should be quite relevant today is there is a technical aspect to the bounce we're seeing today. We cut through some moving averages like a knife through butter, and the 200-day moving average on the Hang Seng China Index specifically is coming up on your screens. It might be a level of support to watch. It also just happens to be the low of the August 28th session, which did see quite a big drop as a level. And it does seem like we're bouncing off that level as we speak, going into the thick of this week. Yeah, great level to be watching here, and a great one to point out, because Helen Ju was just with us sharing her outlook for China stocks going into next year. Yeah, she was. And you know what was interesting about the correlations in the last few weeks is, when we are getting on sort of a rally across global markets, China tends to not play along in terms of correlations. When things are on a downdraft, correlations snap back together, which I think was the point that asset allocators are trying to figure out. Is it one or the other? Plenty more ahead, suffice to say, this is the China Show.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Welcome back to the China Show, taking a look at the Hang Seng half an hour into the session. And we came into the day and we were wondering, would there be any chance of us going back to that bear market territory for the Hang Seng Tech? But we're really lifting off that. So it's sort of, I mean, we had that already indicated in the Golden Dragon Index on Friday, but seems like there's some optimism, maybe not for the chip stocks in China, but there is optimism around maybe rapprochement slightly between the US and China in terms of NVIDIA chip sales, plus you're adding the Fed into the conversation.
Yes, and I think that was really what, I think when you look at how the price action and the charts on Friday played out in the U.S. session, it was quite clear once we, the consumer confidence, well, the consumer-oriented data, to be more specific, around the U.S. consumer and how that changed the complexity, the appearance of risk assets, and that bounce we saw, and then you had Bitcoin coming through, and then you had this gain across U.S. Treasuries, underscores that, on most weeks recently, the Fed did not matter as far as the macro picture was concerned. It was geopolitics and earnings, but it's really come back in a big way that markets are really watching for as far as pricing goes. And yes, it was really the comeback of the Fed put that is perhaps leading to why we're seeing this one today, Bill.
Yeah, that's right. I think you're really getting it indicated there in those more tech-heavy gauges. The Kospi, Taiwan as well. The outperformance in the session. Japan is shut, of course, another tech-heavy index. But again, a pretty strong start to the week here as we also look to wrap up earnings season. I think what's really notable, though, and what's been interesting to watch is Bitcoin and the sort of bearing and the price action we're seeing there even over the weekend. Yes.
You know what? And it's really been a decent leading indicator for risk assets, right? And the fact that the fact that it's phrased this way is quite still funny to me. Can't get my head wrapped around it, that we are rallying into 86,000, and we were 81,000, of course, was a line of descent. At one point, I thought 80,000 was about to go, and then, of course, we had this turnaround in risk appetite, and this is where we are as far as that's concerned. So we are getting a bounce across U.S. assets today. Now, just taking a step back, right, amidst this seeming wobble in risk assets, Jeeton Martin Adams, who was with us, of course, at Bloomberg, she's now at HB Wealth, chief market strategist there, put this out, in fact, on LinkedIn. At least this is where I saw it over the weekend. This note that when you look at, say, the moving averages, that's still very much pointing to the upside. So the longer-term equity bull market remains intact. But short-term, most, if not all, the technical indicators as far as momentum goes are pointing to a deepening in the correction over the short term, because we haven't quite squeezed out and we aren't back all the way to oversold territory. So when you look at two things, MACD and, of course, RSI is what Gina's pointing out to. What we've done is we put this on a chart for you to actually have a look at that. And the gap between, so just to point out, what color is that coming out as? Purple? Pink? Pink. Between? Pink. There we go. Thank you so much, Belle. The gap between 41 and the green line, which is, of course, oversold territory, and us flipping into negative as far as the other momentum gauge is concerned, does point to more room on the downside amidst, of course, this as you can see, this is a bull market that takes you all the way back to 2020 as far as the chart goes. So yeah, just in other words, just watch the technicals as perhaps a trading indicator here, given where we are so far and expectations over the next few days or so, Belle.
Yeah, I think there's the technicals, and then there's also just the earnings picture as well, because we're at the tail end of the reporting season in China, but you do still have some big names on deck this week. So coming up, we've got one today in Hong Kong, but also across the week, I think two of the big ones to watch are Alibaba and Meituan. That's, of course, the story around the food price delivery wars. You're seeing Pony AI and WeRide. They're going to be really interesting to watch as well, given you had both of those companies recently listing again in Hong Kong. But, of course, they're already listed on the NASDAQ as well. Li Auto, NEO, I mean, just some of those more of those auto stocks to go, plus Win Macau. You had those better visitor numbers in Macau. Chow Tai Fook is going to be a very interesting one to watch given that run-up you've seen in gold prices. And this has been an unloved stock had been an unloved stock for a long time. But as Asia does near the end of the reporting season, Bloomberg Intelligence sees earnings across Asia-Pacific ex-Japan coming in better than expected, so pushing profits to around the highest levels since the end of the GFC.
Yeah, that really comes amid this. I think it's almost on a daily basis we keep drumming up these concerns over, valuations and multiples that have weighed on, understatement, tech stocks globally. For more on the story, let's bring in Marvin Chen, our Bloomberg Intelligence equity and strategist here, of course, to help us understand so I think it's important. Marvin, by the way, nice to see you. Good morning. Good morning. It's important to distinguish, right? When people talk about a tech bubble, it's usually not all the case. It's usually the Mag 7 in the U.S. But how does that notion and narrative permeate into the Chinese tech space?
Yeah, I mean, obviously there's going to be some knock-on effect for China, but if we're talking about a valuation bubble or an AI bubble, I mean, China valuations are, for the big tech stocks are trading at roughly 25 to 50% discount to the Mag 7, and overall Chinese equity valuations after the recent decline are just hovering about average. So, really we don't see a valuation bubble in China, and Chinese stocks are just less frothy than U.S. peers.
So then the market activity we've seen recently, because it has been, of course, very volatile, but people have been talking about a healthy correction. We were talking about bear market levels as well. What's your anticipation?
Yeah, if we look at our China, we have a China sentiment indicator. It's currently trading at around balance. So, it hasn't fallen into panic that we saw in, 2022, 2024. So this suggests that the recent correction is still healthy and sentiment hasn't reached extreme levels yet. It is interesting to note that our indicator did hit exuberance over the summer, which is typically associated with negative forward returns. So this recent loss in momentum is not that surprising based on our indicator.
So how are we set up for 2026?
Yeah, so I mean, this year, the China rally has been a valuation-driven rally. China has been seeing, earnings downgrades as price levels risen this year. So, next year will really be about earnings recovery and those companies that can deliver growth. The good news is that China tech is expected to see an inflection in 2026 based on consensus. Earnings is expected, growth is expected to accelerate to, double digits next year. And, the recent supply side reform, anti-involution should help kind of lift the profitability of the old economy sectors as well.
Taking a look at shares of GoTo this morning in Indonesia. This is the internet services company over in Indonesia. But essentially there has been a leadership reshuffle this morning. So they've named a new CEO to replace Patrick Walujo. So that move is expected to speed the takeover of the company by Grab. This is something that we've been reporting on. We had scoops on this at Bloomberg. So you're seeing that stock just marginally higher here. So the COO, Hans Petua, will be taking the helm from Patrick Walujo. So the company putting that out in a statement, though that does actually require shareholder approval.
Yeah, okay, so that, I guess, would be the gap between the current situation and whether or not it actually becomes eventual reality. From this specific stock, one other thing we're tracking right now is its trading debut here today. As you can see, Chuangshan Industries, if in Australian, does what?
No, I mean, I just said aluminium. It's a word that really continues to trip me up because I have to remember aluminum.
Yes. With an M. No, that's not, of course.
There's an I that's missing. Anyway,
there's an I that's missing.
A good day for a listing in Hong Kong and certainly a better market sentiment as well, given that you have had, of course, a string of listings recently that haven't performed quite as strongly. WeRide and Pony AI stand out, but of course, very different industries as well. Yeah,
we are on watch. Just generally speaking, it's been a fantastic year. We are on watch for more, of course, here in Hong Kong, including the JD.com supply chain tech unit. On your screens, Jindong Industrial, see Watson's, You have consumer pharmaceuticals, for example. There, look at some of the upcoming names. And by the way, if you don't believe us, just look at the HKX website, which has, I think, a lot of public information around just the amount of stuff that's been filed and likely in the pipeline. Assuming, of course, an asteroid doesn't hit Earth, that's going to come online, of course, going into next year. Joining us for more on what this year has been and what the outlook is for 2026, here on sets is Ivy Hu, Head of Equity Capital Markets, or ECM, for APAC at UBS. Good morning. Nice to see you.
Good morning.
How much sleep have you gotten this year? How busy have you and your team been?
It's a crazy year. I mean, like, especially in Hong Kong market.
Yeah.
The IPO market is #1 ranked globally. So think about how many stuff we have. And not only IPOs, the follow-ons, this year alone is more than last 3 years combined. And then converts, it sets a record year for Hong Kong Stock Exchange. So every product in the equity capital markets has been booming this year, and crazy year for the whole teams and the street.
Does it continue then into 2026?
The momentum is not showing any signs of stopping. Usually as we go towards the end of the year, things will stop a little, slower down a little bit. But then if you look at last week, we also priced at 1.5 billion Hong Chow placement. And that was very well welcomed by the investors as well. And then moving to 2026, you see already more than 300 companies publicly filed for its Hong Kong IPOs. Just to give you a comparison, this year there were 85 companies priced, and then 300 companies on the pipeline. And then we have a lot of companies already in the preparation phase for their January accelerated product offerings as well.
Okay, yeah. What type of conversations are you having currently with the ones, and you don't have to go into details because some of this is confidential anyway, about to hit the market, but do people have concerns over valuation? Are you still confident you can price things at the top end of the range and still have a good day the first day? What is that like recently?
It also depends on how you set the range. But
yes, well, that's part of your job too, right?
Yeah, it's part of our job. But then for sure, the market sentiment and momentum is there. And if you look at the valuation for the region, it's still not high compared with historical levels for MSCI China. And if you compare MSCI China with the global, the world index, it's still at a discount. So the valuation by itself is not very high per se. And also, I think the foreign investor positioning is still light relative to what we see in 2020 and 2021. So I think so long as we price the things sensibly, the good aftermarket and everything will continue.
What's the pipeline, though? Because a lot of it has been sort of A to H deals, some also coming back from the US. So what's the breakdown going to look like?
No, exactly. I think for this year, it was dominated by A to H, US back to Hong Kong, spin-offs, right? So these are all things on the back of existing listed companies. For really brand new company listings, there are not so many. There are only 3 companies, more than $500 that are brand new listings in Hong Kong. But then moving into next year, we do expect to see pickup activities in that. Of course, we will see continuous homecoming, A to H, spin-offs. But then for the brand new IPOs, especially the sizable ones, we do see a lot of them in the pipeline already. So it's going to be even more diversified and balanced into 2026.
In what specific sectors do you think we'll get the brand new ones next year?
I think the TMT, consumer, and industrials are the important themes for this year. That's going to continue, and including for the brand new ones out of these sectors. Yeah.
What's sort of also the conversation like with companies? Because there's some, for instance, we're hearing, I mean, Pony AI and WeRide, it was very competitive and ended up listing on the same day. There's ZAI, Minimax that both want to list, and again, like there's a bit of a race. What's the sort of pressure and the conversations like with some of these companies, particularly in the tech space?
Yeah, I think for a lot of these companies, so long as they get the right approvals in process in place, they just want to get the process rolling and get things done as soon as possible. They don't have to be worried about the demand and investor interest, so there is no particular reason for them to wait as well. So I think it's just that everyone is trying to grab the market window whenever it is there. So,
Speaking of, let me just borrow that last thing you mentioned, grab this window of opportunity. Yourself and many of your peers, of course, have had tremendous business. What's the outlook for fees? We've seen a lot of pressure on that recently.
You mean in terms of fee percentage or in?
That's open-ended. What's the outlook in terms of the commercial side for the banks here? Because there's a lot of activity. There's a lot of activity, but there's been a lot of competition too.
It's a lot of competition, a lot of activity, but I think that for sure that the large volumes helps on the fee general. When it comes to the fee rate, yes, I think for some of the product types, it's a lower rate in general for the A to H or homecoming, for example, because but technically these are also like listings for already listed companies. Yes. But then I think that for the more normal like new listings, the normal follow-ons and converts, I think the rate is at the normal level versus the historical.
That's good context.
Yeah, so I'm sure that the street is having a better year for this year. For sure, much better versus
people are probably counting their bonuses already ahead of the March announcement, but we can talk about that.
I feel like bonus conversations.
You tell me.
Someone's wondering too.
Then I guess going back to that around the fees, do you think that you're going to see even better numbers than next year if you do have more of those original listings as opposed to A to H?
Yes, I think on the back of more listings and more like new listings and also continued strong momentum for follow-ons and converts. I hope that next year is going to be an even better year than this year. At least the momentum is not stopping yet.
Right. Yeah. What's your outlook from your conversations on the ground with clients on the outlook for the A-share market?
The A-share market.
A-share market and listings there. Because we've seen, to your point, A to H. But in the A-share market, people seem to have ignored the market for now.
Well, I think for the Asia listings, it's also driven by regulatory approvals, etc., right? And then I think if you look at the secondary market, actually people have not ignored that market as well. There are continued foreign inflows into the Asia market. And actually, as a house view, we value both Asia and Hong Kong stocks equally going into next year. Of course, this year we see that there is a meaningful diminishing of the gap between A to H. I think this is on the back of a lot of foreign attentions back into China, Hong Kong, and then the valuation gap for A to H has been, beginning of the year, has been quite big. So it has been narrowing. But then into 2026, we do see that investors continue to be focused on the region that includes both A and H. But that said, of course, a lot of the quality companies in A will continue to come to H. And for those already had an H listing, they will probably do their full-on issuance or converts in the Hong Kong line, like what SF did this year, right?
Yeah, Sheng Feng did that too, yeah.
What's the hold-up then on some of the ones for the mainland? Because I think Unitree, for instance, is a name that stands out. That's one of the most promising humanoid robotics companies, and there's a lot of investor interest in this one as well. You've even got a report out from Citi saying that humanoid robots will see exponential growth in the next 12 months. But how come there's sort of delay? Because this is a listing we've been talking about for several months now.
Yeah, I think it's probably market has so much of an expectation and attentions. They are going through their own process, just like there are companies in Hong Kong that are going through their own process as well. So let's continue to monitor and see when it comes out. Yeah.
Before I ask you about the rest of the region, just what's the risk to all this momentum in Hong Kong next year? I can't. People keep talking about, obviously, that there are a lot of bullish reasons to remain bullish, but is there a risk in your view that you think we should be cognizant of?
Yeah, because I think a lot of favorable factors this year, including the geopolitical outcome was better than we originally feared. There is advancement in innovation, accommodative policies, I think both monetary and fiscal. These are all supportive factors, but these factors, are they going to lift up the valuation to the same extent next year as this year? Probably not. So I think a lot of the stock performance is going to be driven also by the earnings and growth, the fundamentals of the companies in the region, on the back of supportive fiscal policies and the monetary policies, etc.
The liquidity conditions too, right?
Yeah, exactly.
We just came from Singapore last week, and the only reason I bring that up is we were speaking with the SGX CEO last week, and they've also had a decent year, relatively speaking, of course, to the past few years. What's your outlook for the rest of the region outside of Hong Kong? Is there a market that stands out to you?
Yeah, I think firstly, Hong Kong is going to continue the driver of the region.
Okay.
And then
still dominant,
India,
you think, next year by looking at the pipeline?
Still the main driver,
okay.
India is going to remain active. They have a long list of IPO backlog as well. And they have been doing well last year and this year as well. I think Korea market probably will see increased activity on the back of corporate reforms as well as their exposure to the AI-related capex cycle. And also, Taiwan, we're going to see a head start in January because they have announced a bunch of tech-related CBS as well. Yeah. So I think quite a few of the regions in the broader APAC region is going to continue to see meaningful activities into next year.
Okay. Looks like you're going to be busy. Maybe hiring. We'll see.
Yeah.
We didn't. Oh, unfortunately, we're out of time to get into that question. Ivy Hood is now head of equity capital markets for APAC at UBS. We're about 52 minutes into the cash market session. Hang Seng Index 1.3, 1 and 7 on the Hang Seng Tech. Asia market, let's call it range bound.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Welcome back. You're watching The China Show. Let's talk about today's big take, interesting one. Some of China's local government financing vehicles, LGFVs, are said to have sold $3 billion of bonds in Hong Kong by offering returns that can actually be double the official interest rate listed. That's according to some investors and bankers that we spoke with. The headline on your screens. For more on this, John Leo is with us out of Beijing to talk about this tactic. John, good morning, and thanks for coming on the show. Tell us, how does this work effectively?
So the way it works is some of these local government financing vehicles, when they go to market, they need to borrow money. Their revenues, their cash flow is wobbly, it's weak. They need to offer relatively high rates to be able to get investors on board. They're at the same time, though, worried about publicly offering 16% yield on a bond because they're worried that means in the future they're going to have to pay similarly high yields to be able to get to borrow from the bond market again. And so the workaround is they will sell a bond at an 8% coupon, but then they will pay the investors either as a consulting fee, or they will pay the bank a consulting fee, and the bank will rechannel that money to the investor, so that at the end of the day, the investor is making 16, sometimes more percent yield on that bond.
So this is a practice that's been sanctioned, and companies as well have been fined that have been caught in the act. Bond investors have been asked to return the additional payouts. I mean, how exactly is this continuing to flourish?
So regulators have caught on to this practice on the mainland, so onshore, and they have cracked down, as you said. The companies that have been doing this have been sanctioned. The additional money they've paid out to investors have been clawed back. But because of this action by the Chinese regulators onshore, a lot of this is starting to move offshore. And that's why we're starting to see an uptick in this in Hong Kong, where Chinese regulators don't have the reach, and where this has been done sort of on the side. If an investor wants to partake in one of these deals, it's really, they have to know the right person. And so we expect, as this becomes more clear, there will be more regulatory action in Hong Kong.
John, thank you. John Leo there in Beijing.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Right, welcome back. All right, some news on Alibaba. We have a number now. It's relaunched, 10 million in the first week, and the market is actually reacting to this information. How long it lasts, that's not to pour cold water on this, but we are getting an initial reaction across the markets on price. I'll show you volumes in a moment, but 4% higher on Alibaba. You look at the benchmark, the Hang Seng Tech Index actually is rising on the back of this, and we're also getting a spread through as far as market breadth is concerned. So it's not just this specific stock. We're trading at 154 right now. Now, speaking of volumes, coming up on your screens, just a look at the Bloomberg terminal, just to show you and illustrate this massive pickup in volumes is the white line that you see for this time of the day. So effectively what you're looking at here is once the news dropped, that spike in volumes now puts us on track for about 140 million shares traded for the day. And as you can see, as we started out the day without this information, it was a plain vanilla sort of session. We did get a bounce back, of course, in price, and that suddenly spiked in the last few minutes, which does show, of course, a lot of buying taking place given the information that we have right now. We'll get you more on this once we have a better understanding. But market is reacting, Bell, and reacting quite positively to this news line coming through.
Yeah, I think it's really interesting, that sort of juxtaposition you have, or that question mark. What is sort of fundamental technological change that you're seeing in that sort of widespread adoption, and what is sort of more concerns around the bubble side and the financial valuations and others looking stretched. But our next guest is Didier Sonnet of the Southern University of Science and Technology, and he's developed the so-called log periodic power law singularity model. So the whole idea here is looking at different phenomena, but looking at signs of whether we're seeing any sort of bubble market activity. So he joins us this morning out of Shenzhen. Professor, thanks very much for taking the time to speak with us. And I think we can get started with that general question, especially in the markets right now. There's so much focus on the amount of spending, the level of the infrastructure build out, the demand that we see. Do you see any signs of bubble market activity right now?
So not so much in China. In the rest of the world, of course, we see that in international monetary market, in blue chips, in AI, obviously, Cisco, in some indices like IBEX, in Alphabet, in crypto, negative bubbles.
Okay. So help us understand, okay, why don't we start with crypto? Specifically, when you say negative bubble, clearly it's, I would imagine, somewhat depressed and deflated, if you will. If you could give us more specifics, Professor, what does tell you, and whether or not there are signs that we might see some reflation or inflation of crypto moving forward.
Yeah, so a negative bubble is exactly, essentially a look at a positive bubble, which is this price acceleration, this super exponential explosion. A negative bubble, you just flip the axis down, and it is essentially reflecting an exuberance in the negative spirit, a fear. And when we say a negative bubble, it means that we expect a rebound. Typically for Cardano, for Bitcoin, we see that there has been a sell-off which has been accelerating, and we see a likely rebound in the coming weeks.
Okay, Professor, maybe let's take a half a step back, and I'm just curious, what goes into the model? What major assumptions go into that as you plug that in? And my understanding is fundamentals are not part of that. If you could also talk about why they're not part of your model.
Yes, as you know, fundamentals are extremely hard to quantify. In principle, a bubble is an excess above a fundamental value, but famous telling says that if you know the fundamental value by a factor of 2, you're happy. So it means it's essentially not useful. So our model uses the idea that exuberance is characterized by what I call super exponential. Everything in finance is exponentially growing, which means compounding interest, proportional growth, and so on. It's a norm. But when the rate of return grows itself, this is super exponential. So by the way, when you hear people say it's a bubble, the price is growing exponentially, they don't know what they're speaking about, because everything is exponential. It means just the law of proportional growth, compounding interest, and so on. So we are detecting the specific signatures of exuberance. It could be actually rational. For example, when you hedge risk, with option derivatives, you could get this positive feedback. The key word is positive feedback. The larger the price growth, the more there is demand, which is quite surprising. But fear of missing out and many other mechanisms actually give rise to this transient explosion, which occur at many different timescales. And in addition, in the LPPLS model, there is this idea of a hierarchy of fear and exuberance. Fear and exuberance, there is this famous telling in Wall Street that the markets climb a wall of worry. That's actually what we are detecting in this super exponential growth.
So you mentioned about the model indicating we're going to see recovery in prices in the next few weeks. What is the level that you're looking at?
So we are not looking at levels as thresholds. We are more looking at our models do is to quantify a window where the probability of the change of regime, we don't predict crashes, we don't predict really levels, we predict times when the ongoing regime is not sustainable and will lead to, could be a crash, could be a high volatility plateau. This is what we are looking at. Trying to figure out the precise time and the precise level is out of scope. It's not possible, in our opinion. But actually identifying a window of predictability where you have this change of regime is what you can do. And it's very important for risk management. You can, of course, allocate completely differently your portfolio, hedge your risk with derivatives, or take short position, this kind of thing.
So, Professor, I never thought I'd have the opportunity to bring up the second law of thermodynamics here on Bloomberg Television. So I'm alluding to disorder and entropy here. But to your point, right, what the model I think predicts, if my understanding is correct, if we are near or either past that threshold of instability or disorder in price, and I wonder what your model tells you about the specific group of very large tech stocks in the U.S. and whether or not we are close, if not already, in that period of disorder?
It's a very good question. It's not related to thermodynamics, really, but your question is intelligently pointing out the fact that, okay, my view, it allows me to tell you what is my view of the market. The market are most of the time not predictable. They're high dimensional, extremely stochastic with all these influences coming in. But during certain pockets, I call them pockets of predictability, as if there is a kind of condensation of opinion, of views, herding, if you like, imitation, many processes, social imitation and so on, that collapse the dimension of the system into a much clear dynamics, what I call a pocket of predictability. So indeed, the financial bubbles, when they are close to their end, they become readable, they become more predictable. And right now, you're asking me what is going on. There's not much going on in China. In the rest of the world, of course, we see a number of bubbles, but not as bad and systemic as a few years ago.
I'm looking at your notes and I can see you've written Dragon Kings. Can you give some more insights on what you mean by that exactly?
Yeah, so this is a reaction to the concept of black swan of my friend Nassim Taleb. I consider many of people in China and Hong Kong know what is a black swan. This is the popular view that there are events, extreme events that are unknown, popularized by Rumsfeld, the Treasury Secretary of Defense during the Gulf War. Actually, it was put forward by Professor Knight in 1930, the fact that there are events that you cannot even know, even imagine that could occur. I consider this concept very dangerous and wrong because all crises are knowable and can be understood in advance. And the Dragon King essentially is the incarnation of this idea that extreme events, large crises in all domains, could be an earthquake, could be a landslide, could be a revolution, social crisis, a financial crash, etc., the collapse of a bridge, are extreme events that are different from the others. The king effect, the fact that the king owns a big part of the wealth of the country is outside the normal distribution of all the rest of the citizens. And the dragon emphasized the fact that there are special amplifying mechanisms that give rise to the Dragon King. And I thank you for asking this question, because the key idea of the Dragon King is because this large event, this crash, this change of regime, reflect maturation toward instability and result from amplifying special mechanism that what gives them some predictability to make them different from the other events. To just give an example, most of the time the crashes are maybe minus 40%, minus 50%, minus 30% over 1 month, 2 months, 3 months. This is what I do care about as an investor. I don't care about the plus or minus 3% a day that could occur, that is discussed often by commentators. And they occur through transient correlations of negative, minus, minus, a little plus, minus, 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 plus, minus, etc. And this is what our techniques are capturing, and this reflecting indeed this progressive evolution to a phase of instability, this reduction of dimensionality that you were eliciting with your analogy with thermodynamics, and this amplifying mechanism that give rise to this predictability of Dragon Kings, these great crashes that we are interested in.
And the ability to identify the canaries in the coal mine, or to borrow your phrasing, the precursor to these events. Let me just phrase the question quite simply, given a lot of this is still Greek to me, really. What is the possible trigger that you think causes the most amount of widespread pain to most asset managers out there? What is the one risk that you think we should be paying attention to, or the precursors to that risk?
Yes, so there are many risks at all time scale and so on, but the way I see the problem is I take the example of this pen. I hope you can see the pen on my... So this pen on my finger is unstable. Why is it falling? Why is it crashing? Two causes, two instabilities. One, of course, is the fact that maybe I am, moving my finger, I'm trembling, I have some kind of Parkinson's disease. I have not, of course. But it could be a whim of hair, push something, some proximate cause. This is what you're commenting on your TV plateau all the time, right? Oh, the chairman of the Federal Reserve said this and that. Trump opened his door and then issued a statement, etc. So these are the proximate causes that are not actually telling the whole story. The fundamental story is the fundamental cause, which combines the proximate cause. The fundamental cause is the maturation towards an instability through this positive feedback procyclical phenomena. And so to be short, to answer your question, what should we look at and what are the causes? You should look at the large mechanism, the important mechanism that give rise to positive feedback that leads to this maturation towards instability. And when the system becomes fragile, it becomes more susceptible, almost anything can tip off the pen and make the system collapse. So this is, by the way, why pundits and commentators have such a hard time to understand why crises and crashes happen, because their nose is on the windscreen. They are just focusing on the last statement of this and that person, the last geopolitical development, while they should look together with the underlying illness. Or it's like when you take a person, why do you fall ill? You had the proximate cause because you got a cold, because you were subjected to some microbes, something like this. A more fundamental cause is your immune system has weakened over the years. Your age, for example, or you have been, being exposed to a lot of stress and so on, bad food, bad way of life, and so on. So everything is evolving through this combination of endogenous maturation, the deep causes that go up and down the financial market, and these proximate causes that are hitting the system continuously as little exogenous stressors.
Professor, thank you so much. To be honest, I probably understood 15% of that. I'll blame my evolutionary inheritance of not being a smart ape at this point, but thank you so much for helping enlighten us on the topic there. More to come, certainly, in this. Didier, Chair Professor at the Southern University of Science and Technology. Oh, it's too early for that type of conversation. We're still reeling. Maybe a step or two down in terms of the intelligence scale, but not in terms of the significance of this. And that's not, of course, to pour cold water on the interview that we did with the Lenovo CFO, Winston Cheng. Their latest results, the outlook for AI, and the strategy ahead. Plenty more ahead. This is the China Show.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
All right, Lenovo says surging AI demand is pushing prices higher, but CFO Winston Cheng told us the company has enough inventory to keep costs steady through the holiday season. It was a great interview we had earlier, and here is some of it to listen back to.
Yeah, we've actually have a lot of experience navigating through different supply and demand dynamics. Of course, the COVID period being one. And of course, I think also 10 years ago, I think there's also some shocks in the market. I think with respect to this current environment, our revenue gains and our market share gains have been very, very significant part of this, because if you recall, back in June, probably a lot of people were talking about pull ahead demand from the U.S., especially with respect to the tariffs, and therefore they were seeing a second half probably slow down. Now, we were really questioning whether the market was right and we were the one wrong, but we continue to see order load very strong. And you see that in terms of a September quarter being very, very strong. And we capture a global market share, the highest ever, 25.6%, right? Even higher on the AIPC front, on the 31% share. So on the back of those strong revenue growth, we've been engaging with the suppliers, so continue to buy. And so I think that's been very helpful. We also saw memory prices going up, and then so for us, we also been holding longer weeks of inventory in terms of critical components. So I think that's also there to position to fuel our growth going forward as well.
What financial assumptions are you making going into next year? Whether or not you've secured that inventory, or you locked in those futures prices on memory chips and that key cost component?
Yeah. I think the market is worried about cost and therefore damage on the margins, right?
Yes.
But I think overall, if you think about the other dynamics, which would be then the supply. So those that have the supply actually then would be able to have a position in the market. And I think we would actually say that potentially there's margin opportunities there as well.
So what does that stockpiling look like, though? You're talking how many more weeks or months are you keeping those inventory levels?
I would say that we're probably over 50% of our usual levels.
Oh.
So I think it's a significant in terms of our weeks of inventory as it relates to critical components.
And what sort of pricing advantage do you expect that to give you then? Like, what price did you lock in at? And what's, again, going back to assumptions, where do you think prices will trend?
Well, the prices are going very, very high, of course. And I think it's been unprecedented in terms of this rate, driven by the AI demand. So I think this is probably going to be a longer trend. But I think overall in the next, certainly for the remaining of our fiscal year, which is another 6 months away, plus we've got longer term contracts also in place. So I think from that perspective, we feel quite comfortable. Now, in terms of the pricing dynamics, I think currently we're there to commit based on our scale. We can deliver the best price to the market, right, and also benefit our customers.
It seems very clear from the earnings call and also just your comments now that, correct me if I'm wrong, that of any of your peers, you're probably in the best position to, let's say, manage that upward increase in cost pressures. So the next 6 months, this fiscal year, can I ask a direct question? Are you raising prices or not raising prices on the back of those costs? What's the plan?
For us, we've been looking at potentially, depending on the channel inventory levels and other aspects, we would then adjust accordingly. For the near quarter, in terms of the fourth quarter of the current calendar year, we're probably thinking that it's still very strong in terms of the market growth for us. Relative to the rest of the market, we've been going very strong premium to market. So from that perspective, we can still lend our scale, especially coming to the holiday season. I think we want to make sure that we make sure everybody have a very good holiday season to the products that they can buy. Time. So I think we will try to maintain that price.
Understood. But going into 2026, you are planning price hikes?
I think going on to it, given that overall the prices are going significantly, I think we will have to strike that balance going forward. But I think, again, I mentioned it's between price and availability.
That was the Lenovo CFO talking about this unprecedented AI squeeze when it comes to cost components, of course, and chips, and what that might do. Not so much to them, but maybe some of their cohorts in the industry. They are well positioned based on that stockpiling of inventory. Do catch that interview on TV Go for our Bloomberg clients. Check that out. There's also a story out on the interview itself, also on your terminal. Plenty more ahead. This is Bloomberg.
Welcome back. And some of the corporate stories that we're tracking this morning. Well, China's CITIC Bank has secured government approval to open a financial asset investment company. According to an exchange filing, the new entity will have $1.4 billion in capital. It's going to focus on debt-to-equity swaps and equity investments in strategic emerging industries. Billionaire hedge fund manager Bill Ackman is reportedly getting ready to seek an IPO for Pershing Square next year. The Financial Times says Ackman is speaking with advisors and has informed investors, or some investors, that a listing may come as soon as the first quarter. The Wall Street Journal also reported Ackman may list a new investment fund at the same time in a unique, that would be very unique, double IPO.
Okay, double the fun, hopefully. Before we go, just a look at some stock movers in the region here going into the last hour of the morning session in Hong Kong. Alibaba, of course, 5% now, should be session highs. 10 million downloads in the first week, so investors are getting some numbers to chew on here as it pertains to its AI in a bubble and whether or not it's showing up as far as tangible business performance metrics are concerned. China port stocks are on the up. Some stronger regulation around controlling capacity as it pertains to hog production. We're looking at moves, of course, to the upside of many of the food-related stocks in play and some of the defense stocks in focus coming up on your screens as well. Very shortly, there we go, on the back of this escalation, partial escalation as far as the Japan story is concerned, moving some missile systems into a base nearer Taiwan there. But as you can see, market is reacting across some of these names here as well.
Yeah, and you can see that the Hang Seng is essentially reversing those losses we had into the end of last week. It's 1.5% higher. There's that optimism maybe around sales of H200 into the mainland market that sort of lifted markets broadly, but then also this optimism around the Fed is a cut on the way in December.
इस क्रूड भी सपोर्ट पे आने वाला है, नेचुरल गैस का एसएल जा चुका है, ध्यान रखना। काफ़ी देर तक होल्ड किया, कैंडल क्लोज करने से रोक रहा था, बट आई थिंक कैंडल क्लोज कर दी है। ब्रेक डाउन हो गया, इसमें एक रीटेस्ट प्लान यहीं पर कर देंगे, या फिर अगर नीचे एंड पे आता है तो एक बाइंग का ट्रेड प्लान रहेगा। कंटिन्यू फॉल कर रहा है डेफिनेटली। यूएस एंड रसिया होल्ड पीस टॉक इन अबू धाबी एज मिसाइल्स फाउंड की। ये तो पुरानी न्यूज़ है। Ukraine military says it hit Russian oil refinery and terminal. देखते हैं नेचुरल गैस में अब ये पुल बैक के लिए आता है, डायरेक्टली नीचे आता है। डायरेक्टली नीचे है तो भी बेटर ही है, रादर देन रीटेस्ट के लिए जाए। बाकी रीटेस्ट के लिए आएगा तो एक सेलिंग का ट्रेड वापस बन जाएगा। सपोर्ट ब्रेक हो चुका है, कैंडल तो क्लोज हो गई है।
It's just this company that at its, in its good times, people have just really loved it, been really passionate about it. And my wife, my daughter were really into it. My daughter, as a teenager, spent just hanging out there, and that was her whole thing. Was they'd be selling, Anisu, handbags, but at a price that my daughter, who's like 16, could afford, and so this whole thing of kind of like bringing design, bringing fashion to the masses, to teenagers, it was this huge achievement, and yet things have been really tough, and sales have been declining. They peaked during the pandemic, and they just haven't been able to get their groove back. And there've been a lot of missteps, but we wanted to sort of delve into that and look at that and go talk to them about that. And so we did in early September, and spent a lot of time researching, going back to them. But I mean, no, it's kind of a tragic story at this point. I mean, maybe they can turn it around, but they're in rough shape.
Well, you got to attend this pep rally for that was kind of the culmination of the most recent CEO's time at Target, Brian Cornell, and you spent some time with him and his successor.
Soon to be successor. Incoming, right? Pending, right.
I was like looking for the word incoming.
Yeah. No, I know it's confusing.
How does he look at his time and sort of the arc of this narrative?
Well,
because there's a little bit of a disconnect.
Yeah, no, totally, Tim. Because I mean that was the thing. It was this huge event, 14,000 upper level Target employees in this 8 o'clock in the morning in the Target Center. The music's booming, red lights everywhere, and then Brian Cornell, the current CEO, has been CEO since 2014, comes out and basically it's going to be his last time as at Target together as CEO. And, it's a big look back at, at the highlights, and basically emphasizing that when he came in, he did a really good job. And, the company did turning around then. He did that. He pulled it out of Canada where they were losing money. He rebooted a bunch of stores and rebooted a lot of the store brands. The company peaked, though, in 2022. And he didn't really talk about what happened after that, except we didn't really grow. And there's all kinds of things that happened in the last couple of years that contributed to, the decline of their stock and the decline of their sales. They've had some big political controversies. They ticked off conservatives. They ticked off, liberals with their abandonment of DEI. So sort of they're kind of like a all purposes offender, and then their stores have been operated. Their stores have been kind of a mess. Anyway, he sort of ignores all that, and then he bursts into tears on the stage, and it's kind of like, well, wait a minute. He's announced that he's stepping down. He's not leaving though until January, and then his replacement and his right-hand man, who's an insider. That's not to say that maybe he won't. That's not to say he won't work out, but it's not what investors wanted. The stock dropped, and it was this moment, kind of like, he was kind of milking this moment on stage in front of all these folks when his last couple of years have been kind of a disaster. If he'd left in 2022, he could have gone out in history as a great retail CEO, but he stuck around, and
they waived the mandatory retirement age for him a couple of times, right?
Well, once was enough, Carol. I think, but
was it once?
Yeah, well, still.
But I think what's fascinating, and you see this over and over again with companies, and they're in a hard place trying to figure out their way forward, and then they just tap somebody who's been at the company for another 20, who's been there for 20 years, and I know sometimes folks are like, well, it's good you have an insider who knows it, but a lot of times what you need is an outsider.
Well, actually, and we're neglecting something here, because it's one thing to basically ignore investors and appoint consummate insiders. Some guy's been there for 22 years, but we're neglecting to mention that on top of that, Brian Cornell, the guy who a lot of people think is responsible for, who presided over, this sort of catastrophe over the last couple of years, he's not going anywhere. He's sticking around as executive chairman. And I think there are instances where, like Jeff Bezos, when it's time to the name his replacement, Andrew Jassy. I mean, he sticks around as executive chairman. It's kind of like, well, he's the founder. He's responsible for a lot of the company's success.
Yeah.
If he wants to stick around and kind of keep an eye on things and lead the strategy, fine. But when you're somebody who's had a really terrible record in the last couple of years, why are you sticking around? And why is the board
allowing it?
Yeah. Of course, he's the chairman of the board. But it just seems to speak to kind of a larger problem at Target. That the thing you mentioned at the beginning about a lack of urgency in addressing problems, and sometimes even acknowledging they have problems.
Right.
So yeah.
So when Cornell came in a little more than a decade ago,
right.
He pulled the plug on the Canada stores, which was seen as a pretty big move.
They were all losing money.
They were all losing money.
Yeah, 133 of them.
But they hadn't been in Canada for that long.
Right.
And there were just a lot of, as you point out in the piece, a lot of execution issues.
Right,
with
exactly.
Actually,
supply chain issues.
Yeah.
Right.
At what point, like the target that you describe and that Carol describes, and the taking out all the like the takeover of the New Yorker.
All that stuff is, and I remember also.
What was sort of the end of that? Like, why did that era decline?
Well, all of that stuff happened. Certainly for the most part, happened under I guess this CEO Bob Ulrich, who became CEO of Target in 1987. They just had about 300 plus stores. Mm-hmm. It was part of Dayton Hudson, sort of a department store company. But he basically decided that to compete with Walmart, we have to have like kind of cooler style our products. We have to have cleaner, more well lit stores. The execution has to be better. But he kicked off this whole thing that sort of, I won't say culminated, but it really started with the Michael Graves partnership, and that was in 1999. That resulted in the famous tea kettle, which of course we can't stop talking about. It you can mention enough times in the story because it's just sort of like, it was incredible. It was a piece of art that people could buy for $34.99. But in any case, he steps down because of the retirement age limit in 2008. He's replaced by Greg Steinhoffel, who was his number two, his right-hand man, and that just didn't really work out. Even Bob Ulrich says in the story he thinks that's the biggest mistake he ever made, but they never really
probably the worst decision in my blank blank life is what he said.
Right, fill in the right. But
Steinhoffel did not respond to requests for comment.
But so Brian Cornell comes in 2014, and after Steinhoff was ousted. And by the way, that follows the the hack, on Target, in 2013. That was. And the funny thing is, like, that's something that's happened in a lot of companies since. But at the time, it was kind of a first, and it blew everybody's minds. And he took responsibility for it and kind of lost his job. But so Brian Cornell came in and fixed a lot of that stuff. But I think in terms of like maintaining that that stylistic edge, the edge on design, I think that kind of started to wane, and then in the pandemic, they themselves admit that they weren't really staying in touch with the consumer. People were working from home, and they weren't doing all the things they do. Was going out to consumers' homes and like looking through their makeup bags and all that stuff. They're kind of trying to do that now, and trying to make up for that, but they really lost the edge. But so to answer your question though, it's happened slowly, and then in the pandemic, post-pandemic, it sort of accelerated really rapidly, this sort of decline.
I mean, I have to say, when my daughter was younger, I mean, I lived in Target. Like, I was there all the time, and sometimes I've gone back for her even today, and she's not a little one anymore. Right. But so what do folks say needs to be done at Target? Because I got to say, when it was in its groove, it was a pretty cool retail place.
I know. They're really successful.
Yeah, super successful. And everybody talked about Target, right? It was kind of cool. So what do outsiders or folks say needs to be done?
Well, they need to get their edge back in style and design. They say they're doing it at that. I mean, of course, the question is, they really got there in the first place in a very different kind of, media, retail environment. So it's a bit of a challenge to recreate the success that they had. I mean, you can't just like take. I guess you could take over the New Yorker now. I don't think it would be quite the same thing. But they have that. They still have operational problems at their stores. I mean, you know, you can go to really nice stores in the suburbs. We went to a very nice one in Edina, you know, Minnesota, right outside of Target, where it turns out quite a few of the, you know, top Target executives, including one Michael Fidelke, shop. So of course that place was fantastic. But or you can go to the Target down the street from where I live in Washington Heights on 181st Street.
Is everything locked up?
Yeah, and it's just it's a mess. So how do you really? And I think there's kind of in between sort of
Yeah.
you know, my Target and the Target we went to, but they have to fix all that stuff. They have a bunch of unhappy employees. They have to do something there. But a lot of it is just executing at the level, you know, that they used to execute, and then they've kind of let that slide. And you know, can they do it in you know, 2025, 2026? You know, it's a different world than it was in the aughts. So we'll see.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
It seems like you fit in the category of buy the dip, and that last week and the week before's volatility was simply a buying opportunity in select areas. Am I getting that right?
Yes, you are. Have a look at the market. Have a look at how bearish and neutral the market is. It's like 68% of investors are in either that bearish or neutral camp. So you're buying these dips, but you're also buying into what we call this wall of skepticism. And it's not necessarily a wall of worry, but the skepticism, and that skepticism is predicated on concerns, as Danny just said, about AI, about private credit, and obviously what's going to happen with the Fed at their December meeting. So those three things are kind of weighing on investors' minds, but we actually see going into 2026 a very optimistic scenario playing out.
So we're going to get to AI and some of the questions around the debt build out in a minute. I am curious, though, just about the state of the consumer and how important that is heading into next year to determine whether you can see this melt up, the 7,800 predictions for the S&P at the end of next year. How crucial is this season of retail spending?
I think we're going to have 3 earnings reports this week, which will give us a little bit of kind of the feel of where the consumer is at. So you want to watch those earnings reports carefully. The second thing, though, is we're watching into the Christmas season and what is happening during that holiday season in spending, because we do need to have a baseline consumer that is continuing to spend. Now, from a perspective of the tariffs, you're right. A lot of companies have forward bought inventory, so we don't think there's going to be quite as much sticker shock as people walk into retailers. And I think finally, we are talking about a shortened week from a trading perspective, but let's be clear, it's Black Friday. So we're going to have people on the ground, and we're really going to get that data so much quicker this time around. So we're going to have a real temperature check on the consumer, and I think that is going to be the underpinnings and the start of addressing some of this reticence we've seen in the market.
But we've known that the consumer has continued to spend. How do you weigh up if you get some of that strong data from Black Friday versus the AI and credit parts of the narrative? If that continues to look shaky, can the consumer kind of supplant that and win out and allow a rally to continue?
I think what's the shakiness is people are just wondering about how are we going to fund all of this AI capex. But let's take a look at what the real arbiter of how markets work, and it's earnings growth. And going into the third quarter, the expectations for earnings growth was 6.5%, and we came in at 15. So companies are really starting to earn. And yes, we do hear the narrative about concerns on debt leverage and AI, but I look at the breadth of where AI spending is happening. I look at a company like ourselves. We have a pristine balance sheet, and we're investing significant amounts of money into AI in various parts of our business, and we're not using leverage to do that.
Well, is it fair to argue, though, that we've at least shifted? We're not saying this is a bubble bursting, but we've at least shifted into a phase where it's cautious evaluation for AI companies. And if that's the phase that we're in now, what does that mean about how much more juice can be squeezed out of the AI trade and have these mega cap companies really support the overall market?
Look, you've gone in terms of AI from having this kind of use cases and 400 use cases what we started, we then narrowed it down, and now we're starting at that phase of we need to get those use cases into production. And that's the part of AI that you're really talking about. And I do think it's so important. It's taking use cases into production and then seeing the returns from that production. And we're now actually starting to see the ability to calculate some of those returns in areas where it was a little more difficult. So how many hours of time saved for an expensive executive do we get from using an AI summarization or an agentic AI tool to generate information for them? So we're now actually starting to see calculations of time saving. We're also starting to see, calculations of are there cost savings associated with this. And it's the ROI and the need for ROI that I think is going to be the next underpinning of what is a bullish AI narrative.
Meanwhile, with AI definitely on the back burner and a question of how much patience investors have, there's also a question of how much stimulus there will be pumped into the market early next year. I'm watching the headlines drop about President Trump clearly very focused on cost of living. We've seen certain tariffs rolled back. A real question of what happens if the Supreme Court overturns the existing tariffs. How much are you looking to both the Federal Reserve to cut rates, but also to some sort of fiscal impetus at the beginning of 2026 to fuel some sort of upside across the board?
I think as we look into December and I look at rate cut expectations just a few weeks ago, I mean, the market's really telling you that December we're not likely to see a cut. And the reason is that the Fed has been so much behind that. We are data dependent. And one of the unfortunate consequences of the shutdown is some of this data is going to be delayed. And the most important piece of data on the jobs front is actually going to be delayed until after that meeting. So I think that from a Fed perspective, with a degree of caution, they're likely to enter into that December meeting with the data is not here. We don't want to cut too much more, and they're going to punt that into next year. So that increases the likelihood that next year we may have a small cut. But the fact is, let's go back to the inflation number, and that's really the part of this equation we are focused on. You know, inflation continues to not be contained. And so we need to be cautious because if we don't get inflation, you're back with a 2 handle on it on a long-term basis. The ability of the Fed to cut, we think, is really hamstrung given some of the employment numbers.
So highest conviction, long stocks, short bonds, or long stocks, neutral bonds?
My conviction is continuing to be long in the market, and I think that what we keep going back to is the fact that there's skepticism. There's really this idea that we're seeing a skeptic investor, so we think it is an opportunity to add. And then finally, we like the breadth. I mean, that's the real thing that I think is even during this year has been clouded, is we went into this year saying we wanted to have breadth in the market. We started to see it, but then the Mag 7, with all of this AI rhetoric, accelerated again. And I think going into 26, our call is for a continued expansion of breadth in the market. So it's focusing on the 493 stocks, as we talk about, that really are going to drive the market.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Last week was choppy. Last week was nervous. How are we feeling this week?
Last week was definitely on the nervy side. Look, I think the news over the weekend was probably relatively mixed. We think about geopolitical. We look at, as you were already talking about, the defence stocks. Got 6 weeks coming into Christmas. Expect a relatively quiet this week usually with the US holiday. But let's see. Maybe not. There's a lot of US data coming out this week, which we normally wouldn't get. So maybe that's an extra kind of incentive to drive volatility higher. But in terms of kind of where we are, what seemed to change the tone Friday was just John Williams from the New York Fed coming out and saying, yeah, maybe we do see a December cut. Is that what the rest of the year really now hangs on, whether or not the Fed does or doesn't deliver 25 basis points on the downside? I think that's going to be probably the key data point that we look for over the next couple of weeks. We expect that we'll see, potentially some more interest in dividend-type strategies as people are looking for hunting for income based on that idea of a Fed cut now and more Fed cuts next year. But I think the Fed decision's the big one to watch for.
How dependent is this rally on that? Is this market still sensitive to things like valuations, or is this purely about monetary policy?
Look, the S&P 500 is up 12% year to date, right? Not a bad year. Certainly well above, historical, average performance you'd expect from the US equity market. Valuations have been stretched. They've been stretched all year. We've seen that flow into markets outside of the US. European valuations also historically looking stretched. But we've still got tailwinds as well. So, maybe we are in for a Santa rally.
Well, that's in the States. Does the valuation argument apply to the defense stocks that we're seeing drive this market? So we're seeing them down today. There's a geopolitical read-through as well. Is there a valuation conversation to be had around the Rheinmetalls, the Hensoldts of the world?
Look, defence has been one of the great sector stories of this year. If you think about where, a heap of money's flowed into new ETFs, there's been more than a handful of new European defence ETFs, and they've performed very strongly. I think it's, not unreasonable that with changes to the geopolitical landscape, news stories coming out over the weekend that, you might see some pressure there.
You talk about the 12% that the S&P has delivered. If I'm a euro investor, it's 1%. European cash has outperformed the S&P this year. What do I do with that? What are you seeing in terms of hedging? What do you think you do next year do I need to hedge my US risk from a currency perspective?
We've certainly seen flows into European equities. Like a crazy stat from that I was reading last week is that flows into European beta passive ETFs are up 30-fold this year.
Right.
So we've already seen...
US money or European money?
I would say that's largely European money. So we've already seen European investors adjust their portfolio, and they've been doing that all year. And as you said, part of that reason is that in local currency terms, that US equity exposure hasn't been fantastic. In fact, it's probably been bad. So what do they do going forward? I mean, we expect that there will still be very strong demand for non-US exposure going forward, whether that's Europe. Latin America has also performed very well this year, and there have been pockets in Asia of specific country performance that's been very strong.
What do you think how does Europe look next year? Everybody's got very excited about the fact that the Germans are going to be spending a lot of money, and as a result of which we're going to see this kind of economic powerhouse at the heart of Europe driving sentiment, making it more positive. I'm not seeing it yet. I'm not seeing it showing up in the data. Is Germany going to... how critical is it that Germany actually delivers on that fiscal narrative for European equities to hold up?
Well, the German economy is largely what drives the European economy. We know that. So, where they go, the rest of the European market will follow.
So, yes, quite important.
It's very, very important.
Sticking with the German theme a little bit, so much of that has to do with some of the way that the European bond moves are trading. I would ask you about the bond market, but I am curious about whether the equity market is going to be taking its cue from the bond market. Is this a rally? Are we dealing with a lot of luck here, given that the dollar's range-bound, the bond market's range-bound, and frankly, so is the commodity market? Is this luck?
Luck in terms of the current equity, cross-asset luck. Look, there are points and there are catalysts that underpin the current performance in European equities, right? We've seen defence, as you said. We've seen strong performance in some of the pharma. So we will need to see that continue for that equity market to stay elevated.
What about things like, I mean, we have so much of a focus on the geopolitical risk and the conversation happening in Geneva right now around Ukraine. There's another conversation happening in Brussels right now around potential tariff exemptions between the United States and the EU. Do trade and tariffs matter for this market?
Absolutely. And again, if you look at the markets outside of the US that have actually performed pretty well this year, it's been those ones that have been able to navigate the tariff story. So it's been Europe and it's been Latin America.
Do you do it on an index level, or do you do it sector by sector? So if we're talking about auto carve-outs or we're talking about food carve-outs, then we need to go sector by sector, or is it simply the U.S. likes, Europe more than they like Switzerland, therefore Switzerland underperforms? How do we think about that?
I think you can think about it either way. I mean, we've seen, again, at the country level, some countries have done, particularly well at navigating that. And then if you go back and look at the sector level, you've seen some real laggards, and you can point to tariffs as being one of those reasons.
Can I just get your kind of bigger picture take on what happens next? One of the themes that certainly is very present in this market is the idea that passive money is just mechanical money. That as the market goes higher, it pulls in more money. It's almost a self-fulfilling prophecy. A lot of people are talking to me about that working in reverse. If the market does roll over, if we start to see some turbulence, that actually you could see that money coming out. Is that how you see this market working? Are the passive flows just what is just mechanically driving everything at the moment? And it doesn't matter what valuations look like. It doesn't matter. We talk about all of these other factors, but it's just that kind of that relentless amount of money that flows into passive funds week after week, month after month, quarter after quarter.
I think there's a few points to remember. I mean, passive money is still making a decision, right? It is still going to a certain country, going to a certain region, going to a certain sector, or going to a certain strategy. Could be going to factors, could be going to dividends. So we're not talking about this wholesale flow of money into one single product. And the other thing I'd say is that, the work that we do that looks at passive versus active performance, our SPIVA reports, shows that even during periods of turbulence, active managers don't outperform.
Sure, but if the market goes down, how self-reinforcing does the money on the way? The market is kind of being driven higher by just the weight of money that is coming in. Does that work? Could that work in reverse?
It could, but I mean, I think our expectation is that we just see that money change that we see investors change their portfolio construction.
Right.
So that money doesn't actually leave the market; it just goes to other parts of the market.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
How did Baba do it, Tom? Where did it exceed expectations?
Yeah, Vonnie, an interesting time as we talk about those tensions between Japan and China and the moves by President Trump to secure the lead that the US currently has when it comes to AI, because Alibaba really is a litmus test in terms of how far and how effectively China is particularly pushing the adoption as well as the innovation around AI. So the top lines on revenue, yes, it was a beat. E-commerce was also a beat for Alibaba. This is a stock that's already up about 100% year to date, so it's had a massive run up. But the focus of scrutiny really is on how it is delivering on AI. And the key part of the business, because this is a multifaceted business, Alibaba, the key focus when it comes to AI is the cloud intelligence unit. And there you saw growth of 34% growth in terms of the cloud infrastructure bit, showing that demand from their end consumers and enterprises in China to ensure that they have access to those cloud offerings of Alibaba. So that is good news. We're also hearing from executives saying that they are going to be investing free cash flow into future innovation. So read into that. AI. This is after 4 straight quarters where capex and spending on AI infrastructure, according to executives, came in at about $17 billion US. This is a company as well that's had recent success with its own relaunched chatbot, with a lot of demand from Chinese consumers for that as well. So it seems to be Alibaba continues to be well positioned to lead domestically in China when it comes to the AI story, a company that has really reshaped and reformed its focus around AI innovation and getting it into all of its end products.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Strong gains in stocks globally, US into Asia, Mark, as a result of what the Fed rate cut theme. Does that live on? US futures have rolled over a little.
Yeah, I think that this sell-off that we started in stocks about 4 weeks ago is still not fully exhausted. I know that's been a kind of repeated refrain of mine for the last few weeks. I understand why people are rushing to buy the dip very quickly, but it just doesn't feel like that the pain in the digital asset sector has fully played out. And sure, there's not a direct transition, but that is weighing on the margin on some of those popular retail names and some of the most popular momentum stocks, and that is dragging on the sector. I don't expect a major pain, and as we've talked about a lot, I think the AI bubble will continue to inflate very, very strongly into 2026. I am just not convinced that we're ready to get right back on the bubble bandwagon already. I think from here until Christmas will continue to be difficult and not the usual Santa rally.
Does it matter though? AI, yeah, that's obviously a huge market theme. But as long as the Fed's cutting, who cares?
I think that ultimately the AI theme is much bigger. It's what drives the US economy. It's driving all the biggest valuation stocks in the world. So for markets, the AI theme matters much more. It is true that at the moment, there seems to be a very outsized reaction, surprisingly so, to small moves on whether the Fed cuts by 25 basis points or not in December, which seems kind of ridiculous. I actually think that, Powell's got the votes to probably push through a cut at the margin. I think that's the way we're going, and that will help the stock market. But that's not coming for, I think it's 3 weeks from today. So, they've still got quite a bit of time. Or maybe 2 weeks from today. So you still got, until then, I think it's going to be tough for stock markets. And I'm not sure that's going to be the game changer that people are looking for.
Mark, does a cut in December mean a cut in January?
No, I don't think that's necessarily the case. I mean, clearly, if they cut in December, it's going to be super, super debated. And as I said, I understand the uncertainty out there. If you ask me now, I think it's more likely they will just about cut in December, but there's a lot of data coming in between today and tomorrow before Thanksgiving that might help kind of clarify that. But I think that even if they cut, I think it'll remain very, very difficult to have kind of consensus behind it, which means we don't necessarily follow through. The overall theme, though, going to next year is that we know this, we've known this for a while, is that the Fed is going to provide easier monetary policy than orthodox economics would suggest, and that is supportive for the stock market. Growth at the moment seems to be holding up okay, but driven by the AI capex boom. If the AI capex boom blows up, then the economy is not robust enough to hold up because it is a K-shaped economy. And that's why ultimately it is the AI theme that dominates absolutely everything else out there.
We have in Singapore the state-of-the-art technology, and then we export that technology into our Meta plant in Georgia.
The Smart Factory brings software-defined manufacturing to life using digital twins, AI, and automation.
Our Meta plant was the largest investment of the company outside of Korea, at 3,000 acres, with an investment of $12.6 billion for a capacity of 300,000 cars a year.
Polka, I'll have you chime in. It seems like you're still quite bullish on the whole AI theme right now. How do you separate between the U.S. AI trade versus what we're seeing maybe in this part of the world?
So yes, we are bullish on the AI theme. We have been for a while. In the US, I think for us the concern is a bit more around the valuation. We don't see that level of concern in China. I think there's a lot more value to unlock in the Chinese market, but it is too soon to call a winner in this race. So we're invested in both markets, and we think that for the next several months until late next year, this story is going to continue to develop on a similar trajectory. The level of investments that is going in is quite substantial, and I think invested capital is still patient enough and not expecting immediate revenue returns from those investments.
Polka, you mentioned that you're worried about valuations in the AI trade in the U.S. There's a lot of money that's being thrown into this whole space, the amount of money in debt markets that they're raising as well. Does that at all concern you at all, too, what we're seeing, this increased level of debt?
So actually, that is our biggest concern, not just the valuations, but the amount of debt that these companies have started to raise. Meta has announced raising around $30 billion, and these are 5 to 40-year maturity. Then we have Oracle's raised around $18 billion, and then Tencent is coming to the market raising up first time in 4 years. And if I have my numbers right, in September and October of this year, U.S. tech companies have raised over $75 billion US dollars, which is twice the average of the last 10 years. So that's scary because historically this has been a growth industry which is cash positive and self-funded. And when we've seen this trend of growth industries finding debt, it's not always panned out very well. If you look at U.S. railways in the past, or when the 3G spectrum happened in telecom sector, these companies raised enormous amount of debt, and then when everything fell apart, it took years of balance sheet to recover from that. So that's the bigger risk that we see developing. It's early stages. These are still very cash flow positive companies, most of them, but we are worried about this trend.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
I did speak with him about the call. It lasted about an hour, and it was a very positive call. The focus of the call was really Russia-Ukraine did come up, but the focus was mainly on the trade deal that we are working on with China and those relations and how they are moving in a positive direction.
Do you want to sell China some chips and keep them using our tech and our tech stack? Or do you say to them, look, we're not going to sell you our best chips. We're just going to hold off on that, and we're going to compete in the AI race ourselves. So that is the question. It's in front of the president. He's going to decide it.
Will China remain shut off from NVIDIA's most advanced chips? The answer to one of the biggest questions facing the tech world now rests with President Trump. His surprise phone call with President Xi is already spurring optimism that a thaw in U.S.-China tech tensions is underway. We'll explore the political calculus and the market reaction. Live from Hong Kong, I'm Yvonne Mann. This is Insight. Technology stocks driving gains across Asia after spurring a rebound on Wall Street. Growing confidence over a potential Fed rate cut in December, also a key force behind the rally. So wait, are we no longer worried about AI valuations in the weakening U.S. job market? We're going to view from Polka Mishra, partner at Javelin Wealth, coming up. And as China and Japan trade barbs, Beijing is pressuring other countries to side with its stance on Taiwan or stay out of the way. We discuss the implications for the rest of Asia as a spat between the region's two biggest economies worsens. ASEAN Plus 3 Macroeconomic Research Office CEO Yasuto Watanabe joins us ahead. Here's a quick check on the markets here. Asian stocks getting a lift from Wall Street's tech rebound and growing optimism over further Fed easing and further signs of cooling tensions between the U.S. and China. You heard from both Fed Reserve Governor Christopher Waller and San Francisco Fed President Mary Daly saying that they're backing a cut in December and due to concerns about the labor market. So this Fed sort of pivot, it certainly is boosting optimism here in the region. Although you take a look at U.S. futures, it looks like things have stalled a bit. We'll see how things wake up on this Tuesday morning on Wall Street. But we are up about 0.8% here in Asia. And what's driving it? It's the likes of Taiwan. It's the Kospi. It's the Hang Seng. These sort of tech-heavy benchmarks that are really kind of really rallying and benefiting from, of course, the tailwinds from the U.S. as well. So that's key to watch here. Key to watch, of course, is, of course, EM/FX currencies as well, just given what we've been seeing in the yuan, for example, the rupee coming up later on this hour when India markets open, and Taiwan dollar as well. We're hovering around that 31.43 level here this morning. So that dollar resurgence certainly is one thing we're tracking very closely as well. And of course, where does it leave the geopolitics? And let's really zoom in on the developments that have been shaping market sentiment. We've just seen two unexpected phone calls involving the leaders of three of the world's biggest economies. Japanese Prime Minister Sanae Takaichi spoke today with President Trump at his request, and she says the U.S. president briefed her on his earlier call with Chinese leader Xi Jinping. Now, that was the first direct conversation between Trump and Xi since last month's trade truce. Let's bring in our China correspondent, Min Lo, to unpack it all. I mean, so many calls. Yeah. The Trump-Xi one was certainly a surprise. What could have led to that phone call, you think?
Yeah, it's interesting. I think there's still some speculation about who exactly initiated the call because that isn't very clear from the readout. And some reports are saying, citing sources, that China was the one that initiated the call, which is quite a rare overture from China. And I think timing is not a coincidence because we came off a weekend of frenzied talks to work out the details of this Ukraine-Russia peace deal. And after that, we have the Trump-Xi phone call. And there has been many analysts drawing parallels between the Ukraine war and the Taiwan situation. And we know China is of the stance that the U.S. has a double standard. It's supporting Ukraine's sovereignty, but then infringing on China's sovereignty. So this was a call in some ways to warn the U.S. and to really set the tone there. The Chinese media readout Xinhua saying President Xi was highlighting the importance of reunification with Taiwan as a key to the post-war order, and also dragging all that World War II context, talking about how China and the U.S. fought shoulder to shoulder against fascism, against Germany and Taiwan, and how important it is to maintain that current world order.
And do you think, the sequence of events that phone call led to the phone call with Trump and Takaichi then this morning?
Yeah, definitely. Actually, it's interesting if you look at the readouts from the Chinese side and the US side. Trump's Truth Social post was very much about soybeans, about fentanyl, about trade, and didn't really mention Japan and Taiwan. But the Chinese readout heavily focused on Taiwan and Ukraine. China also mentioning, it wants to see both sides, Ukraine and Russia, keeping to a binding peace agreement. But definitely Japan was a part of it because Takaichi and President Trump had that phone call at the request of President Trump. He briefed Takaichi on the content of that phone call and also ended saying, call me if you need me. So it's a kind of leaving the door open and really shows you how strong that relationship is at a time when we know the likes of Takaichi, for example, has been touting this new golden era in in Japan-China relations. That's certainly something that I think China will be watching very carefully.
All right, Min Min, thank you. Our China correspondent Min Min Lo there with the latest. Of course, the big question now for investors is whether this thaw in U.S.-China tensions could lead to fewer restrictions on NVIDIA's chip sales to China. Commerce Secretary Howard Lutnick told Bloomberg it's up to President Trump to decide on access to the company's most advanced AI chips.
That kind of decision sits right on the desk of Donald Trump, right? He's got Jensen from NVIDIA, who really wants to sell those chips, and he's got a good reasons for it. There's an enormous number of other people who think that that's something that should be deeply considered. And the benefit that we have is we have Donald Trump in the Oval Office. He is going to weigh those decisions. He understands President Xi the best. He will decide whether we go forward with that or not. That's on his desk with lots of different advisors. The president loves to hear lots of different voices to make those kind of decisions, and he'll decide whether we sell those chips or not, and then we will go execute it however he decides to go forward.
There's a bigger question here, Secretary Lutnick, about what national security is. Is it more of a national security risk to give China some of these high-powered chips, or is it more of a national security risk to not have U.S. tech in China? Has your view on that changed?
Well, that's the question, exactly as well put and in front of the president, which is, do you want to sell China some chips and keep them using our tech and our tech stack? Or do you say to them, look, we're not going to sell you our best chips. We're just going to hold off on that, and we're going to compete in the AI race ourselves. So that is the question. It's in front of the president. He's going to decide. It's a really, really interesting question. He's got all the information. He's got lots and lots of experts talking to him, and he's going to decide which way he wants to go forward.
Secretary Lutnick, meanwhile, use of IEEPA for tariffs is in front of the Supreme Court. The feedback has been skepticism so far from many of the justices, conservative ones included. As this plays out, can you walk us through how you'd prioritize the different alternatives should the administration's use of tariffs via IEEPA get struck down?
So I was in the Supreme Court. I sat through the whole argument. The justices were tough on the beginning on the Department of Justice's, our person. But then they were much tougher on the other side, much, much tougher. So I left that day feeling very confident that we and the president was going to prevail on these IEEPA tariffs. So I think, you're hearing it from me, I think I was there in the courtroom. I heard it all the way through. I didn't sort of write my story halfway through. I sat all the way through to the end. The president's going to win that case because that makes sense for him to win. But I want to remind you, the president has lots of other authorities. He has 232s, he has 301s, he has 338s, he has a whole variety, 112, 122. He's got all sorts of other powers. And tariffs are going to be part of this administration going forward, but I don't think they're going to be necessary because the president's going to win the IEEPA case in front of the Supreme Court.
That was U.S. Commerce Secretary Howard Lutnick there. So what does this mean for investors? Joining us now is Laila Khawaja, Research Director at Gavical. Also with us is Javelin Wealth Partner, Managing Partner, Polka Mishra. Thank you so much, ladies, for joining us. Laila, I'll start with you. Obviously, there's a lot of talk about what these chip exports are going to look like out of the U.S. What's the likelihood, do you think, that the U.S. administration is seriously considering now allowing the sale of these advanced NVIDIA chips to China?
I think the chances are pretty high because the H200 is several generations behind the Blackwell. So from that perspective, giving China, I would say the third or the fourth best chips from NVIDIA makes sense, both to earn the revenue and also to have Chinese engineers hooked on the NVIDIA ecosystem, which, makes sense from the diffusion perspective, right? And then also at the same time, I would say that because US and China is really trying to, maintain the stability of the relationship, so extending the third best offering, I would say is going to be a nice show of gesture. I would say the bigger question is whether China will actually take the H200.
Right, that's the question, because they've already banned the H20 ones in the mainland, and they're urging a lot of Chinese companies to use some of the domestic names, Huawei, for example, as well. Can you clarify a little bit of what China's stance is in all of this right now?
Sure. So even though Chinese chips have been narrowing the gap in performance with NVIDIA's offerings, but the reality is that they still lag very much behind NVIDIA's best offerings in terms of the performance, the cost efficiency, and also, the software ecosystem, right? And all of this gap will take quite a bit of time. We're talking about years to close. So Chinese engineers at the current stage, they still very much prefer NVIDIA's chips over domestic chips. And the companies usually, they will opt for domestic chips mostly because Beijing asked them to, so under political pressure, and also as a hedge against US export controls. So that's why you see consistently, we have the smuggling of NVIDIA's chips into China because of that. So on the horizon of the chip performance, I would say that the H200 performs way better than any current domestic chips that's on the market. So from that perspective, it will make sense for Beijing to basically say, hey, we welcome the H200 to enter China. But at the same time, we're talking about how to maximize your gains in a negotiation, right? Because Chinese policymakers, they see that Trump is willing to walk back on national security with the H20 ban reversal, with the TikTok deal structure that does not really meet national security requirement, and also with the most recent suspension of the 50% affiliate rule, which was very significant. So if I were Chinese policymakers, I would say I will continue to show strengths and then, ask for even better deals, which would be NVIDIA's Blackwell series, and maybe also the loosening of technology export controls on chip making tools.
Polka, I'll have you chime in. It seems like you're still quite bullish on the whole AI theme right now. How do you separate between the U.S. AI trade versus what we're seeing maybe in this part of the world?
So yes, we are bullish on the AI theme. We have been for a while. In the US, I think for us, the concern is a bit more around the valuation. We don't see that level of concern in China. I think there's a lot more value to unlock in the Chinese market, but it is too soon to call a winner in this race. So we're invested in both markets, and we think that for the next several months until late next year, this story is going to continue to develop on a similar trajectory. The level of investments that is going in is quite substantial, and I think invested capital is still patient enough and not expecting immediate revenue returns from those investments.
Polka, you mentioned that you're worried about valuations in the AI trade in the U.S. There's a lot of money that's being thrown into this whole space, the amount of money in debt markets that they're raising as well. Does that at all concern you at all, too, what we're seeing, this increased level of debt?
So actually, that is our biggest concern, not just the valuations, but the amount of debt that these companies have started to raise. Meta has announced raising around $30 billion, and these are 5 to 40 year maturity. Then we have Oracle's raised around $18 billion, and then Tencent is coming to the market raising up first time in 4 years. And if I have my numbers right, in September and October of this year, U.S. tech companies have raised over $75 billion US, which is twice the average of the last 10 years. So that's scary because historically this has been a growth industry which is cash positive and self-funded. And when we've seen this trend of growth industries finding debt, it's not always panned out very well. If you look at U.S. railways in the past, or when the 3G spectrum happened in telecom sector, these companies raised enormous amount of debt, and then when everything fell apart, it took years of balance sheet to recover from that. So that's the bigger risk that we see developing. It's early stages. These are still very cash flow positive companies, most of them, but we are worried about this trend.
Lila, I was going to bring it back to you. It's interesting because everyone talks about the amount of money being spent in these AI tech giants in the U.S. In China, though, it is a lower spending model, right? And despite what you're seeing, right, even with not the most advanced chips and the competition that you're seeing, you're starting to see signs of ROI really emerging in China. Is that going to be sort of the leading edge that China's going to have over the U.S.? I look like an app like the Alibaba, for example, that's making an AI model, Quinn, sort of like the super app of the AI ages. Is that going to be where China's going to have its strengths?
Sure. I think China's main strength in AI lies in two. Number one is definitely the cost efficiency. I would say Chinese companies are super good at extracting the maximum efficiency out of any given system across many different industries. Right? So that's why you see Chinese models, indeed, they're trying to make all kinds of software innovation to extract the best out of the compute. So that's number one, the cost efficiency game. And then number two, I would say, is the energy. So while US hyperscalers have to worry about, both the AI build out and also the energy infrastructure, China always has a very infrastructure focused and infrastructure heavy approach. So China, spent the past 2 decades basically modernizing its grid. So in China, energy is not the bottleneck, and then it's also trying to compensate for the lack of compute with cheaper and abundant energy.
Yeah, Polka, we've seen that rotation within Asia, right, where some fund managers looking away from Korea, Taiwan, saying valuations might have gone a bit too frothy there, and really pivoting to the China story, maybe because of what Lila mentioned, the power grid story, the AI story that continues to maybe have a bit more legs to it. Do you see this sort of rotation having legs?
I think there's overall interest in Asia as such. Look, China is a very different market from Korea and Taiwan. They are very small markets compared to a China, compared to an India. So foreign money can rotate out very quickly. But yes, and the exposure to the U.S. is a lot less limited in this sector for China. China has shown a lot more resilience, whereas a Korea and a Taiwan are more exposed to U.S. trade policies, decision making. So that's another reason. And then finally, in China, we've seen very clear policy making over the last 1.5 years with regards to focus on, AI, tech independence, focus on industrial modernization. The theme has been very consistent, and it's a much larger, deeper market to invest in. So I don't think it's a rotation out. Those are short-term moves. I think overall investors are looking more from a diversification away from a very U.S.-heavy portfolio. And all these markets are giving investors a nice diversification opportunity and perhaps better valuations.
Lila, we haven't talked too much about rare earths. There still seems to be some questions about the whole licensing issue after, of course, this trade truce between U.S. and China that was agreed upon in South Korea. How do you think this is going to unfold, really, the rare earth licensing issue?
Sure. I think there's a pretty significant discrepancy between the White House readout post the Busan meeting, right? Because Trump basically came out and declared that the rare earth headache has been settled. But that's not the case at all. So if you compare the notes, what Beijing has agreed to is that Beijing has suspended the October 9th rare earth controls, which cover the foreign direct product rule of the control and then certain technologies, equipment, and then 5 more elements. But everything else that has been published before that, they stay in the licensing regime. So what Beijing is proposing is basically we're going to try to maybe issue non-military end users in the US something called general license, which basically give the end users, a longer validity period for the licensing. But then even the general license still is subject to the certain types of items that's being agreed upon and for the certain validity period and also over specific use cases. And then applicants still will have to submit very complex and detailed information to obtain the license. So my read on this discrepancy is that, both US and China, they're still in really active negotiations, still ongoing negotiation to finalize the final details. And then China maybe is still, try to ask for further concessions from the US in order to issue the general license or to further loosen the rare earth controls.
So do you think, if I look into next year for potential sort of flare-ups, Lila, what are sort of the guideposts and signposts we should look at for any signs of tension when it comes to US and China, whether they're actually honoring this trade truce? Do you think rare earths is still going to be that weapon that China is going to use in the longer term?
I think so. I think the truce could be quite fragile, right? Because neither side has agreed to not unleash new sanctions, right? And also we have both sides having very different perspectives of what an escalation is. For instance, with the US release of the 50% rule, on the US side, it sees this as basically closing the loophole of previous sanctions. But China saw the 50% rule as like a significant escalation. So that could flare things up. And also with Beijing's rare earth controls, Beijing, even if it agrees to issue general licenses, it can still use various other measures, for instance, administrative delays or other custom checks or whatever to try to delay the process, which I believe is not going to make Trump happy. So I would say the truce is still fragile. So we're yet to see what either side can actually agree to in the actual substantial concession to maintain the stability of the truce.
Polka, of course, we talk about this trade truce that's going to be happening for the next, 12 months or so. What's your take on markets? What does it mean for risk assets moving forward for next year?
So first of all, I do agree with Lila that the truce is very fragile. So we have to watch it on a day-to-day basis. But on the whole, it is positive for the markets, positive for risk assets as well. Look, these are two of the largest economies in the world, and they're very interlinked trade, and the trade tensions have not helped either side. If you look at, for example, U.S. exports of agri down 70% in certain sectors to China. So it's an overall positive, not only from the perspective of U.S. markets and Chinese markets, but also emerging markets. We've had this concern about China exporting deflation to all the markets, and so far it has helped because central banks have been able to cut rates. It's helped ease inflation pressures for the time being. But now that the rate cut cycle for a lot of these markets is closer to the end and not that aggressive, the deflationary pressures coming from China were becoming a bigger concern. So if China's back to exporting to U.S., that eases pressure from these markets as well. So on the whole, positive, even by that secondary effect, Yvonne.
All right. Polka, thank you. Lila, thank you. Lila Khawaja there, Gavical Research Director, and of course, Polka Mishra from Javelin Wealth Management. She's going to be staying with us for more on markets. And we're going to talk more about the Fed and the outlook for
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
All right, U.S. futures are doing this morning. We are unchanged at the moment. We'll see how Wall Street wakes up. But obviously, the optimism around AI once again has revived the Asian markets per se. Also, when it comes to the Fed as well, where it seems like you're seeing the likes of John Williams really kind of pivoting and really kind of building the case for more cuts maybe in the short term for the Fed as well. On tap, of course, we've still got Alibaba earnings later on today as well. So certainly watching, of course, any signs of AI and their development there as well. Coming up, Fed Governor Christopher Waller says he's on board for a rate cut in December as the labor market remains a concern. We have more on the U.S. rates.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
Moreover, with LIC's Jeevan Labh, we get full-term bonus and flexibility in premium payment too.
That means our journey of happiness will continue non-stop.
LIC, हर पल आपके साथ.
Welcome back. You're watching Inside. Here's a look across Asian markets as mainland China heads to a lunch break, and you are seeing, at least when it comes to the Hang Seng, we are up by 1.25% here, and really following what we're seeing when it comes to likes of Thailand here. CSI 300 is also up by 1%, but it really is that AI trade that has revived once again, and that's really is thanks to what you're seeing in that left panel, right? 77% now probability that the Fed is going to cut in December. What a dramatic reversal, right? Or at least a boost we've seen. I think just as of last week, we were talking about 30% or 35% odds. And really it has been the Fed chatter that we've seen of late. We just talked about the Waller comments. John Williams, the New York Fed president, also spoke about, building the case around cuts soon. He said as well, and as we know, the New York Fed president usually does align with the Fed chair, historically speaking. So that's what led to that massive kind of move up in Fed expectations as well. That certainly is what we're hearing. Here's more from Waller and how he's supporting further easing.
My concern is mainly the labor market in terms of our dual mandate. So I'm advocating for a rate cut at the next meeting. We're going to get a flood of data that's released, and if it kind of consistent with what we've seen, then you could make the case for January. But if it suddenly shows a rebound in inflation or jobs or the economy's taking off, then it might give concern to at least, look and see or be more cautious. So I think just because of that, you may see more of a meeting by meeting approach once you get to January.
Polka Mishra from Javelin Wealth Management is still with us. It seems like what we've heard over the weekend, Polka, is that the Fed hasn't given up on a rate cut just yet right now. The dramatic move that we're seeing market expectations here right now, do you subscribe to that? Do you think that we have a higher chance now of a December cut?
Yes, we definitely do. It's been more about Fed speak than the fundamental data because we haven't had much data come through. I keep thinking, what are we missing? Because on the basis of fundamentals, we still don't see as much of a weakening in labor market as is being highlighted in these discussions. We haven't had the data. Last unemployment number was around 4.3%, and NFP September added 119,000 jobs. So it's not alarming yet, but at the same time, inflation is still sticky at 3%. So unsure how much of that pressure is year-end GDP expected to go down, so Fed feels the need to support the economy because of that. But yes, it seems like concerns around labor market are dominating over getting inflation back to the 2% number right now.
They seem to suggest that, at least what we heard from John Williams, is that downside risks to inflation, to labor market seems to be easing. Upside risks to inflation is also something of less of a concern. I'm just wondering, in terms of what you're seeing, I should rephrase that. Downside risk to labor market is actually increasing. Is that how you see it that way in terms of the Fed mandate right now?
Things have changed recently. One, it's changing on a daily basis, as we were discussing just a few minutes back. Look, trade tensions easing with China do help the case for inflation. So there's that. U.S. starts importing Chinese goods. That's going to help the U.S. consumer. There is the case of consumer confidence dropping significantly to multi-year lows, even though retail spending is continuing. So probably the intention there is to arrest that before it all comes crashing down. U.S. consumer has shown surprising resilience, but it can last just so long. And there is now that divide that is happening between the various income categories. So the lower income is starting to feel the pinch. So I think that's a risk. And then, of course, if you're forward thinking, Fed's been data driven in the past. We don't have the data, but thinking forward, of course, job loss to AI is also a concern, although immigration policy should create more labor supply to
गाइस ये नेचुरल गैस में थोड़ा ध्यान रखना है, इसमें ये सेलिंग का जो ट्रेड लगाया है दैट इज अ रीटेस्ट ट्रेड एक्चुअली, फेक ब्रेकडाउन ना हो। ठीक है, क्वांटिटी का ध्यान रखना, ये नेचुरल गैस के ट्रेड में बोल रहा हूँ। क्योंकि परसों भी ऐसा ही हुआ था कि लेवल पे सपोर्ट ब्रेक हुआ, रीटेस्ट करने की कोशिश करी, रीटेस्ट नहीं किया, रिटर्न कर गया, तो ऐसा ना हो पूरा फेक में निकल जाए। इवन तो ब्रेकडाउन तो हो गया वैसे, बट कई बार इस तरह से फेक ब्रेकडाउन भी हो जाते हैं।
Asia balance sheet, balance sheets are fairly strong. Results have been strong across U.S., Asia, all the geographies except maybe Europe is beginning to struggle. We also think that as the U.S. rate cuts start, that's going to bring more liquidity into the markets. That's going to help further, and trade tensions easing contribute further. So there's fewer risk elements, except for, of course, geopolitical escalations that keep happening. We're getting a bit comfortable about U.S.-China relationships, but that can be very volatile. One single event can trigger another avalanche of tariffs. So it's going to be constant watch, but at this point, we think until the first couple of quarters, we're well positioned.
The 2025 was a year where I think investors really started doubting this whole U.S. exceptionalism trade. Do you think that has changed in any way? I mean, do you think that we could be seeing a reversal just given, if the Fed's going to resume cuts next year, are we sparking more optimism back into this U.S. market now?
I think the diversification away from the U.S. was not only driven by, the U.S. exceptionalism fading away, but it was also around the inconsistent policy, the messaging, tariffs coming in, tariffs going away. So it's become a bit difficult to do the trade with the U.S. So it's more a diversification away, and I think now that trend is.
इसको ना रीटेस्ट के ट्रेड को छोड़ दो, रहने दो। नेचुरल गैस का रीटेस्ट का ट्रेड ना इसको लेना ही मत। ठीक है, छोड़ दो इसको, हो सकता है रीटेस्ट में आ जाए, लेट इट गो।
1 year. So it's not that investors are suddenly going to move away from the United States, but they are getting concerned about this extremely large allocation to one economy where we cannot rely on what the policy is going to be a quarter from now. So that risk aversion is also causing that diversification away from the U.S.
What does that mean for the dollar? It seems like, much of this year was about the softness of the dollar. We've seen a bit of that resurgence come back in some way. Is that strength in any way long-lasting to you?
I think dollar, we would expect gradual weakness in dollar next year, especially as we see the Fed rate cut cycle starting. And if other central banks have already done their rate cuts, so we will see some weakening, but we don't see a big movement in dollar. It is still a currency of choice. It is still the most traded currency. So slow decline in US dollar, but remember, it's still at a very strong position historically.
And then what it means in terms of the relationships that we're seeing with other asset classes. I mean, should we see a return of relationship with higher dollar, higher U.S. Treasury yields? Is that going to resume itself for next year? How are you looking at these correlations now?
Yeah, that's a tricky one. U.S. Treasuries, especially, we're concerned about the high level of deficit. So we do feel that unless there's income coming through, unless there's tariff income coming through, and significant one at that in U.S., at some point investors are going to want to be paid a lot more for holding U.S. Treasuries. So we think that there could be further weakness, and as rate cuts start, it's just going to start being less attractive for the investors. So we feel longer dated US Treasuries will remain under pressure.
What role does gold still play in portfolios, Polka? I mean, I'm looking at around 4,000, sub 4,200 right now for gold prices. Is that still going to be a big sort of portion of portfolios next year? And what role does it play?
So historically, it plays the role of a hedge, but this year round, it's moved along with the markets and more so. We continue to hold gold in our client portfolios depending on their risk profiles. The allocation varies. Central banks are still continuing to buy gold, so there's support for that. And look, it's all looking a bit easier now with discussions, possible discussions with Ukraine, Russia, US-China trade tensions easing up, but the risk of geopolitics is still quite high. The tariffs are still high. I mean, we're seeing some easing, but we're still in a very high tariff regime. Trade is not all that easy. So I think gold still continues to play a big role as a hedge in client portfolios.
All right, Polka, thank you. We'll have more from Polka Mishra there, Javelin Wealth Management partner. She's staying with us as we take a deeper dive into Indian markets, of course, as they open up here on this Tuesday morning, with RBI Governor Sanjay Malhotra hinting at a possible rate cut in its meeting next month. You take a look at how we are set up here when it comes to the pre-market session. Sensex, we are seeing some moderate gains to the upside, about 0.1%. Of course, we're focusing a lot on this whole AI trade and the wobbles behind that. Does that give it more life to the software?
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Talk about the RBI now. India's central bank governor Sanjay Malhotra says recent macroeconomic data strengthens the case for a December cut in the benchmark rate. The RBI has lowered the repurchase rate by 100 basis points since February, but kept policy steady in October. Let's get to our Bloomberg's economy, trade, and investigate agencies reporter Shruti Srivastava coming up here as well to talk a little more about that, right? The scope for a policy cut in December. Obviously, there's a lot of things to really kind of weigh on the face of all this here right now. Let's bring in Polka Mishra as we start to kind of bring up Shruti in just a bit here. But Polka's still with us in Singapore from Javelin Wealth Management. Polka, you talked about how you're positive on India. I mean, this has been one of the most, I guess, years for India where it has had the biggest sort of underperformance among emerging markets in decades, really. What makes you positive about India still?
So for India, we're positive more based on the fundamental story. Economic data is all lining up. One of the largest economies growing at around between 6 to 7%. Hard not to like. Demographics are positive. Young population. There is a lot of investment that's happening across sectors, infrastructure development, which is key for an emerging economy like India. And then, of course, the fiscal and monetary policy has worked very well together. So all those make it a very long-term positive story for us. Yes, we'll have years when this year has been difficult for India, especially with the U.S. trade tariffs. So we'll have those years where you may not have that outperformance. But on the whole, from a long-term perspective, I think India is geared well for growth.
How do I look at valuations? Do you think they've corrected enough? Have they bottomed? Is it, are we likely to see some re-rating when it comes to the valuation front in India?
Yeah, so valuation in India is often tricky because it always tends to look expensive. I think on a relative basis, India is a bit better priced than some of the other markets that have run up this year. But for us, it's more, yes, we do continue to expect re-ratings to happen. Earnings numbers have not been disappointing. They've been quite fair. Of course, there are some sectors that have struggled a lot more because of the tariffs from United States. So, yes, we do think earnings growth to continue and to support market growth.
I believe we have Shruti now. I want to bring back Shruti. Oh, sorry about that. I've been told that she's not ready yet. Let's get back to Polka when we talk about India. Okay. So valuations, maybe this might further reset. It's just really interesting, right? Because I think at a time when you start to see AI, there are some wobbles out there over valuations, as we talked about, Polka. You know, there's analysts out there that say maybe this can actually help some of the software companies in India, given the fact that there was this narrative that maybe the whole AI sort of, wave is going to really upend the software industry in India. Do you see value in that? Or do you see some sort of signs of reversal of that whole narrative now?
I think on the AI story, India is still quite far behind in terms of compared to where, say, China and the US is. So it does have a lot more catch up to do. It's still also behind in terms of manufacturing. So it's been a lot more services, but then it's going to require massive investments for India to catch up with these leading economies. So China is investing hundreds of billions of dollars. Of course, we've seen the numbers from US, but I think in India, it's probably tens of billions that are being invested by the government right now, and we are not seeing private sector investments to that extent. So there's still a bit of a pretty significant catch-up for India to do. So we're not exactly investing in India for the possible AI story at this point, Yvonne.
All right, Polka, hold that thought. I think we've brought back Shruti Srivastava there. She is our economy, trade, and investigating agencies reporter, and really talking about the RBI and what we've heard as well, Shruti. It seems like they're warming up to this idea of a cut. Is a rate cut in December a given?
So while it's very difficult to say, whether the Monetary Policy Committee, which is a 6-member committee, it will take a call on cutting interest rates in its policy in December first week. But RBI governor certainly indicated there is room for rate cut, there is scope for further rate cuts, and all the high frequency indicators and the macro data which is coming in, it supports the view of the governor that there is scope for the rate cut in December policy. The inflation, it was stood at 0.25% in October. This is the lowest since the current series started in 2012. So inflation is currently undershooting the RBI's forecast, which is 2.6% for this year. And economists believe that it's going to further undershoot. Therefore, the markets have, started factoring in the fact that probably there is a possibility of a rate cut in December policy. I think we will have to wait for the MPC to take that call on December 5 when they meet and take a decision on the rate cut.
And Shruti, we talked about the currency, right? After it hit a record low on Friday, we've eased up just slightly, but we're still hovering around those record lows right now. What do you think is the central bank's view on the currency now?
So you're right. Rupee has been one of the worst performing currency in Asia this year. In fact, it shed, I think, around 4% this year against the dollar. As you said, on Friday, it fell to a record low. It neared almost 90. But the RBI has been clearly, it has been intervening in the market to keep the currency from, being too volatile. But yesterday, RBI governor said that, 3 to 3.5% decline in the currency annually is very typical. It's natural for the rupee to weaken. RBI does not fix a particular level of the currency, but it will continue to intervene to contain the volatility which the rupee has seen. Definitely. Rupee has been volatile for a couple of reasons. Not having a trade deal with the US, that uncertainty is definitely weighing on the rupee. The trade gap has widened, to a record low. So that too has bbeen weighing on the Indian rupee. So these are some of the reasons why the rupee has been pretty volatile. The RBI did not intervene on Friday, but the governor clearly indicated that RBI will take measures to contain the extreme volatility in the rupee.
All right, Shruti, thank you. Shruti Srivastava there, our economy, trade, and investigating agencies reporter in New Delhi. Let's get back with Polka Mishra with Javelin Wealth Management. And Polka, you mentioned that maybe you're not looking at the tech trade in India per se, but what excites you? What sectors do you think are going to have some good outperformance here next year and certainly, can actually revive this market?
So we like some of the more domestically oriented sectors because, as you just talked about it, the trade tensions with the U.S. still haven't abated. There is no deal, so avoid exports, avoid the industries that are further exposed to trade tensions. If you look at what's been happening on the ground, the financial services, insurers, for example, or asset managers are classes that we like because of the growing middle class, their needs for insurance, health insurance specifically. There's a lot of development that's happening in the rural sector after the tax cuts and GST reforms, as well as the investments that have gone into the infrastructure. So sectors related to that, for example, commercial vehicles, are quite interesting to look at. And you're seeing those investments coming from the farmers in India. So we look at more of those sectors. Consumer is still attractive, especially after the GST reforms, but it's inflation's been low. But yes, I think that will probably start to get dented again if tariffs stay high for a very long time, and job creation, which is a big problem for India, is not accelerating because we're not seeing those investments from the private sector yet.
How do you look at what the RBI, I mean, they're talking about maybe rate cuts could be happening in December. The rupee certainly is a factor in all this, and the weakness in that is, how do you think that factors into your thinking around India now?
Yeah, so RBI has the room to cut. Inflation has been in check. Monsoon's been good. Actually, monsoon's probably been a bit excessive, which has resulted in the infrastructure numbers being flat. The concern, and look, there is a need to boost the economy with certain industries being affected by the tariff tensions. And the longer it goes on, the worse it is for the Indian economy. So that is a big risk. RBI's rate cut, of course, has that they have to strike the balance with the rupee. I think RBI's objective is to keep, they don't want to control the directionality, but the volatility of the Indian rupee. A weak rupee is actually not so bad at this point, Yvonne. So Indian rupee was one of the stronger currencies last year. It's weakened this year, but as the tariff pressures are coming on, exports are getting limited, a weak rupee actually helps cushion that blow. So I don't think that the RBI is going to focus on strengthening of the rupee. It doesn't support the economy at this time.
You mentioned about all the exciting stories that you see in the region, whether it's India, whether it's Japan, whether it's Korea, whether it's China. Where do you think out of those you have the most conviction now, Polka?
So for us at this point, we do like Japan, except for the trade, the tensions that have recently developed with China. So we're watching that very carefully, and we do like the Korea story as well. The reforms in Korea are very impressive. There's a lot of policy making that is going in the right direction. They're making their financial markets attractive. Trading has become easy, FX markets being open 24 hours. So a lot is being done. So that KOSPI 5,000, it kind of looked like a far-fetched goal when we talked about it early in the year. It looks very real. So that's Korea. The way I call Korea is Japan on steroids in terms of reforms. So definitely one of the exciting stories for us.
Polka, thanks for staying with us this hour. Polka Mishra, their partner at Javelin Wealth Management, joining us out of our Singapore studios. And we're taking a look when it comes to Asia FX here this morning. Dollar is a little bit on the weaker side of things, given just we had a fresh U.S. data that's coming up. And of course, the market pricing around, 70 to close to 80% odds that the Fed's going to cut in December. That's why you are seeing, though, some strength coming through. Dollar yen, 156 levels here as well. So dollar yen did fall. There was a comments from Koichi saying there was a high sense of urgency when it came to the currency and the weakness that we've seen. 709, we're sub 710 for dollar China here this morning. So Asia FX is catching just a slight bid here this morning. Of course, we'll see how the rupee fares given the fact that we have bounced above, of course, that record low that was reached on Friday as well. Obviously, when it comes to what you're seeing, outflows out of the markets like Korea, for example, that certainly has weighed on the currency as well. The won now trading around 14.75 here this morning. U.S. dollar is flat right now. We have more to come on in the next hour of Insight as well. Of course, we're going to preview the Alibaba earnings set to come out. Bloomberg Intelligence is Robert Lee and Catherine Lim are joining us in the next hour. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Indonesia holds 40% of the world's geothermal potential, but has tapped just 9% of its reserves. It's like an inexhaustible battery that never gets plugged in. Geothermal delivers clean power 24/7. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking these resources with continued investment. Soon it will pass 1 gigawatt of capacity, helping anchor Indonesia's clean energy future.
I think it is an open question whether Trump will be willing to negotiate elements of U.S. longstanding policy on Taiwan, perhaps in exchange for more tactical economic concessions. If the U.S. shows that it's willing to negotiate on matters of its own national security, that's going to weaken its hand on negotiations across the board.
CSIS Freeman Chair in China Studies Senior Fellow Henrietta Levin there speaking to Bloomberg about Chinese President Xi Jinping's move to press Trump when it comes to Taiwan. And when we take a look at markets, though, certainly that's not the main thing that's really driving this rally that we're seeing in Asia Pacific. Although when you take a look at the likes of Kospi and Nikkei, they've actually kind of turned flat to actually negative in the last couple of minutes or so. So certainly that's one thing to watch as well. So that momentum seems to be fading just a little bit. Taiwan is still seeing some gains, about 1% here right now. Of course, mainland markets are in that lunch break here right now. India markets are also unchanged at the moment. U.S. futures are slightly in the red as well. And you take a look at how Bitcoin is faring. We're still trading by 1% lower on an 87,000 level. So that cratering when it comes to cryptocurrency still continues here for today. Dollar yen also around that 156 level as well. So, there was all this optimism around Fed rate cut bets, the nearest 80% chance that maybe they'll be able to cut in December certainly is what lifted markets there. It seems like things are fading just a little bit now, halfway into the session, of course, for some of these markets here as well. Key to watch is, of course, SoftBank. Take a look at what's going on there. Certainly when it comes to the AI trade, they are as the proxy, and there you go. We're seeing 10% losses there in Tokyo, certainly there. So extending losses for SoftBank. So we are seeing some of these AI bets unravel here today. Obviously, there was a lot of talk overnight about the NVIDIA story and how we saw that stock fall in the back of what we heard from Google's Alphabet reports that Meta is going to be buying a lot of those chips as well. And is that going to be a key alternative to the GPUs of NVIDIA, these TPUs now from Google's? That certainly is the question for the market here today, and SoftBank is sort of feeling that here as well. Let's get back to the geopolitics. So Japan has now written a letter to the UN criticizing China's earlier missive to the body. Now Japan accuses China of misrepresenting remarks Prime Minister Sanae Takaichi made on Taiwan. Let's bring in our China correspondent, Min Min Lo, on what this letter said and how is China likely going to view this.
Yeah, both sides are just trying to rally the world to pick their side because China sent this letter to the UN and now Japan sent its own letter criticizing the Chinese letter, saying that their statements were lacking factual basis, basically, and saying that they misrepresented what Takaichi had said. And the letter also said that Japan is not threatening self-defense or the use of force in the absence of any armed attack. And we're going to the semantics here. It's because the Chinese letter, a summary of that letter stated that this is the first threat of force that Japan has made on China. And I think just reading that Japanese letter, it really doesn't go to the crux of the issue because China is still concerned that Japan is not closing the door to invoking self-defense in the event of an armed conflict with Taiwan. So basically both sides trying to, rally the rest of the world to pick their sides, and China also invoking this World War II era clause under the UN Charter called the Enemy Status or Enemy States Clause, which says that they can act in self-defense against fascist or antagonistic countries like Japan, like Germany. But of course, Japan is saying that this is essentially outdated by this time. We are no longer in World War II.
In the crux of all this is Taiwan. How are the Taiwanese, dealing with this right now?
Yeah, it's interesting. Taiwan has actually come out to say that it's the best thing that happened to them, that in that phone call that Trump and Xi had, Trump did not specifically mention Taiwan in his statement on Truth Social, and they said that this is a good sign. It shows that Taiwan is not being used as a bargaining chip along the likes of soybeans and fentanyl, for example. And Taiwan has been showing pretty subtle signs of support towards Japan and the U.S. For example, you have Lai Ching-te posting on social media on X a picture of himself eating sushi with Japanese text, and also encouraging Taiwanese residents to travel to Japan to buy Japanese goods, in stark contrast to how China had advised its people not to go to Japan. So it's kind of carefully calibrating its messages here in order not to anger China, but at the same time expressing its support for Japan.
All right, Min Min, thank you. Our China correspondent Min Min Lo there with the latest. Let's get more now on the global economic implications of this China-Japan spat. Joining us now is Yasuto Watanabe, Director and CEO at the ASEAN Plus 3 Macroeconomic Research Office. The office serves as a policy advisor to China, Japan, Korea, and ASEAN member states. Yasuto-san was also the Senior Deputy Vice Minister of Finance at Japan Ministry of Finance. Yasuto-san, it's very great to have you here. I have to get to the news, of course. Given that China and Japan is part of this whole ASEAN Plus 3, how do you see this all playing out?
So, as a representative of the international organization, I wouldn't make any direct comment on the diplomatic tie, but what I can say is the economic relation, economic tie among the member countries, among the ASEAN Plus 3, including China, Japan, Korea, is quite remains stable and also strong. And if the case of the macroeconomic implication called the AMRO is economic surveillance arm, so that we will closely monitoring the situation.
So far, we've seen China roll out measures to curb tourism, seafood, entertainment like films in Japan. What sort of hit do you think this could have on the Japanese economy?
So far, we haven't seen any specific data about any released one. So, for example, like the tourism, maybe discouragement from China to Japan. So we will closely monitoring with if the case of that there would be some implication for the macroeconomic perspective. But I myself is rather interested in the move from China to Japan will be suspended. Maybe those tourists, the alternative route can be the Korea or the ASEAN country or the domestic expenditure. So that in a sense, if there would be some macroeconomic implication, we will keep monitoring it if needed.
This brings back to what, 2010? That 2012 sort of spat that China and Japan had as well, where China did actually use this weapon of rare earth shipments, where they did actually withhold those to Japan. Do you think that they would be using that card once again this time around?
Unfortunately, I am not in a position to make that comment. So we are rather the macroeconomic surveillance, not for the political analysis we would make.
Do you see any sort of off-ramps then on the horizon?
So far, we don't have any data and also statistics yet.
Okay. Let's get your take on really just overall what you're seeing in ASEAN. Certainly there's been optimism when it comes to data, right? This resilience that we're seeing in exports and trade in parts of Southeast Asia. Do you think we were just over too concerned about what tariffs could do to this part of the world? Were they just overblown, these concerns?
The answer is yes and no. Our projection for the next year's ASEAN plus 3 wide the GDP growth would be the 3.8%. This year, previously, the 6 months ago, our projection is 3.8%, and we upgraded for 4.1%. Mainly for the 4 reasons. One is, as you mentioned, for the export is better than expected, especially related to the semiconductor area. The second one is the conclusion of the deal with the U.S. And another one is the FDI to the ASEAN is more than expected. And the fourth one is the macroeconomic, the measure taken by the authority, including the monetary easing. Half of the monetary the authority taking the easing the policy for within this year. But of course, for the next year's outlook, we are a bit the easing to from 4.1 to 3.8%. Of course, the kicking of the U.S. tariff measure will be kicking for the whole year. But the foundation is quite resilient, as we mentioned, for the FDI inward to the ASEAN and also for the intra-ASEAN plus 3 regional trade is quite strong. And especially if we look at some statistic right here, from 1 to 3 quarters data of the investment, for example, for the case of Thailand, almost double for the last year to this year. Also for the case of Malaysia, the almost 20% increase. The Vietnam case is 15% increase.
So, given those numbers, I mean, are you expecting any sort of fallout, given exports in the fourth quarter or even in 2026?
But it's up to of course, for it's the internally ASEAN plus 3, quite fundamentally resilient. But of course, the Trump U.S. tariff will be implemented all over the world. So the directly, indirectly, that affected to the ASEAN region. That's why our projection from 41% to the 3.8% growth.
Obviously, President Trump has campaigned on this whole America First sort of stance and really kind of pulling back businesses back on shore. Do you foresee a massive pullback in U.S. investment in this part of the world?
So investment-wise, and of course for the more than that, the cloud in the sky for the coming year is of course some trade deal already done, but still there is some room for another trade negotiation for the semiconductor and also pharmaceutical area, and still the transshipment issue is still unclear. So those unclearness will create for some room for the uncertainty. Uncertainty is also for the hindering of the private sector's decision making, especially the investment to the other country. Yeah.
Do you see China at all in its role in filling that investment gap that perhaps the U.S. has stepped back? China can step in the region?
As the statistics say, they're in that trend, but it's not completely replaced by it. So, of course, for the all country, some keyword is the flexibility, agility, and also for the diversification. Diversification for the broader portfolio, not necessarily between the ASEAN plus 3 and the U.S. and also Europe, Latin America, and Africa, everywhere they are talking about it.
ASEAN certainly has been rolling out stimulus. Take a look at Thailand, Indonesia, Philippines, to really at a time when you're seeing consumption and investment slow. How effective have these policies been, and are you concerned at all about fiscal slippage?
But the good thing is the ASEAN plus 3 authorities, most of cases, they have still room for the policy room, especially the monetary policy side, still ample room for the addressing in the event of the stagnant economy will the experience next year. Also for some authority already taking the good step for the fiscal expenditure. Yeah, of course, for the sustainability issue that they have to be mindful, but still they have the policy space to do it.
Also, with central banks in this part of the world, they're also dealing with quite a bit of currency weakness. Do you think that these central banks can still tolerate, the currency weakness as they continue these rate cut cycles?
The currency weakness of which country you mean?
In ASEAN, right, where you're seeing EMFX certainly we're seeing weakness. when it comes to their currencies, given the strength of the
at
U.S.
this
dollar?
moment, this year's performance of the most of the ASEAN countries' FX is quite robust. So in that sense, of course, on top of that, the inflation is rather contained for the compared to the last year. In that sense, there's still the ample space for the policy accommodation, especially for the monetary policy side.
Do you see any sort of risks for ASEAN for next year? What is the biggest risk that you're seeing on your radar now?
Biggest risk?
Risk
for the ASEAN. Yeah, actually, if we start to count a lot of risk, and a lot of the structural things like of course, for the disruption from the global market, that's one thing, and also for the AI, kind of the transformation for the industry, but it's a kind of long term. And of course, for the trade issue, that's the most confronting by the most of the ASEAN countries, I think.
Yasuto-san, thank you so much. Yasuto-san Watanabe, the Director and CEO at the ASEAN Plus 3 Macroeconomic Research Office. Still ahead on Inside, exclusive interview with the State Street Global Advisor CEO.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment.
Well, State Street Global Advisors says a 25 basis point Fed rate cut in December makes sense for the U.S. economy. The CEO, Ye Shin-hong, also told us exclusively that she sees reductions next year totaling 50 to 75 basis points.
We still would very much like to see a 25 basis point cut from the Fed. We think inflation is more contained, even though maybe there's higher goods inflation. Services are softer in the housing residential sector. And at the same time, we're very worried about the employment picture. Unemployment has ticked up, hiring has slowed down, and consumer confidence is weaker. And so to really protect against this, we'd like to see the Fed take that 25 basis point cut. A little less clear as we move into 2026. We may be not calling for as much as 100 basis points, but somewhere in the neighborhood of 50 to 75 basis points makes sense to us.
I also want to talk about how investors are positioning amid all these different cross currents, because one of the most interesting stories to me, I think, of 2025 is still this red hot demand for cash. You take a look at money market funds, you take a look at cash like ETFs, the lines just keep going up, even though you do have the Fed starting to reduce interest rates here. And I wonder, first off, what you make of that and what will finally break the fever. Is it lower interest rates or is it something else?
Well, the need for income is very significant, and whether that's because of sort of developed economies have aging populations that are looking at cash. Cash is providing multiple uses within a portfolio. It's generating income. It's dry powder should there be a major correction. And it also helps to diversify the overall portfolio. And for that reason, we think cash probably stays at these sorts of levels. May come down, but I think that might need some greater investment opportunity than perhaps investors see today.
It's interesting to hear you say that, because I talk to a lot of folks, a lot of investment professionals, and it's the most urgent question they have to answer is how do you get investors out of cash, get them off the sidelines, so to speak. But it sounds like you're saying this isn't necessarily the sidelines. That's not necessarily the way to be thinking about cash.
I think that's right. And what we're seeing is just a continuum of cash, if you will, right? Short-term deposits and money market funds to short duration and the like. And we do see some argument for extending maturity slightly in the short and intermediate term of the curve. At the moment, credit spreads are incredibly tight, investment grade and high yield. And so moving along that sort of treasury spectrum, we think is warranted. But again, it's not the same as a lot of cash moving into the market.
Mm-hmm. And so cash being one of the big stories of this year, so too are private markets. And I know that, of course, in November, you took a minority stake in Collar Capital. That specializes in the secondaries market for privates. What is the plan there with that stake, and how does it fit into your overall strategy when it comes to private markets?
We're very excited about this partnership and ownership interest in Collar Capital. They're one of the very first to develop the secondaries market and have capabilities on private equity and private credit secondaries. And if you look at the broader volume, secondaries are only 1-2% of all fundraising that happens. And so this is a segment that's been growing at 15% per year. We think has a chance to triple in the next 5 years. And so this liquidity aspect and being able to give investors access to already invested portfolios, we think is a really compelling proposition that we're looking forward to introducing more of our clients to their capabilities and looking at what we can do together from a product collaboration standpoint.
Interesting. So when it comes to the secondaries market, it sounds like you're basically trying to position to take a bigger piece of what is a growing pie.
That's correct.
Interesting. And I know that you've said in the past that overall that you would be in the market to buy a private asset firm. Is that still the case?
We're very excited about this acquisition. We'll continue to evaluate if it makes sense to add other capabilities. But for the time being, between our interest in Collar Capital, our partnerships with Apollo, Blackstone, Bridgewater, bringing their really great capabilities to market alongside our ETF strengths, is keeping us really quite busy.
And of course, State Street Investment Management, the first out of the gate with a private credit ETF. And I want to talk about retail demand for private assets more generally, because you think about the turbulence that we've seen in the past couple weeks, of course, when it comes to private credit, when it comes to, for example, Cockroaches and Blue Owl's pooled fund merger. Has that dampened at all retail enthusiasm to get access to some of these private strategies?
I think from where we sit, we continue to see investment discipline in the private credit arena. Defaults may be rising slightly, but from a very low base. And some of the big profile ones we think are more idiosyncratic. And at the same time, there's a secular long-term trend of the private markets providing credit capability and availability, given that the banks are more limited. And so the liquidity aspect, the income aspect of private credit, we see continuing to be in demand by retail investors. One area that we're focused on is in the defined contribution arena. We're one of the largest USDC managers, and we've been first to market to introduce a target date fund with a 10% allocation across private equity, private credit, and real estate. And we think it makes sense for individual investors to really participate in this part of the market that is showing tremendous value creation, yet they don't have easy access.
And Yishin, we only have a couple minutes left. I have to ask you about ETFs. That's, of course, the sandbox that I play in the most. And what's interesting is you think about share classes. Dimensional Fund Advisors, for example, last week finally got the green light from the SEC to launch ETF share classes of existing mutual funds. I know that State Street Investment Management has basically asked for the reverse, to launch mutual fund share classes of existing ETFs. Given that approval hasn't been issued yet, let's just talk about what dual share classes, if improved en masse, could mean for the asset management industry and what it could look like 5 years from now when we finally get up to speed here.
Well, for the most part, asset managers are looking to issue ETF share classes off of their mutual funds. And investors will benefit because they won't have two separate vehicles, but they'll enjoy the scale and size and the cost efficiencies with a single asset base. We're a little different. We're a very substantial ETF player. We're also very significant in the retirement arena. And we're excited to be launching mutual fund share classes off of our ETFs, which are already very low cost, very efficient. And by virtue of the ETF structure, we lower transaction costs. And we think that'll be a substantial benefit to so many retirees.
Interesting. So just to tie a bow on that, so basically, if you were able to launch mutual fund share classes, you would be able to put some of your ETF strategies as mutual funds into 401ks.
Absolutely.
And that was State Street Investment Management President and CEO Ye Shin Hong speaking exclusively with Bloomberg's Katie Greifield. Here are some other corporate stories that we're following for you today. Ray Dalio says the multi-strategy model that's taken Wall Street by storm is unlikely to last. Dalio says the siloed approach makes it harder to build meaningful relationships, hurting employee continuity and competitiveness. Here's some of what he told Bloomberg's Odd Lots podcast.
I think it's not going to last. There's different ways to play the game. That's a totally valid way to play the game. Maybe it's a totally fine way for the investment management, but it's not a fine way for building a 50-year-old. I did this. I built a 50-year-old organization.
And Apple shares gained after the tech giant confirmed a reshuffle in its sales division. Sources earlier told Bloomberg the iPhone maker has eliminated dozens of sales roles in a bid to streamline the way it offers products to businesses. The affected positions include account managers and staff who operate Apple's briefing centers and product demonstrations. Bloomberg has learned that Syngenta Group is considering an IPO in Hong Kong. This comes more than a year after it withdrew plans for a $9 billion listing in Shanghai. Sources say the Chinese-owned agricultural tech company is holding preliminary talks with financial advisors and may list in Hong Kong next year. Take a look when it comes to the markets here. We are seeing momentum being sapped here in the Asia region. The Kospi is seeing a dramatic reversal of more than 3% to the downside here this morning. S&P futures at least are stable, but we are talking about not much really conviction here right now. We're flat when it comes to U.S. futures here this morning. The U.S. dollar catching just a slight bid here. Coming up, Alibaba is set to report its second quarter results, with most analysts expecting faster cloud revenue growth thanks to AI.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Welcome back. You're watching Insight. We're tracking gains across Asian markets. And we have lost a bit of momentum on this Tuesday morning. Take a look at what happened in Kospi there. We basically saw a 3% sort of reversal in the last few minutes or so. Topix is also in the red here right now. And watching very closely, Taipei is still doing okay. But we're watching very closely what happens here, right? This whole AI trade. And what's next? The next catalyst potential to watch could be what could fire up Asia's AI-driven rallies would be Alibaba's earnings if it manages to beat estimates. It is scheduled to report its second quarter results today, and analysts expect to see an increase when it comes to its cloud revenue growth. Let's bring in our Bloomberg Intelligence senior analyst, Robert Lee. He's here with us in Hong Kong. So in terms of the cloud business, what are you expecting, Robert?
Okay, well, it's going to dominate, if I can get the words out, the headlines again. I think it's all about AI when it comes to Alibaba. So in terms of our numbers, we're looking for the cloud revenue growth to accelerate to the high 20%, maybe even the low 30s. So that's going to be a pretty good print on that front. But as you're aware, there's a lot of pricing pressure, heavy competition within the core of their business, which is e-commerce. We've seen, weakness from JD.com and then in previous quarters from Meituan. So as Alibaba is looking to defend its turf under heavy competition from some of these more nimble rivals, they're subsidizing, they're sacrificing margin to try and secure their market share. So the real risk factor is on the margin for their core e-commerce business. And then another point that I may have made before is, whilst their headlines on AI are, really impressive, it's not really big enough to move the needle in terms of their group earnings. The earnings contribution coming through from cloud is relatively limited. So whilst it's a driver of sentiment, it's going to have no major impact on their bottom line performance.
So you don't think this is what we're going to see in cloud is going to transform its earnings?
Just to quote a number at you, Alibaba's capex has gone up nearly 4 times from about 2 years ago, from $3 to $4 billion US to 15 or 16 billion this. Yet the incremental, I'm having problems with my words today, the incremental or additional profit contribution within that cloud business is only about $600 million. So the ROI is not very high at all. And in fact, a rising cloud contribution is actually diluting their overall group margins. So again, it depends on market sentiment, market mood. It's a driver of sentiment, but in reality, it's too small to make a decent impact to the bottom line.
So where are we in this whole AI race then? We look at US, we look at China. Who's winning so far?
I think if you look at some third-party benchmarking services, I think most people would agree just from casual interest, ChatGPT is still the premier, AI agent out there.
Yeah.
But if you look at the actual stats from third-party benchmarking services, the performance premiums are only 10 to 11%. So it's not an order of magnitude higher. And the reason I raise that is the American players and OpenAI in particular are spending substantially higher levels of CapEx than their Chinese counterparts. So China's really doing it on a budget. It's more focused on short-term wins, on productivity savings within its broader economy. So it's a much more pragmatic strategy that's focused on near-term wins.
Yeah.
So I think that's the major difference between the two. And as I said, America has a technical lead on the software side. But again, it's not an insurmountable lead at the moment. And again, that reflects the very limited barriers to entry or low barriers to entry on the AI software side. Again, as I've quoted before, there are more than 500 large language models in China at the moment.
We're getting one almost every week, I feel.
Absolutely.
The news overnight was about what we heard from Google, right, and Alphabet and this potential deal with Meta, that Meta's going to buy all these different TPUs now. And people are saying that the narrative is this is going to be a close alternative to NVIDIA's GPU chips. How do you see that, Ferry?
I think that's exactly the case because NVIDIA is, maybe not by its own choosing, it's a monopoly supplier at the moment. And I think the economists would describe its profits as being supernormal, abnormally high.
Yeah.
This level of high profit and high margin and high pricing is probably not sustainable in the long term. So again, it's back to business school textbooks, economic textbooks. That will attract competition, or it will force their customers to look to alternative suppliers or to design their own chips. That's what you're seeing in the US, or beginning to see. And also that is mirrored in China as well, with the likes of, in fact, Alibaba and Baidu designing their own chips because of the very, very tight supply at the moment. So I think we'll continue to see that over the next 18 months or so, absolutely.
Robert, thank you, Robert Lee there, our BI senior analyst on what to expect when it comes to the Baba earnings coming out later on tonight. And subscribers can, of course, turn to your terminal for more of that coverage. T-Live Go is your function for the latest updates, plus commentary and analysis from our expert editors. And speaking of AI, right, robo-taxis are also a hot topic among investors. And here's a look at how shares of WeRide are trading in Hong Kong through this morning's session. We're up about 2% after the firm trimmed its third quarter net loss on increased orders. Its peer, Pony AI, is due to report results later on today. Let's bring in our Asia Transport reporter, Danny Lee. He's with us here right now. Your takeaways for the WeRide results?
So WeRide's results, having cut its losses by 66% year over year, it's making great strides towards that kind of profitable goal, and still on lower levels of revenue. So that kind of performance on the results has really gone into the momentum into the kind of stock performance today in Hong Kong, up 2% so far. And you've seen that play out in Pony AI as well. They're up 10% and they're going to report earnings. So you see that momentum that if WeRide is having, that is likely to feed into Pony AI's results, and both of them real strong competitors against one another, very cutthroat competition in the domestic space, the higher levels of orders on robotaxi fleets. So there is that momentum domestically, and as they both push internationally, they are looking to really gain that extra momentum, particularly as the Chinese tech firms look to seize the opportunity against some US counterparts who are not really making as much headway.
It seems like we're seeing a lot more of these robotaxi sort of projects in China more than the US in some ways. Who do you think is actually winning right now? Is the gap really narrowing now between US and China?
I think the gap is still at a kind of status quo level of state at the moment, but you do see some of those names, such as your Pony AIs and WeRide, as they have been received more funding to pursue bigger expansion and to pursue its ambitions. So you do see these names, and we'll increasingly hear more about them. Clearly, they're nowhere near the kind of margins or the revenue that AI can generate. but it's still exciting levels of tech that investors still hold longer term promise about.
And Denny, in terms of NEO, that's coming up as well. What are you expecting on the EV side of things?
So NEO has been building more momentum with its sales. Now we've seen in the last print for October 40,000 unit sales. So that should translate into much higher revenue and also into narrowing those losses, which is trying to turn that profitable goal. Probably won't happen this time, but maybe next year. However, I think it's going to be key what kind of print it will give for its fourth quarter revenue guide, perhaps, because we've seen the likes of Xpeng be punished by investors in recent weeks because it gave a much more underwhelming picture of its revenues. So given the competition, the backdrop of the price wars ending and the likes of, particularly as NEO has a range of brands it can sell at better price points, it should be doing better in selling. So therefore, can it meet the investors' expectations? So we'll see how it performs later.
Okay. Danny, thank you, Danny Lee there, our Asia transport reporter on the earnings that we're expected here from robo-taxis to the EV side of things in China. Let's get perspective now from Michael Dunn, CEO of Dunn Insights, a consulting and market intelligence firm with clients worldwide. Of course, we've been talking a little bit more about the robo-taxi space in China, Michael, and certainly there's been so much happening there. We talk about, the likes of WeRide able to narrow their losses there. What do you make of it? I mean, there's so many projects that are coming out in terms of from testing to commercialization that we're seeing domestically in China. And some of these names are actually going abroad as well. Who's ahead and who's not right now?
Absolutely. Up until very recently, the question was, is this feasible? Is it feasible to put a vehicle on the road with no driver, pick a passenger up and deliver them to their destination a few miles away? We're there. Here in the United States, Waymo, tens of thousands of trips a week. Robo-taxis rolling out in Austin. In China, you've got Baidu, WeRide, Pony. Now, Yvonne, the question is shifted. Who can make money doing this business? And that's where things get tougher. As much as things are improving for WeRide and for Pony AI right now, they're still losing a lot of money. And the question is, when they get together with ride-hailing companies, there's two parts of the equation that are solved. WeRide and Pony bring the brains. Ride-hailing company connects you with customers. But who's going to own and manage and maintain the fleets? That's very expensive, and that part of the equation has not been solved. As a result, as an investor, be very careful when investing with these autonomous vehicle technology. They have the technology. Can they turn a profit? That's the question.
Yeah, that is a question. Then who do you think is best positioned then to gain that profitability there?
Yes, it's if you listen to Elon Musk, he's very bullish on his own company. Why? Because they have the vehicles and they have the charging networks, they have the app, they have all the pieces of the equation in place. In contrast, WeRide and Pony, outstanding technology, but they're still looking for those other pieces of the puzzle to come together in order to make a profit. So from a betting perspective, Baidu has vehicles and it's ahead in terms of total data that is acquired by running on roads in China. Waymo's in a strong position. Robotaxi is the dark horse that might overwhelm everybody. I would say when it comes to Pony AI and WeRide, very high respect for their technology. I'm just not sure they're there commercially, that they figured that part out yet.
It's interesting, too. I mean, a lot of these companies are also expanding overseas, right? I think WeRide overnight talked about the Middle East expansion, Switzerland, where they just got approval as well. Who actually has the best sort of case to really expand beyond China, you think, Michael?
So what to watch, of course, is Europe right now. Both the Americans, Waymo, and Tesla have their eyes on going there, as do the Chinese. And at this point, I think the Chinese have been much more aggressive and risk-taking when it comes to going into the Middle East and going into Europe. They move faster. We know this across so many industries. It's the Americans that typically develop the technology. It's the Chinese who are quicker at commercializing and scaling. So as they go global, I feel as though the Chinese are in a better position. They're more comfortable operating overseas. They're quicker to adjust. They're more agile. That might be where they make their money not at home where it's crowded and super competitive.
Yeah, and what do you think investors should be focused on the most, and what's more attractive in terms of proposition? Do we focus on sort of the EV pure plays like the BYDs, Michael, or do I look at something like an XPeng that's looking more like Tesla these days, talking about robo-taxis, humanoid robots, and the like, almost creating a whole conglomerate where they can deploy AI? Is that more of the exciting part of the market now that you look at?
BYD ultimately is a battery manufacturer, one of the best in the world, low cost. They'll turn a profit. But if we look at upsides as an investor, this is where an XPeng or a NIO, Tesla become much more interesting. You're using AI to leverage your capabilities. The vehicles there is a transport unit, a urban device, but your money, your margin comes from all the AI applications. And this is where an XPeng or a NIO or a Xiaomi has Huawei have big advantages.
And how do you look at the competition domestically right now? I mean, Danny, our colleague, was just talking about maybe we could be seeing the end of price wars in China.
Yes.
Who's going to emerge as certainly the winner in all this right now? Obviously, given the fact that they've really kind of eaten up on their margins in the last few months.
They really have. If you look at China's auto industry, dozens and dozens of players in the EV space. Arguably, only two make money. That's BYD and Tesla. And nobody loves a price war, but given China's continued sort of sluggish market overall and overcapacity in both gasoline, electric, and EVs, I don't see an end to the price war. It's like everyone predicts that consolidation will happen right around the corner in China. This has been true for 20 years, and we still haven't had consolidation. I'd love to see the end of a price war. I think everyone would, but we're not there yet.
What could end this price war then?
I think the solution for Chinese automakers is the salvation, the oxygen is going global. They're not making money at home. All the profits are overseas. They sustain themselves for a lot longer simply by making the margins in new markets in Europe, Middle East, Africa, Southeast Asia. The Chinese are on track to export 8 million cars this year. That's up from 1 million just 5 years ago. It's unbelievable. Biggest exporter in the world.
Yeah.
Why are they exporting? Because they make profits overseas, not at home. So you could have a situation where China becomes just like no profit, maybe even make losses at home, massive machinery of a manufacturing center that supplies cars globally because they can make profits in those overseas markets.
Yeah, I mean, we've seen domestically car sales have fallen in October, especially when it came to deliveries of EVs. That's also slowed as well as we start to see some of these subsidies phase out. Michael, how are you looking at next year? Are we in for a deeper slowdown then as these sort of tax breaks fade?
The number one thing that Chinese automakers worry about is not having access to global markets. So I don't expect the Chinese market to grow. There's no real reason to think. It's been flat for the last 4 or 5 years. EVs have taken off, but the overall market's the same. If the Chinese automakers, for any reason, should get shut out of the European market or Southeast Asia or Africa, then they'd have to come back home and find themselves drowning in overcapacity. So look for them to push out globally and just try to hold the line inside China, making a little bit of profit, probably losing money. Just staying slightly above even will be a good result for most Chinese automakers next year.
Yeah, Michael, we talked about all things these EV makers are getting into, right? Whether it's robo-taxis, I mean, humanoid robots is certainly one thing as well. Why do you think the likes of Tesla and XPeng are really kind of delving into this space here right now? And really, what part of the supply chain do you think really benefits from this, this optimism around humanoid robots now?
Right. So it doesn't take too much imagination to think about EVs as commodities within the next 5 years. I mean, prices are coming down. Everybody's learning the industry. Barriers to entry are very low. Anybody can enter. And you've got a simple equation. You've got a battery to a motor to the wheels. So Elon looks ahead and says, ooh, that looks like a commodity type business. I don't want any part of that, and I won't win if I'm up against the Chinese there. Let me pivot strongly, put all my chips on autonomy, because that's where I can use AI to really do magical things with a car, taking drivers out of the labor costs. There's no labor costs. The drivers are gone. Make nice margins on that business. That's where things get exciting. Not only with cars, of course, but he'll say humanoid robots. And I was talking to the people at XPeng just last week. They're super excited about their own humanoid robot. Look for that to be the direction of car companies, the leading car companies in the future.
In terms of, you mentioned about the export side of things, right? That this is probably the way out for a lot of these automakers in China to still actually do okay. Do you see any sort of risk there for survive, right? Do you see any sort of risks on that scenario here? I mean, given the fact that you've seen the EU scrutinize a lot of the exports that are coming from China as well, what else could we foresee in terms of the risks around that front?
Protectionism is on the rise in Europe and even in Mexico. Mexico used to be 20%. They're going to go to 50% and look for the United States to put even more pressure on Mexico to keep Chinese imports out, as USMCA gets renegotiated. So the single greatest risk for Chinese automakers looking to export is if the United States, Europe, Japan, and Korea somehow got together and said, you know what, our markets are the most lucrative places to play in the world. You're not welcome here. That would put Chinese automakers in China, for that matter, into a tailspin. Like, my goodness, we need that like we need oxygen to make profits.
And for Tesla, too, I wonder, what do you make of their performance in China now? I mean, we're talking about, you said that Tesla's only the few that can make money in China, but we're starting to see a lot of troubles there. Sales are at a 3-year low. How big are the troubles for Tesla now in China?
They're surrounded from below by BYD, from equals like Xiaomi and Li Auto and XPeng. And wow, it's like 13 against 1. So, and the margins are being chipped away. And Tesla's original sort of secret superpower when it arrived in China in 2020 with the Model 3 was, hey, we do over-the-air updates, we have great software, we have charging networks nationwide. That's largely been equaled by several Chinese automakers. So then now Elon's saying, oh, just like in the United States, I have to pivot hard to FSD. And he's working super hard to get approvals from the Chinese government to allow robo-taxis in China. That's a big ask, and it's not certain where it's going to go, but that's Elon's direction. Like, if he just sits there selling his EVs against all this Chinese competition, it's going to be a very hard road for Tesla. I never know Elon to sit still. He's going to push hard on robo-taxis for China.
Michael, it's great to have you. Thanks for joining us. Michael Dunn there, CEO at Dunn Insights. We got plenty more ahead. This is Bloomberg. Well, Russia and Ukraine.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Have exchanged fire early Tuesday with heavy air raids on Kyiv and assaults on southern Russian areas. The fighting comes just hours after President Trump struck a positive tone on prospects for a ceasefire deal. Now, prior to the latest Russian assault, the deputy chief of President Volodymyr Zelensky's office told Bloomberg that he still expected negotiations on the peace plan to continue.
This is the process and diplomatic process. And first of all, before saying that some final outcomes have been reached, we need to see that the other party accepts all the positions that our delegation presented to them. We cannot just cherry pick or pluck some of the provisions and say this is okay for us and this is not okay for us. You have to look at it as a whole picture. A comprehensive approach would be applied. And I believe that negotiations will continue. This is not yet the end. And when the top negotiators finish their work, there will be some work done by the expert teams, because the main thing is in the details. And when you manage to deal with the details, then you can see the comprehensive picture. Of course, we are talking about the need of the ceasefire, first of all, to start a really reliable and good negotiations to follow from that. Without the ceasefire, it's a little bit useless to talk about peace, because when the barrage of missiles continue to fly over your heads and into the civilian objects, it's very difficult to continue this way. So it's first of all, the idea was to present the positions and then to touch base on them at a later stage. Maybe in this couple of days, the negotiations will continue, but more on a working level.
I'd like to get into some of the specifics that this plan laid out. There is the question, of course, and this is point number 5 from the original document, Ukraine will receive reliable security guarantees. That is the end of that sentence. What do reliable security guarantees look like for Ukraine? It's an easy and it's a simple idea. It's a very complicated thing to put into effect.
First of all, the main security guarantee for Ukraine for many years to come will be the air defense shield. And this is what we stem from. And the insurance that these systems, which are needed to protect our skies and meaning to protect the lives of our people, will be delivered in time. And it's also about the size of the Ukrainian army. So we cannot say that we will agree to downsize the Ukrainian army without any other hefty contribution from the guarantors of this security. This is what we need to look at very soberly, and to keep in mind that Ukrainian army is the only thing that can, the only force that can ensure the protection for Ukraine. So this is our two principal things that we need from the starting point.
And that was the deputy head of the Ukrainian president's office, Ihor Vasillo, speaking with Bloomberg's Oliver Crook. In terms of what we're seeing, we're reversing some of the earlier gains here in some of the Asia stock markets here today. We're still in positive territory, but the Kospi is just upside about 1/5 here this morning. Nikkei as well, some modest gains right now. That's it for us here on Inside Horizons. Middle East and Africa is next.